What's up, Tasty Nation? Welcome to the show. It is Tuesday, August 4th. My name is Mike Butler. I'm here with Jermal Chandler. Jermal, we are approaching football season so quickly.
Heck yeah.
I was watching the new quarterback season last night, and it's probably the best one ever made because it just features Baker Mayfield with a sprinkle of all these other people.
Yeah.
And Baker's just out of his mind.
Yeah, I know, right? I got to watch more of it. I think I watched maybe a couple of episodes. It was hilarious when he was meeting his wife, and it's like, she looks at him up, and like the first thing she sees is when he got arrested. And
He's a nice guy. He's such a nice guy. You see him running from the cops.
I know, right? It's hilarious. It's hilarious. What'd you guys do to this market yesterday, man? I'm out for a day. Holy cow.
Yeah.
Big move to the upside.
You're welcome.
Yeah.
Yeah, it was crazy. I think it's just a continuation of the rotation. Really, yesterday for me was rotation out of the risk in crude oil. Crude oil continues to slide today and into the Mag 7 stocks. Every single Mag 7 stock yesterday was up pre-market yesterday. And then just continue to rip higher. I mean, it's absolutely nuts that Meta has completely erased its losses in 3 days.
Yeah, we love it.
After being down 100 points. Just said, nope, reverse that. Flip it and reverse it.
Yep, flip it and reverse it.
Same with Microsoft. Like Microsoft, down a little bit today, but I mean, what a move. Literally up 100 points as well.
Hey, zoom out a little bit. Look what I just looked at. Look at that. Ooh, look at that. Look at that. It's just breaking. Look at that. What's about to break next? Yeah, you see it. Yeah. I mean, we waited on this one for so long, and it's finally happened. But yeah, that was the big thing that I noticed yesterday was the Mag 7s. It was definitely money being pushed into Mag 7s after those being down for so long. Massive move today. Here you got Caterpillar earnings. I'm sure we're going to talk about this throughout the morning. Yep. This was one where I thought about playing it yesterday for earnings to the upside with our classic calendar call setup. But I didn't think it was going to do it. It's trading like a lot of these other tech names, and tech names on earnings mostly have been down. So clearly that trend is reversing too.
Yeah. They did perform well, and it's so funny because it's like you think Caterpillar is just one of those companies where it's like they're just latching onto the AI name or the AI craze, we'll say, similar to Green Mountain Coffee Roasters when they said they're getting into blockchain many years ago. But yeah.
But see, that's the thing. Are they doing it? Or is the market treating it that way?
Yeah.
I feel like the market is just treating it that way. And again, I told you, when I drove by that data center, I saw nothing but yellow trucks.
Yeah.
That's the
narrative. It's like, we got to build these data centers. We got to make them big. Who's going to do it?
Yeah.
Caterpillar.
Caterpillar's like, I will. $20 billion in revenue, $8.17 adjusted EPS. $4.3 billion in operating profit. I mean, it just seemed like it crushed it in every single category. Green.
Yeah. Every single category.
Yeah, nice. I see what you did there.
Yeah.
We got a great show today. Let's pull up the cards and show what we got today. We got a lot going on as usual. Morning news with Mr. Chris Vecchio in a little bit here, 8 a.m. We have a guest, NASDAQ head of options. Head of Index Options Content, Kevin Davitt, will be joining us 8:20 Central Time. We got overnight moves with Liz Deerking. Then, of course, we got the opening bell at 8:30. Then we have Inside the Trade with Dr. Jim. We got 9:20 a.m. Central Time. Mr. Tim Knight with Trading Charts. We have Tasty Research with Julia at 9:30 Central Time. And then we have Morning Movers with Gus Downing to round out the early part of the show. After that, at 10 a.m. Central Time, we'll also have Chris and Liz. Then we have Trade of the Day ideas coming up from myself, Mike, and Errol, and Gus. So you don't want to miss it. Lots of content today.
Yeah. The people have been loving the trades of the day. I think it's a great hour of segments because it just gives you the deep dive into strategy and the ideation of it and why you choose one strategy over the other and why you choose one expiration over the other, maybe why some strikes are chosen over the other. So it's a real nice segment, especially if you're getting hung up on strike selection, expiration selection. It's a real nice hour of content and live trade ideas. So
yeah, if you watch it, tell your friends. We get people who ask us all the time about certain trades. We get emails from people about certain trades, what they're thinking about. Why do we do this? Why do we do that? So we're providing all of that within that hour. Please join. And I'm going to say that again. Please join and watch those.
Indeed. And also join us on the YouTube channel if you haven't already. We're streaming live on the Tasty Live YouTube channel. You can throw in your trade ideas, questions in that chat, and we'll get to them throughout the morning here. But yeah, another strong day in the markets. E-minis up 27, NASDAQ up 320. Dow and the Russell are also up. Bitcoin just chopping around at 64K, but a continued slide in crude oil here, down to 77.77.
Yeah.
3%. And really the story, as we've been saying so many times, the story is the flattening of the curve. We had a 4 or 5 point backwardation in this recent run up to the 90s. And now we are basically flat here between the 13 and 44 day. And this is the first time I've seen over the last couple of weeks, the April and May cycles have dropped below 70. So seeing a calming of the crude oil markets, at least for now. So I think really, if you are playing for maybe a reversal of this move, USO is something I've got my eye on, because USO is going to benefit from a re-backwardated market, as we talked about yesterday in depth with how it's made up with all of the futures products within that fund. But why don't we bring Chris Vecchio on? I hear him in my ear, and I know he's excited for Palantir. Palantir earnings up 100 points. Or not 100 points. That's Caterpillar.
That would be amazing.
Yeah.
Up.
Stock's up 50% today.
Yeah. It's crazy. Chris, how you doing?
Good. I mean, Palantir, really nice set of numbers there. But, another example of a company that is spending money on AI and is turning a profit on it. So the market likes that. I found it just delightful today reading Citadel's morning note. Just let's go back a week. They put out a note saying that the Fed's going to hike, and then they happen to pick up Leo Aschenbrenner's public book from Situational Awareness. And then today their morning note saying how now that the leverage has been cleared out of the market, the rally can resume. All right, let's do it.
Yeah.
Okay.
Yeah, right.
It is wild.
What a coincidence.
What a coincidence.
What a coincidence, for sure.
Feels good, though. I mean, there's a few things that are working. I mean, I'm getting saved by the bell by Caterpillar here this morning. A few weeks back, we were talking about, I run that morning scan every day, folks, for those that are listening in. I like to look for stocks that are below their 1 month average, but above their 50. So they're in uptrends, but perhaps facing a relative pullback. Caterpillar here came in. I was sitting in right when we were trading near 900, and I have been dealing with a drawdown in some short put spreads, which the market reaction here carrying us back over $900 is going to give me a clean opportunity to get out of Dodge without taking a loss at all. So that's, again, better to be lucky than good. So looking at that same type of map here today, a lot of the names that are performing well in this tape this morning, they are not necessarily the hyperscalers that have done really well in recent sessions. Microsoft's in a little bit, Amazon's in a little bit right now, but they've had such explosive runs. Mike, I was following your lead. You guys have been doing what you call the Super Bowl. I was raised calling it the Double Bowl. Either way, it's the same exact trade. Short put spread in Amazon, long call spread in Amazon. I took off the short put spread side because it was trading for 10 cents, and on a dollar-wide strike, there's no way I'm putting on a trade for 10 cents of credit, so no reason to ride that thing into the ground. The call spread side, strikes are at 285, 290, so while we're backing away a little bit here this morning, it was purchased when the stock was trading in the 240s. So this is something I'm going to hold on to for a few more sessions to see if we can get one final push to the upside.
Yeah, we were throwing on Super Bowls into the big sell-off before the earnings reports, but like Meta, it's so funny. Meta, I put on this Super Bowl in October, and I was like, let's just give it a lot of time and for it to reverse, and it happened in 3 days, and we're basically just outside of being in the money here. So great moves all around, but you said better to be lucky than good, but I would say it's still good that you put yourself in the earnings cycle to where you could use the earnings as a potential bailout, which is exactly what happened.
Yeah.
So
yeah,
good on you.
That's one of the reasons why I structure trades, right? It's either like it's going to be short term, a few days, or it's going to sit right on the other side of expiration with a little bit of breathing room. That way, if the market has turned against me, I have some time for it to bounce back here. And Caterpillar, to me, it made sense. If these hyperscalers are spending all this money, it's going into someone else's pockets. And so who's building the buildings? Right?
Those big yellow tractors.
Well, so like we were saying, who's building the buildings? And obviously this name, the chart looks like it does right now because basically it was along with the AI trade, right? But is this one rising today because they didn't have to answer questions about, free cash flow and spending? Is that generally here?
they're just making a lot more money right now. And so they don't have free cash flow problems, right? This is a company that, as long as the data center boom continues, it's probably well positioned. And it's a different set of circumstances, because I remember, Jermal, when we would focus on things like Alcoa and Caterpillar as global bellwethers for the economy, right? If people are buying more aluminum, if they're buying more construction equipment, look at Caterpillar's equipment sales in China. Oh, those are going up. The economy is saved. I mean, this was a real thing in the global financial crisis, 2010, 11, 12. You would look to these companies' earnings for like little green shoots of hope in some form or fashion. So the fact that Caterpillar has been able to do this without China, without the emerging market gusto, and forget what the tickers are saying. EEM is basically a semiconductor ETF at this point. But when you look at the emerging market growth trajectory, you would think that a company like Caterpillar hasn't had it. So one of the things that intrigues me is that it's been able to sustain a higher run in recent months, despite not having its usual catalyst in the background. And so, while the global economy isn't in great shape right now, Caterpillar is seemingly insulated in the short run. So when the music stops, it could fall hard. Hopefully the data center boom does not stop during this period of higher rates and global economic instability.
This one was, man, I'm annoyed. I thought about playing it, but I just was like thinking, well, if they're playing it, if they're treating it like an AI stock, then most of them have gone down on earnings. So there's no way this is going to go up. Man. And look at the expected move. It was up to 935, 940. Could have played upside. Right. I think I'm going to find a way to get in this thing and ride it to 1,000.
The water's warm. Come on in.
Yeah, I'm going to find a way to ride it to 1,000. We'll see.
How about Palantir?
Palantir, I actually didn't have anything going on, because I was looking at the vol selling opportunities in it, and I was going to do something with yesterday morning. I put on the short iron condor, and I got to with Liz. It's like, wait a second. This is an AI adjacent name. There's no shot that it stays within the expected move, because they haven't been this cycle. So I took it off. I didn't want to have anything going. The trade was never filled, so no problem there. And ultimately, look where it's trading right now. So just that little bit of an instinct that I've been riding here, which has been just watch the earnings. If it's breaking out of the expected range, it's probably not. And it's probably an AI stock. If it's staying within the range, it's probably not an AI related stock. And that's been a decent guidepost here. So to that point, Gus turned me on. See what I did there? On Sunday night on semiconductor. There's 3 days left to expiration right now. I put on the double bull going into their earnings, the 70-72 put spread, the 90-92 call spread. Immediately at the open, the 70-72 put spread has to be taken off, because it's not going to be trading for anything at this point in time. The 90-92 is still a little bit away, $6 away. Actually, pre-market now about $5 away from the long strike. Whether or not that hits, it gets anywhere, I think I'm just going to hold on to it, though. But the short put spread side's got to go. Don't need that kind of gamma risk in case the market decides to take a turn against me.
You could try and stick with this double bull nomenclature that you're trying to do, but it's just not going to work. People are asking about Super Bowls left and right, bro. You might as well get on this train.
It's catchy. I know. You guys are hijacking Americana. I get it.
I will say I've had some people be like, "You're already planning for your Super Bowl party?" I'm like,
yeah.
No.
That's the funny part too. Like, people think you're saying Super Bowl. Super Bowl.
Oh my God.
I know.
You set your Super Bowls with an expiration the Friday before the Super Bowl.
Yeah. People's heads are
oh my gosh.
on this.
So good.
But no, nevertheless, this is another one. On semiconductor making a move to the upside. So, some of it clearly is. I don't know if it's earnings related or if it's just this is the market we're in versus 2 weeks ago, right? Like this is where we are right now.
Yeah. Something that was brought to our attention, and Chris, I know you've seen this too. The Palantir message for retail traders. This is a new thing that I've seen from executives, but kind of fun still. What do you think?
You got a message for us?
Should we show the people?
Should we show the people? Let's show the people.
Do it.
Your support was crucial to getting us this far, and crucial to getting us to where we're going to go, which is a much, 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 much larger company. This is one of the most exciting times to be involved in the Palantir mission. We are going to help transform, especially this country, but allied countries, both in commercial and government. And this sovereign frame that we're using as our organizational principle is one that is inclusive of everybody who wants to have a better world today and tomorrow. And we invite everyone to engage with it in some form. And thank you.
Mike, Palantir, the numbers were fantastic. So it's obviously giving retail traders a reason to come here. But their adjusted free cash flow last quarter was $1.22 billion with a 63% margin. I mean, I'm just looking through everything here. U.S. commercial revenue was up 149%. U.S. government revenue was up 90%. He keeps talking about sovereign AI, right? Companies are and governments are nervous about giving proprietary data to model providers right now. Palantir has a little bit of a different angle for how they're approaching this. They're about selling control, auditability, security, operational deployment, and so it's a different type of AI bet right now, and very much. I mean, I consider Palantir to be like an Elon Musk adjacent company because it all stems from the same tree of the PayPal mafia, the Peter Thiels of the world, as it were. The folks that invest in those companies, as we've learned over the past decade plus, there's a little bit more of a dogmatic belief. I don't want to say religious or cult-like, certainly not that far, but there's a dogmatic belief in the mission. And so, you get numbers like this, it becomes a massive positive feedback loop where it reinforces biases. So the numbers are fantastic. The valuation, of course, is still crazy, but that's an investor's problem, not a trader's problem.
Yeah, I mean, it's interesting. I think when you think of when you think of people that get to certain levels, we were just talking about the new season of Quarterback featuring Baker Mayfield, but like CEOs. You start a company, there's always going to be doubters. There's always going to be haters. Like literally, there will always be people saying, no, you can't do this. You can't do this. So to your point, you have to be you have to have blinders on and be like, no, this is what's going to happen and I'm going to make it happen. And can't let anything deter you from that. And that's kind of the scenario that you see in a lot of these companies where 3 years ago, some of these people would have been like, what are you talking about? AI, data centers, chip stock, like what, Maybe some people saw it coming. I'm sure. I mean, obviously, the future was already written. If you've ever seen Silicon Valley, one of the best shows ever made. But
it is. I've been thinking about rewatching that. It is. I keep seeing clips of it in my feed. It is so funny.
It's so good.
It holds up so well.
Yeah, it's amazing. But to your point, like you have to have that belief and you have to have that blind confidence until you see it through. So,
but Jermal, I mean, if you notice this quarter so far, I'm thinking of ServiceNow. I'm thinking of Microsoft. I'm thinking of Palantir, right? AI software with visible revenue is being rewarded here at the margin because those companies, they're not doing the significant CapEx and they're not letting their money on fire like an Oracle is, for example. So just sorting through this right now, we're getting a clearer picture of who the winners and losers are. And it is worth noting one of the themes that we've been harping on, Jermal, we've been saying this on Futures Power Hour and its previous iteration, going back to last winter, but there are picks and shovels versus applications in the AI economy. NVIDIA was a pick and shovel seller. Micron, SanDisk, these are all picks and shovel sellers, right? You need their hardware in order to build your revolution. When do the gold miners actually come around, as opposed to more people who are selling picks and shovels, right? Because it kind of feels like that recently. But now you finally see it. There are miners coming out of the AI mines with actual profits in hand. And that re-incentivizes, it reaffirms that, maybe this money that's being spent and being thrown around isn't all for naught. It isn't just business to business, robbing Peter to pay Paul, one pocket to the other. So that's the key takeaway for me here, at least. Now's done well, Microsoft's done well, Palantir's done well. AI software with clear revenue outcomes is being heavily rewarded in this market. And a market, by the way, did you guys see the earnings numbers here for this quarter? The earnings numbers here for this quarter are outrageous. 47.4% year-over-year earnings growth right now for Q2. 47.4% year-over-year. And yes, Alphabet and Amazon have a big chunk of that because of the Anthropic valuation markups. But taking them out, it's still near 29% for the quarter. 29% earnings growth, guys, in any quarter. People would be pulling their hair out. That'd be so good. 10, 11, 12%. That's usually what we're looking on a really good quarter. So, as Citadel said, the leverage is cleared out of the system. They had nothing to do with that, of course.
Right.
The rally can resume.
Yeah. I mean, it is fascinating. Every day we've been in here for the past month and change and looking at the rotation in and out of semis, in and out of software, and even within software. Now you're starting to see who the winners and who the losers are. As you mentioned, those three now, and Microsoft and Palantir as of today, and then there are others, right? Like there are ones that haven't done as well. CRM is another one that really hasn't done as well.
Right.
and it's almost becoming the poster child for the ones. Well, sorry, I shouldn't say that. Oracle really is the one that really struggled as well. That's probably the poster child for the software name struggling. But even a good big tide can lift all boats, and you're seeing right here with that big green bar from yesterday that happened there. But it's within the software space. We're seeing the big winners now, and you can put Palantir on that list as well.
It's a very nice move. The question is what happens next, because we still have a ton more earnings reports coming out after hours. And I mean, quite frankly, yesterday was basically Palantir and Vertex, I guess, as the big ones. But SpaceX, AMD, Amgen, Gilead, Bookings, pick your name out of the hat. There's a lot of different things to work with. Of course, we had tons here
Uber
before
should
the
be
bell.
interesting, right? That's been getting lumped in with the software name, so we'll see what happens there.
Yeah, it has been. One thing that stands out for me for Uber is that we've had record number of commercial flights in the United States and globally in recent weeks. I'm pretty sure people take Ubers to and from airports.
Yeah.
And yes, that's a really stupid line of analysis here. But in the past quarter, if we've had significant more, pedestrian traffic, commercial traffic, then odds are, particularly if it's implementing some of these AI solutions, maybe you can get a little bump in revenue, but tighten up those margins. Uber is not something I play. I personally absolutely despise Uber, as some people have heard on the air over years. I had a failed taxi startup that I invested in years ago.
Oh my God, it's personal.
It's personal. Yeah, same thing with like Governor Cuomo. He shot a grant away from me. But no, we had a great idea. It was if we aggregated all of the rides into one platform, and we did the testing for it. Like we could get drivers more money, we could save customers money with a price matching Dutch auction system. And then right when we started launching, it was January 2020, and people stopped taking taxis during COVID. So that went down.
They still pay those crazy medallion fees?
The medallion fees have really come in. The problem with the labor market for taxi drivers in New York City is that it basically functions as a monopsony, which is a monopoly within the labor market. And so for years, these taxi medallion sellers were told, like, split $500,000 with someone. You guys can spend the next 20 years driving it off and renting out your shifts, and it's guaranteed money. And now those medallions are going for like $75K. So you have all these taxi drivers who are deep in debt, trying to pay off loans. It's like if you took out a loan for a $500,000 house and the housing market crashed, it's now only worth $75K. You're still paying a mortgage on a $500,000 home, right? So it's a whole point of stress. I could go into this for hours.
I know.
Uber's
No,
an
it's a
monopsony.
fascinating.
It's bad.
It's a fascinating topic, but yeah, I'm in Uber. I think you are too. I have I'm short in January. I'm short I'm short the 65 put versus being long the 90 call, and then I'm short the 70 put versus being long the 100 call. So that's my play on there. We'll see what happens. Maybe I'll get smoked on this on earnings. Who knows? But it's in January. Not tripping.
Have you rage watched that movie with Joseph Gordon-Levitt?
No, not yet. Not yet. I just what have we watched recently? Obsession, which was
Did we.
And
I
Backrooms.
feel like everybody's watched it in the last 3 days or so. A couple of friends told me we watched it. Yeah, that movie is something else. Wow.
Yeah.
Something else.
I often watch these things with my wife. My wife really likes this stuff, and it's like I much prefer. Can we go back to like the comedy before the global financial crisis? When can we go back to like Step Brothers and Pineapple Express and Superbad? And I'm going to use this
your
public
love for those
platform.
type of movies a lot.
The global financial crisis killed comedies. They just absolutely killed comedies. What were the first shows that came out of the global financial crisis? Because we also had a writer's strike back then. The Apprentice and Keeping Up with the Kardashians. Okay. The global financial crisis gave us reality TV as we know it, and the decline of comedies in movie
the
theaters.
Kardashians was out before that, wasn't it? Like 05 or something like that. 06.
Oh, sorry, not Kardashians. Jersey Shore. My mistake. Jersey Shore was the one that came out right after the financial crisis.
Again, you're saying
That was a strong offering, though. I used to watch that every Thursday night before going out.
Did you?
Do you know what it was? Do you know what it was like going? So where I went to college was like 2 hours from the Jersey Shore. Like we used to have pledges drive us out to Atlantic City, right? And that's a different story. But the culture that created in the Philadelphia / New Jersey area in the late 2000s and early 2010s was absolutely horrific, and the state of New Jersey has yet to recover from it.
Yeah, I'm sure. I'm so sure.
We do have SpaceX and AMD earnings after the close. I feel like AMD, we're not talking about nearly as much with a 50-point implied move on a $500 stock, up 15 points today. But SpaceX, I don't know if we're going to get anything out of SpaceX. What do you guys think?
I don't know how you play this anything other than long right now. I know that there's been a lot of downside here. I realize the float that's coming out, all these shares are going to be unlocked. It's nearly 26% of the outstanding float right now is shorted. So if there's just any bit of good news here, you could absolutely see a rip-roaring short covering rally that resets SpaceX's price level. I'm not saying it's going to go back to all-time highs. I'm not thinking it's going anywhere near that. But, this thing is loaded like a spring. Jermal, you're the scientist among us. I'm the failed physicist. But we are storing all this potential energy, right? When you get all this short interest building, it's like storing all this potential energy. And you just need a spark to get that kinetic energy released right now to the upside. So whether or not this happens today, I don't know. But if I'm playing SpaceX, I'm not doing anything directionally neutral. I did that in Tesla, and so Tesla just burned me pretty bad. I ended up getting assigned one of the puts. I ended up having to wheel it out for a few days. It bounced back. I was able to cover it at complete, break even. But I don't want to deal with that crap again. So if I'm doing anything here, it's simply just going to be like a long out of the money call. See if we can get some in a print. But I have no edge or inclination other than the fact that this is a huge short interest right now. And we have a huge catalyst today. So you feeling lucky, Punk?
Similar to Microsoft on earnings, right? Big move. From being down for so long, you got to wonder if this is the same deal. And again, we keep talking about those shares being unlocked. I mean, isn't, it's not specifically their job, but it seems like to me, their job today is to create the spark that leads to that big move from that coiled spring, like you said, Chris.
Yeah. So once we get through today, then earnings are going to balance out a little bit better for the rest of the week. But there are lots of opportunities here on the board right now. As far as I'm concerned, just some hedge trimming here. Take-Two Interactive was a position that we put on a few days back. I would say maybe middle of July. It's had a decent bounce here. We were looking at the let me just pull this up on my platform here. The 220, 225 short put spread. So with that bounce, it's now trading closer to 245. I think that's probably worth taking off at 24 days to expiration. What else here? TSM, that 390, 400 short put spread. That got a little bit of a saving grace recently. It's at 17 DTE. Gotta go. WDC, 500, 510 put spread. We did get the bounce a little bit more. Be able to cover that. That's got to go. So a lot of the stuff for me, when I see a market that bounces back like this, near that 20, we'll call it between 15 and 25 a day expiration window. If this trade has been working against me for weeks, and now I'm back to break even or at a small profit, and I'm close to or just on the other side of the expiration window, I get out. There's absolutely no reason to hold on to it, hang on to it. I can roll it out. I can get more time. My view still may be valid. I may have mistimed it or executed it wrongly. But if I'm still confident in my position, I'm not going to need this particular position at these expiries to do the lifting for me. So today is a day of, we're going to be rolling around here today on this Tuesday.
Yeah, couldn't agree more. Well, Chris, appreciate your time. And we'll see what happens with these earnings after the close today. Plenty more to come. And much more sector diversity this week for earnings announcements. But we'll see you a little bit later.
Gentlemen.
Adios.
Later.
E-minis up 23, NASDAQ up 300, Dow and the Russell up as well. And speaking of getting in and out of trades, we've got Kevin Davitt coming on from the NASDAQ in just a little bit here. And I kid you not, every time he comes on the show, I put on a downside butterfly and it ends up being a winner. So cannot wait to have him on. And we'll probably throw one on. I mean, this is also a perfect time to throw one on for a downside hedge. Yeah. Because this market has just been absolutely insane, just a rip to the upside. So, we will see if we can get one on here, maybe 200-300 points wide. But we're going to take a quick 90-second break. We'll be back on the other side of it. You're watching Tasty Live.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than, cool? Trade like a trader. Tasty Trade. Make your move.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
What's up, everyone? Welcome back to the show. Not much has changed in the markets. E-minis up 25-ish, NASDAQ up 300-ish, and it's been a rip-roaring rally here.
Oh, yeah.
Join us on the YouTube chat if you haven't already. We can scan through some trade ideas, questions. Maybe this is a time for a little SPX, Global Trading Hours situation
Maybe
here.
Maybe so.
Vecchio was saying that we are very close to hitting all-time highs if we haven't already in SPX. We're right there. I mean, the high that we reached in June was 76.20.
That's where we are right now.
We're 10 points away. Yeah, we're going to hit it today. Which
You know
is
what's
crazy.
interesting is when you look at the at the money here, seeing the at the money, and again, just looking at expected move, right? Like it looks like about 24 points. I feel like most mornings we've come in, that expected move has been about 34. So it does seem like you can just see the change in volatility. Speaking of, by the way, I did buy a VXM contract yesterday just for fun. Just for fun.
Yeah,
But
why not?
I don't know if that's gonna lead to anything, but it looks like volatility has really calmed down here.
Oh, yeah.
When we look across the landscape, and you can just see it in those SPX options based on that.
Yeah, VIX is in the 15 handle, which tells you everything you need to know. I mean, one of the most interesting things that we learned about volatility early on was the clustering of volatility. So, and that really speaks to how markets behave. So you get these big spikes in volatility, which coincides with market selling. But when you get the VIX at these low levels, 15, 14, even 13, that's when they can really just drag on for a long period of time. And what's the correlation with that? A market that's drifting up and to the right. So I think all these things are kind of falling into place. I think now more than ever, we would really need a big catalyst for this market to reverse, especially when you look at the crude oil markets. I think the crude oil markets being elevated and backwardated and in the 90s gave us pause and like, okay, this thing can still flop around and chop around. We had all these earnings coming out and there was uncertainty around that. But the Mag 7 was always the laggard of the rest of the market. When we looked at the equal weight S&P and we weighted against the Mag 7s, that the equal weight S&P was near highs and the Mag 7s were like in the middle of the range. So if the Mag 7s are going to catch up and reach highs, like we're going to be in blast off mode here, which we already are. But we'll see.
Yeah, that seems to be kind of almost, I don't know if it's the hallmark of the whole entire year, but I'm trying to remember how long this trend has been going here. Where we've seen just, I guess it has been most of the year, this big big move to the downside in software names and the big move in chip names. And then now, and it was also kind of a rotation out of Mag 7, depending on the day sometimes too. And now you're just seeing money move around so much through all these different areas of the market. And then of course, oil every now and again too. By the way, I'm working, or I'm winning on one of the former trade of the day right now. It's actually a 2-part trade of the day where I did a put spread in CL. I was long, I'm still long actually, the 78-76 put spread in the August expiration, and then a ratio spread to the downside in MCL, long the 80.5 put and short 3 of the 75.5 puts. So on that, losing slightly, down $91, but on the put spread itself in CL, up $600 for the time being. So this is around the area where, it's funny. It was just trading in this area like a week ago, and then we bounced back. So the question is, do I take this off? And it might be time to just take this off. And clearly, you can redeploy these oil trades at any given time because this is just really not going away. But I will say, when you mention a catalyst, 6J, I don't know if we've talked enough about this yen situation and this move and just kind of, somewhat craziness, if you will, because, it's not out of the ordinary to hear about the Japanese government propping up the yen, but to hear the U.S. government stepping in to do it too, kind of interesting. And why do you float that piece of paper saying buy whatever it was, $5 to $10 billion in yen? That doesn't come out of the White House on accident, right? Like you don't accidentally put out something like that from the White House. So that was clearly like deliberate.
Yeah. Just leave this on the printer, right?
Yeah, you know what I mean? Like, we happen to get a picture over the president's shoulder. Like, yeah, right. Come on now. Come on. So what's really going on there? I don't know if that's a new catalyst. I do find that interesting. I did do a little YOLO in 6J. I bought the October 9 0067 call. I'm surprised. Actually, we should have got Chris's thoughts on this too. And I'm sure Chris will talk more about this later on in the day, but or if he hasn't already, I'm sure he's been talking about it like crazy. But just, it's interesting to me to see if this thing is going to keep getting propped up somehow. We'll see if we get a crazy move. It's also interesting that if I told you that we saw this move in the yen, if I told you this 2 months ago, you were like, oh my God, the market's going to be absolutely nuts. It's going to be very bad. It's going to be all over the place. And we saw quite the opposite compared to 2 years ago when we saw this yen unwind.
Yeah. In this trade, the platform always translates the ticks in real dollar terms here. So this is $300 for 66 days. Nice and low risk here relative to the potential reward. Getting at the money move, you can triple your money here or more, most likely. So it's been a wild move. And I think there's something more to that other than just the mistakenly leaving the notes on the
right.
paper. But I think right now we've got plenty of potential here. Oh, there you go.
The to-do list. Let's make sure we buy JPY. About 5 to 10 billion.
Yeah.
Give or take a bill.
Amazing.
Come on.
Incredible. But the market likes the situation at hand, and it is wild that we are not seeing the downside reaction that we were before. And this is also a surprise. I mean, it wasn't something that was planned. So crazy across the board. But if you look at MAGs, which is the MAG 7 ETF, you can clearly see this is basically the reversal of the market that we've seen and how we got to this point. I mean, the MAG 7s, again, were lagging 3 days ago, and then they all just ripped higher. Even the ones that fell, like Meta, when we had that day where Meta and Microsoft were moving in complete opposite directions, Meta, the fact that it erased that earnings move is just insane.
Isn't it, though?
It's crazy.
Mr. Frank Walsh, our man in the chat, is saying that Japan owns a whole lot of U.S. bonds. They might be the largest holder of U.S. bonds, and that might have been the trade-off, right? They might have wanted them to come in and buy some bonds, and we'll buy some yen. And that's, friends doing friends a solid, I guess.
Yeah.
I know once upon a time, China was the largest holder of U.S. bonds. Clearly that has changed. And that used to be one of those interesting things, right? That's what we saw a couple of years ago during the beginning of kind of U.S., not beginning, but the igniting of U.S. and China kind of frosty relations sometimes. We saw some big selling of bonds a couple of years ago during some U.S.-China war reignited. And that's kind of the, wars aren't always fought on the battlefield. Sometimes they're fought in financial markets. And I feel like we've seen that quite a bit at different times throughout trading.
For sure. I think it's time for a little one-day Super Bowl. Just play for a continuation of this market. You do have some interesting catalysts after the close today. You've got
we have jobs report too, don't we?
Yeah, there's jobs. There's unemployment this week. But yeah, a 27 point implied move for the rest of the day is really low. And I think we're almost in the single digits in SPX implied volatility. So for me, that's a no-go for iron condors. I think it's just too narrow of a range. Like if I'm going to do an iron condor, and the iron condors haven't worked out for me recently, which is hilarious.
No.
Just the Super Bowls and Super Bears. So I think going to the 1 day is interesting and just keeping it small. You could do the implied open here is going to be like 76.25. So you could bring this up to, 7,600, 75.95, pick up $1.20 and just play for a continued outside move. Yesterday, we saw the market open up 40 points. We ended up 115 points. If you think that's going to continue here, you can throw something on. You'd have to go further out of the money, but at the same time, this is a 1 day cycle. We could see a lot of things happen over the next couple of days. So
certainly could.
I think collecting 50 cents is usually where I like to live here. 76. This is a 5-point wide put spread, 25 points out of the money to finance this further out of the money call spread, about 70 points higher than the implied open here for 50 cent credit. Switch it to global hours. You can see they've updated the hours in the actual trade session here, but if we can get filled here, 45, 50 cents, I think I'll be happy with that.
There you go.
Leave it at 45.
Yeah, I mean, that's the nice thing about these, being able to trade these at this time period, given a lot of times we do see moves in the morning that either reverse or it's just the beginning of a move before we go higher. But that we've been seeing a lot of that recently. If you did this yesterday, it was worked like gangbusters.
100%. And yesterday was interesting because I was saying, I have a hard time putting it on when the market's up 50 because I feel like it's harder for the market to go up from 50 to 150 versus being up 50 to down 100 points or down 50 points. So we were talking about like putting in shorts in the NASDAQ, but yesterday was insane. But we were filled 45 cent credit here right in the middle. And this is for tomorrow's expiration. So $450 of risk, $1,000 max profit. We love these asymmetry trades in SPX. They've worked out really well for us. It's a good way to get some speed in the market with more narrow range in terms of the risk there. But we're going to take a quick 90-second break. We'll be back on the other side of it. You're watching Tasty Live.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade. Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With Stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than trade like a trader? Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. We got filled on that SPX one-day global trading hours Super Bowl. Lots of buzzwords there.
Yeah, right. I did one as well.
Yeah,
I did one as well.
We got Liz on the line. Liz, how you doing this morning?
I'm doing great. You guys did you both go in the one day for the SPX?
The one
Yes.
day, yep.
Because I was going to say I was watching you guys because I'm always watching. But I did one earlier today in the 0 day. So I did it at about 6:30. I mean, we haven't moved. We've been up to 26 the whole time. But I did it about 6:30 this morning. You can't get as far. And when I was looking at your strikes, I was like, how did they? And then I figured it was the one day.
Yeah.
So you get a lot wider in the one day than you do the 0 day.
Yeah, for sure. And I think the 0 day can certainly work too. I like the one day because, to your point, you can get wider. So I have a 5-point wide put spread to finance a 10-point wide call spread. That's further out of the money. But we've also seen situations where the market sells off. Like if the market's down 50 points today and then tomorrow it's up 50 points, like this is a winner where it would be a max loser. So I like the one day just because of the fact that we've seen time and time again that this market likes to be bought when it does sell off. And I think that it correlates well with the one day expiration versus 0. But
I do like it. And when you do the 0 day, you almost flip your risk, right? So I think I have a wider put spread and a narrower call spread. Where that's why when I was looking at yours, I do like this setup, especially Mike and Jermal. If you're not planning on taking full profit on this, right? If you're just looking for a little bump and going to take it off, not for your full profit, you could definitely do that in the one day.
Yep, for sure.
100%.
Yeah, I've had a bunch on recently. I mean, we all have, I think, and just remembering like into the big down move last week, I put some on for this past Monday. I ended up closing one of those out on last Friday. I closed another one out on Sunday. Again, global trading hours, which is nice. And then I just put on some super bears. Like I put on a super bear for today. I put it on yesterday. I think yesterday morning into the move. Obviously, we moved way through those, and so they're basically in the money, which is fine. Again, because I'm mostly long delta in the book. And in this case, I'm playing a super bull now. I just put one on for tomorrow, kind of like Mike, a little bit different strikes. I sold the 7,600, 7,590 put spread to buy the 7,685, 7,700 call spread, so way further up. Because like Mike said, what if we just have a continuation into this move that we've seen recently?
For sure. Hey, what do you guys think about those Palantir earnings?
Love it.
Love it.
Love it.
I know. It's
Been long this thing for a while, man.
Yeah, this was actually my trade of the day yesterday. So I went over the risk profile and everything. But yeah, they crushed earnings, and I went with a 125, 140 call diagonal spread. So this is going to be a smash home run with the weekly cycle short option. And really what I was saying is there's just so much premium here. You can do whatever you want. But I like the diagonalization or the horizontal nature of any type of trade, like whether it's a calendar spread or a diagonal spread, because there was only like a 20-point implied move in September, and there was a 14-point implied move in the weekly, which tells you you can reduce your cost basis so dramatically if you just have any short option in the 3-day. So I just went with a diagonal spread, long September, short the weekly, and I was able to get into a 15-point wide diagonal spread for $9. So I think this will probably be a $600 winner on the open, if I were to guess.
That's really good. Jermal, I was telling them yesterday, I've been long Palantir for a long time. So I waited and I did a covered strangle. So I was very happy with the premium on both sides, the calls and the puts. So you get the upward move and you get the premium from both of those. So that was a good trade. What are we doing in AMD today, boys? I'm locked and loaded in SpaceX. I'm sitting on my SpaceX position. I've been acquiring puts. I'm not going to add anything to it. But what are you guys doing in AMD?
I don't know yet.
I mean, I feel like feel like this has to be just an upside play. This is like one of those markets where I feel like you just put on blinders, you place a bullish trade. The market is so strong, volatility is so low. It's already up 15 points pre-market. Can you guys talk me out of this trade? Talk me out of this trade, 'cause it's very expensive that I want to do. Okay. If you open up the one day, I want to buy the widest call spread I can. I want to buy the 485 and go all the way to the expected move and sell one, because there's so much premium at that there. Yeah, there you go. Yeah. So I'm paying $14 for it, and then I'm going to the 45 days and I'm selling 2 puts to cover it. I'm not going to talk you out of this because I love it.
So I only need $7. I need $7 on a put. So go all the way down. Keep going. Keep going. Keep going. I need $7 on a put. We're right there. 2 of them.
Love it.
It's a little expensive, but I'm okay with, what are you at? Like 360 is going to be my break even on the put side?
Yeah. I love this trade. And this is the beauty of trading, using options to just generate a better risk profile or a nice situation where, like, in your mind, you can rationalize this as like a no lose scenario. You either get shares at 360, which is 120 points out of the money from where we are now. Actually, 140 points out of the money from where we're going to open. And if not, you can make $5,000 on this upside move, which is within the implied move.
Dude, I do like this trade, actually.
I love this trade.
So you guys aren't going to try to talk me out of it?
No.
Anyone?
No. I think you should you should triple down on this thing.
I would have maybe talked you out of it like a couple of weeks ago. Oil below 77. Let's go, baby. I would have tried to talk you out of maybe a couple of weeks ago, but in this past week, I mean, markets are moving higher, and so are these names. So I think it's a good environment for it.
Yeah, and using the 1 day, really, it's a great way to get all the value you can out of that call spread, because if you bought this in the 45-day or the 20-day, if there's an up move, you'll still make money, but you're not going to make nearly as much because these 1 day options are going to lose all their extrinsic value tomorrow, which means you'll be able to extract the full intrinsic value out of this call spread if AMD is above 530.
That's the plan, Mike. That's the plan.
I like this a lot. But yeah.
Now, the other way to make it, it's an expensive trade. I was thinking you could make a wide put spread, but you have to double down. Like, you can define your risk, but you have to do multiples or pull it up.
Yeah.
So, I could sell 1 put too at the 400 level, but I like 2 puts at the 360 level.
Yeah. Yeah. Especially if you're okay with the shares. Are you turning it into just rolling the puts perpetually? Like, there's so much premium here. You can reduce basis.
If it goes down, I would probably turn it into some type of straddle, strangle. I'd add some calls if it goes down.
Yeah.
Or call spreads or something.
Your Palantir covered strangle, do you have any intention of rolling that position out, or are you going to just get rid of it?
No, so I have shares. I am long Palantir. These are one of these where I have them. Sometimes I have a collar around it. Sometimes I do double ratio spreads around it. But this is something I think I told you this the other day, because of my son's friend, I'll always have it in my account.
Yeah.
And so I removed all my options around it on the eve of earnings, so I could kind of look at it with an earnings perspective in mind. So this, I'll probably, take I think I have the 42 call or 45 call or something. I might roll that out in time, but I'll probably do a ratio spread because I like the kickers. I do like, if I'm gonna cap my upside, I do like to put a ratio spread in there. Hopefully it'll go up. And then I use ratio spreads to the downside to protect it as well. So for very little credit, right?
Yeah.
As long as I'm collecting a credit, I don't want to pay for the ratio spreads.
Yeah, the ratio spreads are nice kickers. It's similar to having a, why is this not pulling through? Oh, I guess this is. If you had 100 shares, this would be flat up here. But it's a nice way to give yourself a small credit, but really you're adding 100 deltas between 145 and 152.5 in this example here. So yeah, I like it. You should send that friend a $100 Amazon gift card with your new wealth.
Right.
I saw that. He's now a sophomore in college, and I saw his dad the other day, and I was telling him about how I still have Palantir because his name's Paul, and he's like, "You owe him a lot more than." I was like, I'll buy him dinner next time I go to Miami." He's like, "You owe him a lot."
I mean, this name was hated. Like, it wasn't interesting at all, and it barely, again, I think it I paid around $20 or $17 or something like that. Like, it was not really that interesting, and how things have changed.
No, but when a 7th grade kid tells you that he likes a stock that I'd never heard of at the time, I was like, all right, I'm in.
Yeah.
I was like, I don't know why you like it, but I'm in.
I'll never forget, there was someone that called in years ago, and he was like, you know what my strategy is? I just asked my son what he's looking at and what they're doing in school. And he's like, Abercrombie and Fitch, smash that buy button. And that was when Abercrombie had that huge rally. But there is something to that.
There is, but at the same time, it's you got to be careful about the habits of kids. I always say this. I mean, look at Snapchat. That's the other end of the spectrum.
Yeah.
Yeah, that is the other. I mean, I'm caught up in that rabbit hole too. Thanks, Jermal.
I didn't do it.
Hey, so am I. I'm proud owner of 100 shares.
Oh God, this is Mike. I am not proud of some of my trading. This is one of them. So Snapchat, like Jermal was saying, I speak to the kids and they're all using Snapchat. So I was long shares, then I sell puts instead of calls against it, and then I got more. And then I'm like, you know what? I'm going to sell some more puts. Then I got some more. Then I'm going to sell some more puts. Then I got some more, and then finally I just tapped out. So I'm at my position limit.
Hey,
limit.
Maybe one day they get acquired and you have a nice P&L green day.
Yeah, if they get acquired, it'd be great. I'll
Well,
get a
what's
phone
their
call.
IP? Like, what's the thing that they do that nobody else does?
It's data.
Get children addicted.
Yeah,
That's
and all the biometric.
It's funny you say
in the world.
data. That's the one thing my son says. He's always like again, my son's 22 and Snapchat was kind of big when he was like a teenager. So whatever, almost 10 years ago. And he's like, the only thing I tune in there now for is like memories.
Yeah.
That's where kids his age go for memories, Snapchat.
It's all there because for each day they were sending weird pictures of each other to everyone they knew.
Yeah, they have more biometric data than the government.
That was the thing. For a while, it had a negative connotation, right? Oh, you have Snapchat? Oh, really? I never had it, by the way. I never
I've got
found
it.
use. I never had it.
It's a fun one. But yeah, AMD, I think AMD, I'm going to just play to the upside, blinders on. Maybe something. So the problem is these options are so expensive. I might have to go with a Jermal special, which I think actually works well here, where you just do a long 8-day, short 1 day, or long 6-day, short 1 day, or even a 3-day 1 day, where you're really just playing for a move to the expected, to the upside. And these are cheap. Like you can get in a 1 day.
How did
are they?
How do they fare, Jermal and Mike? How do these fare if it blows it out of the water? Do these lose money?
Well, if it blows to your strike, you mean, right? Like that's
yes. If it's so, Palantir hit almost. It's up a little bit. It's not blowing out of the water, but it's up a little bit past where its expected move was. But if say this doubles, say it moves, 70 points.
I mean, yeah, you lose what you paid.
Or do you then just sell things against it because?
Not really. There's not much you can do once it does that.
Well,
I mean, Mike would find a way, I'm sure, knowing Mike, but
it depends on where you are. If you're if you do the 530 and you're here and you pay $600, so another way to think of it is like you just need your 530 8-day to have $600 or more of extrinsic value, which can be true on an in the money move too. But if you did a 1 day 3-day like this, you have way more space for you to have profit potential because your net debit's only $2 instead of $6. So now you just need your 3-day to have $2 of extrinsic value. So, I mean, this thing could move 30 points in the money and still be a scratch or a small profit. But obviously you want your strike to be right at that 530 region in this case. But we'll take a look at it on the open.
So the other thing too, Liz, is what I do is a lot of times I'll look at the chart and, I'll see, like for example, and when I look at this, I look at where the stock has been, and usually it does correspond with the expected move. Oddly enough, because just options just work that way, and so you can go a little bit higher. That's why sometimes we'll do layered ones. So we'll do near the expected move. We'll do 530, and then sometimes depending on the size of the name, which this can easily gap way higher, you could do the 530, the 550, the 570 or something like that, right? Like you kind of, depending on how cheap they are. In this case, they're not that cheap, but just looking at another name, like that's kind of how I would do it. We're not, you just have the long calls. Yeah, I don't know how much it is to offset, but let's just say those are like $2 a piece. Yeah, how much are these? I was just curious.
I do like that, Jermal. If you're gonna allot a certain amount to it, ladder it instead of just putting them all in one. Instead of doing 3 of the whatever. 5
and that kind of helps. And look, sometimes it doesn't work. These fade. You have a situation like Boeing. I had Boeing calls yesterday. I did Boeing earnings. I did calendar calls. It did not work on earnings. Yesterday, the long calls ended up being basically in the money. I mean, by the time Boeing moved like $10 or $15 in the last 2 days, and those calls came back and that worked out. So that can happen as well. But yeah, I mean, the worst case scenario is they just completely run up big and they're in the money, and then you lose what you pay. That's why you want to pay attention to how much you pay getting into these, right? Be aware of your risk.
And I like what you said too, because I think calendars and butterflies have a very, very deep relationship, right? They both want you to go to a strike, not through it. Jenny and I said that all the time, to it, not through it, right? And so if you're going straight to that strike, and if it goes the opposite direction, you also have a recourse. So if you lose money on this, you've got 8 days, 5 days, whatever your long is for it to come back. And sometimes it does, especially to the call side.
Yep. Yeah, this is so this analysis, I pushed it to tomorrow. So you get all this value out of the shorts, and then I crushed implied volatility in the 8-day by 25%, bringing it down to 75%, which is kind of in line with where these back months are. So this is still a healthy risk profile. If you get any kind of upside move, you've got 100 points of wiggle room. There's the bell.
And we're live.
Palantir. Shut it down.
Yeah, there you go.
Ooh, $600. There you go.
Yeah, PLTR, good. And Mike, that's a good profit potential. I'm glad you did that instead of the crab. I lean towards those versus crabs. Because sometimes you can have the move you're looking for and not get any cash out of it.
Yeah, that happened to me with Amazon. Ooh, wow. I was just aggressively priced. I think I just gapped higher. I just got to fill. I put it in for 1540 and I got 1622. So that's a $700 winner. Yeah, 707. Good. Love to see it.
Oh yeah, on your diagonal, nice.
And then I had a remnant Palantir long call that is 17 days out, which is now 10 points out of the money. So I think I'm just gonna leave this on by itself.
17 days left to go. There you go.
Yeah, this was worthless yesterday, so just left it on. Yeah.
Good.
Yeah. So I think AMD, that's probably where we'll land. A 550, 570 double calendar to the upside for less than $1,000. And this is, again, push to tomorrow, assuming you get all this premium, and then I crushed vol in the 8-day, 25%. This is a big range, all the way up to 600, 625.
Damn, it's already running.
Shame on me. Is there any news that's coming out today? We don't have any meetings or numbers.
I think the biggest thing of the week is just the jobs report. I mean, there's probably a couple other things
later in the week, right?
Yeah.
So, like I said, I might do a lot of times. I'll wait to do my earnings trade, but I feel like AMD could start to run right now.
It's already running.
I kind of want to do it now.
Yeah.
If they would have had global trading hours for AMD, I would have done it.
Soon. I mean, it is already up $200 from where we were just looking at it.
Yeah.
But yeah, I think that's probably where we'll land. The long 8-day, short 1-day, and just do a couple of strikes here. Probably to the expected move.
Ooh.
I'm on my Super Bowl. I put it on this morning and I just got out of it.
Hey.
There you go.
Put it on at 6:30, just closed it.
Love it. Yeah, this one's up $100 already. The 1-day Super Bowl. And yeah, I think it's just a really strong market. Like it's insane to see.
Yeah.
We like it.
But I will tell you though, I do like taking them off early. So now you can't take that profit away from me, right?
Right.
So we've seen hefty reversals intraday sometimes. If there's a tweet from someone, or maybe we are not in war or back in war, however it goes, there have been some reversals. So I do like taking them off.
Yeah. Yeah, we've been taking these off for $100, $200. The one exception was when we put on the super bear, and then we watched the E-minis slide and slide and slide. And we were just like, this just feels like a market's going to go flat today.
Yep.
And then we took it off when it did go flat. And that was like a $500 winner. But
somebody does have a question with regard to that. Actually, Frank in the chat sent it to me. In which conditions do you consider buying back the put spread on a Super Bowl SPX trade, but keep the call spread bought?
When there's time.
I usually do it. Chris kind of alluded to it this morning when we were talking about those. I mean, if it's like, if that puts
because he got yelled at by me. I yelled at Chris about this because he had a call spread, a debit call spread that he financed with a put spread, and he still had 18 days left. Maybe I'm wrong on the days, but it wasn't a 0-day. And I can't see that well to begin with, but I glanced at his prices. I was like, open that put spread. It was worth 15 cents.
Yeah, you got to buy that back.
That put spread.
Again, it's a $10 wide put spread. If it's like 15 cents or something, you buy that back.
Yeah.
And he was like, there's more juice in this trade. I was like, the juice comes from the call. Close that put spread.
Yeah.
Yeah. So that's a great question. So this morning, the one that I was filled on was a 45-cent net credit. If I went and I bought this put spread back right now, I would pay 90 cents, and that would flip me from a net credit to a net debit. And now I lose money in the middle. So to your point, like if it's trading for 5 cents, 10 cents, That's all you're going to get out of that thing. You've already gotten what you're going to get out of the thing, so you might as well close it. I closed something else yesterday. Yeah, IWM. I closed this short call for 20 cents in the same vein. I had a diagonal spread.
Okay, I had it too. I closed it too.
Yeah. The diagonal spread, I had a 300, 315. The September options down a little bit, but the short call, we already extracted all the value out of it. So it's like, now it's just a liability. If IWM really rips higher, that 20 cents is going to turn into 60 cents, 80 cents, So anytime you have a short option that's basically worthless, it behooves you to scan through the portfolio and see if you can buy it back, and you just free up that delta possibility.
Yes.
Yeah, I mean, think about it. That put spread, whether if it's a $5 wide or a $10 wide, if it's like, let's put in real money, $10, $15, I mean, you buy that thing back, and you just leave on the call spread if you want.
Yeah.
Indeed.
Intel put bought
6
back.
point move today. Love to see that.
I just bought my put back. I was short a put in there. Literally just bought it back 50%.
Which one?
Gain. I was short the 80 put in Intel. And bought that back.
Yeah.
Now I still have a ratio spread on from a trade of the day.
Nice. Yeah, I have this inversion, 120, 130 inversion, but I've got $2,300 in credit. So narrow inversion relative to credit. So we're feeling this move. We love it.
I guess I can buy the ratio spread back. I'm up 60% on that. Time to close that, I guess.
Crazy day in the markets here.
It is a crazy day in the markets.
Palantir continuing to rip here, up 25. Crazy move.
I know. I actually looked to buy near-term calls in there, but they were actually too expensive. So, because that thing's going to keep running. Ooh, heck yeah, I bought that back.
I mean, doesn't the government own like 10% of it or something too?
They might own more than percent of that.
It is. They're definitely in cahoots. Okay. Do we need to move this up?
Wait, when does Uber have earnings? I heard you guys this morning. When Uber's
tomorrow.
Tomorrow, okay.
Yeah, let's do this. Let's do a 580, 600. This makes sense. 580, there's still so much premium up here. It's crazy.
All right, I'm doing it. I'm buying these.
580, for 790. And then same story. It's a super bullish trade. Shouldn't say that. It's a very bullish trade.
You have to choose your words here.
I know. But yeah, if you kick it to if you kick it to tomorrow, that's the nice thing about this is you get the 1 days in AMD, which really helps this trade out because you get all this value tomorrow. And then again, you got to crush implied volatility here. Bring this down to like 75%, I think is fair. 24% vol crush, and this is your risk graph. So you need a slight move to the upside, and you've got a really nice window of opportunity here, even if it goes slightly in the money, because again, you'll get all the extrinsic value out of your shorts, and your longs will still hold on to extrinsic value.
Yes.
I'm going to route this. We'll just get in.
AMD.
Do you guys trade Marvell? I know I'm getting the hook too, but do you guys trade Marvell?
Is that coming up?
Not recently.
No, not recently.
Okay, this is I've been talking about this for years. This is bigger than a breadbasket in my account as well. And it causes me pain and joy on a daily basis.
Yeah, I remember you told me I was playing with fire a couple months ago and I was short it. And you're like, you're playing with fire, Jermal. Playing with fire.
Yes.
Stay away as long as you can.
Worked out, by the way.
I love it. Well, Liz, appreciate your time. We'll catch you a little bit later. Happy trading.
Yep.
Thanks, guys. Happy trading. Good luck.
Adios.
See ya.
E-minis continuing to rip higher, up 42. NASDAQ up 500 points. But we got Kevin Davitt from the NASDAQ coming on the other side of this. And it is the perfect time to throw on a downside butterfly,
It is.
in my opinion.
Yeah, I
So
think
that's
so.
exactly what we will do.
Yeah.
But we're going to take a quick 90-second break. We'll be back on the other side of it. You're watching Tasty Live.
Oh, man.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
What's up, Tasty Nation? Welcome back to the show. What an insane market we've got here. E-minis up 40, NASDAQ up 500 points. I'm here with Jermal and, of course, the one and only Kevin Davitt. NASDAQ, how you doing?
I'm doing great. And in part, I'm doing better because of you, Mike. I genuinely have to thank you. I mean that sincerely.
Appreciate it. Yeah, we were talking about these NDX butterflies, and it's comical because you've come on the show the last 3 times. We place a downside butterfly because we're long these other single names. We're like, let's just throw on a hedge to the downside using NDX, and all 3 of them have been winners. But last week's was literally a 0-day pin at 28,000. I closed it for $4,100 profit on that one. It was a $700 debit. And it's such a nice way to utilize it because, again, I'm long all these other single names that are in the NASDAQ. NDX is a great vehicle for that downside hedge. Like the one we had was a $700 debit with a 20K max profit.
Yep.
And we were able to hedge a lot of that downside move. That lasted 30 seconds. In terms of the pinning of where it was.
And people had so many questions about, when are you going to close it? What is your plan? And for the most part, our thought was we paid $700 for this thing to help protect us from thousands of other dollars of risk. I'm willing to let that $700 light on fire. Like
that is the thing that I think you've so regularly explained well. Is that positions like that serve that purpose. And when you're able to kind of isolate them that way in your mind, not thinking about, I don't know, when the 700 goes to 1,000 or whatever, but saying, listen, this was put on for this reason. I'm long a bunch of other stuff that's, working at least ostensibly in this past handful of days. And then to get that to work because you were patient, it's great. But there are certainly going to be times where it doesn't, and that's probably fine because all the offsetting positions you have. My issue and my sort of genuine gratitude here is from a compliance standpoint, we are not really able to trade short-dated single name options. I have a job to do like plenty of your audience, right? I'm not able to be glued. I would love to, but I'm not able to be glued to it and manage some short-dated single name risk. But we can use index products. Now, that's specific to me. And this market, we were just saying before we kicked off, has been a trading market as opposed to like an investing market. And I don't think that's going to change. And I am so grateful for your couple of times as positioning, how well you explained it. And I have on a couple of those downside ones in case the market does reverse here. And I'm able to do them mid-market or just off, just like that. And I appreciate you sort of shifting my perspective on the potential power of flies.
They are great. And yeah, the nice thing about them is like the closer they are to expiration, the more powerful they can be. So to Jermal's point, instead of closing it for a couple $100 here and there, if you hold it all the way to expiration week, expiration day, and the timing is nice and you get that downside move, like that's when they really explode and become a really powerful hedge on that portfolio.
And trading can be a very personal thing in that way. I mean, to that, I mean, again, we were willing to light the $700 on fire, but for those who, once you're up $1,000, if it makes sense for you to close, then you close. Don't necessarily do what Mike and I, don't manage it the way that Mike and I are managing it, right? Like manage it in the way that makes sense for your portfolio.
Right. That was your plan. And I have tons of plans where, like, say I put on 2 of something and it doubles, I will take one off, pay for that position.
That's a great one.
And leave it. And then, like, kind of cross my fingers on something like that you nail it.
Yep.
There's nothing wrong with that. That was my plan. And if your plan was if that goes to 0, so be it. You stick to your plan. The more sort of defined you are in your mind and the way you execute, I think the more likely you are to be successful long term. That is the goal.
That's a good trading plan, by the way. I learned that from a good friend who's actually he's at the head of the trading desk now at Peak 6. But yeah, we'd buy, like, let's just say, simple example, you buy 2 calls for $1, all of a sudden they're trading 2, you close out 1 and let the other one ride.
Yeah. I mean, it's cliche, and I'm not a real big fan of you can't lose money or go broke taking profits.
Yeah.
But like if you get stuff to pay for the rest of your risk, you kind of can't. And it's not always going to work out that way, but that approach has generally served me well, as have the index butterflies. So I'm excited about it. But not everybody cares about that. The sort of top names, the things you guys are talking about, and I loved the Missy Elliott reference. I was listening coming into the show. Flip it and reverse it. You look at the top handful. I shared a couple of slides, and one of them shows the top 10 names in the NASDAQ 100. And you look at the moves some of these mega cap names have made, particularly since last Wednesday. And it's just amazing, right? Like Microsoft up 25% and now more than 100 handles in a couple of days. Amazon similar. And then Apple, which had been performing really well when some of these other sort of more AI specific names weren't, pulling back on numbers. It has been such a great trading environment. Again, depending on your positions, but there has been significant movement. And I think your audience understands the power of velocity and how powerful optionality can be in that environment.
Yeah, and I think one of the things that stood out to me over the last couple of weeks is just thinking through, like, is this a market that's going to sell off? Is this a market that's losing liquidity? And the one thing that stood out to me was looking at the equal weighted S&P and the equal weighted NASDAQ. And you see, especially with the equal weighted S&P, how we were near highs when the Mag 7s were low or were in the middle of the range. So it's like, okay, this isn't necessarily a market that's losing liquidity. It's more just like where it's going. And I think that speaks to the velocity that we are now seeing to the upside in those names. And the NASDAQ is 500 points shy of 30,000 again. And we're right there.
Yeah, it has been fascinating, though. A lot of people were worried and talking about the Mag 7s and what was going on with them outside of Apple, and just talking about how Apple's reaching new highs and all that. That seemed to me like that was an interesting trade. And that's exactly the way I played. I was already long Microsoft because we've been long it for so long. But then playing Amazon, right, to the upside, even though that didn't work out on earnings, but it is what it is. Risk defined for the most part. But like playing Apple to the downside with a diagonal prior to earnings, like these things it just worked out in a perfect storm because of how money was moving around.
So what do you think now? It feels, again, arguably just a couple of days into this, but we're back into a market where index vol has been smashed, and we're seeing particularly upside kind of rebid and single name vol pick up, particularly on the sort of right hand. I do have a visual that shows at the money 1 day NDX straddles as a % of spot. And if we can pull that up, it would be a little bit helpful. This is the case across sort of indices. you see how much those expected ranges have come in over the past handful of days. So a day like today, you have less than a 1% expected move. I'm going to throw, I know it's not super compelling, certainly listening, but I'll walk through this simply with a handful of numbers. On average, the NASDAQ 100 up-down range tends to be just a little bit greater than 1%, okay? Year-to-date number. Since June 5th, which was that big sort of reversal on the downside, it's been nearly 1.5%. So, vol kind of up 50% for the past handful of months. But the way they crush index vol in this low correlation environment is interesting. And I do think that there are ways, again, to think about the whole portfolio and how you can potentially offset your single name risk at the index level with some sort of tactical plays. Index vol is getting arguably cheap again.
Yeah. And that's basically what we did with these downside butterflies. And I think it behooves us to look at it again. I like to do near-term ones, like less than 2 weeks. So August 14th brings us to next Friday. And if you look at where we were when we placed the other one, like I think I might just do the exact same trade, the 28.2, 28,000, 27.8. And that brings us kind of right in the middle of the range where we've launch padded from. But if you just think about this move to the upside, maybe you see a little tapering off. This is a really effective way to get into something like that. And this is, again, the exact same trade I had on last Friday, but I paid $7 for it. Now it's trading for $5.20. And this is an interesting scenario where like your max profit's 19K. We had it on expiration day pinned. I was able to take off capture it for $5,000 or sell it out for $5,000. That's a huge return on your debit paid, especially for a hedge. And if you're long all these other names with other positions, you can offset all of that risk, especially for smaller accounts that might have smaller positions on in there.
Yeah, the one thing I've noticed with these is like it does help to have a catalyst. I think that was like the big thing we had going in our favor last time around. We had so many different things that were sort of encompassed within that NDX, butterfly put spread that we had. I mean, we had like a Fed meeting, we had all these earnings, like all these different things. So to that end, I do think about, and we also had, it was the end of the month expiration as well. I mean, July, end of the month is usually, it's not like that's a quarterly, but still it came into play. And so I feel like those things do help in those situations.
Yeah.
That end of month thing, just thinking back again to the environment that we might find ourselves in here, the move last week, the rebound on Thursday was kind of reminiscent of March 30th, which was really like the earlier reversal this year. I'm keeping your producers busy, but I have a look at close over close changes in NDX that I think shows this relatively well. I characterize this year as sort of thank you very much. I've marked that March 30th date, which is that first one in the sort of green. We had a relatively muted volatility environment up until that point. Again, keeping in mind you had like the Middle East situation percolate in February and vol sort of start to expand. Then you had that run of something like 13 straight up days for NDX. It was borderline historic, kicked off by this March 30th reversal. End of quarter, big move. You saw something similar after 6 consecutive down days in NDX going into the 30th. That one has only happened 5 times in the past decade, and typically you have seen fairly significant rebounds. Are we moving back into that environment? You're seeing some behavior reminiscent of that April-May stretch where this single name vol, particularly on the upside, gets bid, index vol gets hit. I don't know, but I think looks like this can be helpful. And again, thinking about your idiosyncratic risk and how you can manage that potentially at the index level.
Well, if there's anything that could possibly push us down, I was saying this morning, I just don't think that, I think it's something to pay attention to, that yen move. That's been really kind of fascinating more recently. Still don't know all the ins and outs of it. Still don't know why you have a notepad that's being filmed in the White House that shows, let's buy. You're showing the playbook? Nobody shows the playbook. Like, in what sport do you show?
Well, you guys kind of are on your show talking through it, but when you're in a government position, dude, you had a U.S. intervention in a major currency for the first time in like 40 years, I think. Like right around the Plaza Accord, we were, still in diapers potentially when that's not quite, but you had interest rates globally break out to like multi-decade highs, and you had a fund, nice picture. You had a fund that just a couple of weeks ago had assets of like 45 billion get carted out. Last week was wild. And that likely doesn't resolve itself really neatly in a couple of days, or at least that's my mindset.
Yeah.
Yep.
I think you could see continued volatility here. And this is, it's interesting because we've got SpaceX earnings after the close, AMD earnings after the close. Like, there's still things that can shake this market for sure.
Palantir 152s. It's running.
Love to see it. But yeah, I think when you look at the structure of this market, the NASDAQ just ripping up 2% right now. Absolutely insane move. Let's actually look and see what's driving this thing. We can look at the market indices, NASDAQ 100, flip it to net change. Yeah, Palantir up 12%, 21%, sorry. Marvell up 12%, ARM up 10%. Like, this is nuts. Micron, Intel, SanDisk, ALab, and this is ahead of AMD earnings.
Mm-hmm.
They're not even out yet, and they're up 5%. Crazy. I'd be shocked if AMD went. I mean, I gotta say it. I feel like this is, yeah.
Yeah, I'd be shocked.
I feel like it would be crazy to see AMD drop after such a strong market in the pre-market move. But hey, earnings are insane. I've seen crazier things happen with earnings. My favorite is like back in the day with Tesla, where they'd just be like, "We're burning billions of dollars," and the market's like, "Hell yeah, let's rip this thing."
Just rip it higher, right?
But yeah. Got to stay safe out there with earnings trades. Anything can happen. But yeah, I was filled on that NDX butterfly. So I've got the 200 point wide, this nice little tent here. And as we showed last week, like for these things to really work out and for you to capture thousands of dollars, you got to be in expiration week at 28,000. But I like this hedge. I was filled at $550 debit. So $150 cheaper than the previous rendition, but I like it. It's been a great trade.
And just, again, not sort of scripted, I care about the continued improvement of execution quality in the product relative to mid-market. How near?
I think it was like 20 cents.
Okay.
20 cents.
And again, putting that in perspective, in a roughly $3 million notional where you got a $20,000, again, highly unlikely payoff, but relatively insignificant. Good.
Yeah. Yeah. I mean, these options are super expensive. So you're going to have wider bid-ask spreads. It's a larger product. But that doesn't mean you can't get filled. Like I moved it 3 times in 20 seconds and I was able to get filled.
Right. And
it's a big product.
And on the way out, I think that's the most important thing. On the way out, I just put the limit order in and I got filled pretty much immediately. So that's the most important thing, being able to get out, capture those profits. So
by the way, we're on the way out, but we also had a SPX put butterfly that worked out too.
That's great.
Same style.
That's
Same
great.
Style.
Nothing wrong with it.
Same style. 28,000, 7,400. We killed it. Yeah.
Well, Kevin, appreciate you as always.
I love the opportunity. Thank you. And again, thank you for shifting my perspective about these opportunities. I got a couple on. Maybe next time I come back, we're going to be talking about, I don't know, the jobs number as a catalyst and got another one. Yeah. Thank you, guys.
Absolutely. There's always something in these markets. But E-mini's up 53, NASDAQ up 560. Crazy days so far. But we got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll be back after this break.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tasty Trade's active trader interface.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools, and place trades in a single click, all on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
I'm Jim Schultz, and this is Inside the Trade. How about that intro song from Theory to Practice coming on board for Inside the Trade as well? I love it. I absolutely love it. And somehow, some way, we survived the most important jewel sprint of our lifetime. So I hope you guys are doing well out there. Hope you guys are doing okay here in the morning. So we are going to go inside the trade. Now, what do we have on deck today? We, of course, have SpaceX earnings. But, again, I don't want to front run myself. Again, the content's not going to create itself. We're going to do SpaceX earnings later today. So I want to do that later today for From Theory to Practice. Not only will it give me content for the show later, but also, you know, when it comes to trading earnings, a lot of times I like to do it a lot closer to the actual earnings release, which I would imagine many of you out there are kind of in a similar boat. When it comes to earnings trades, you don't want to jump the shark too early. Like, you don't want to swallow the frog too early. You want to get that guy on pretty close to right before the actual release of the number. So we could do it now and it would be fine, but I have an actual better idea that I think will allow us to burn a stack of cash early in the morning to kind of get the day underway. So Ben, go ahead and bring us into the market. Man, the market is super strong, right? You got EMI S&P's up 63. You got the risk-free instrument up 591. You got the boomers up 600. Man, somebody get me something. 54,000. I need a coffee mug or something. Like, get me a bumper sticker. Like, get me something. Russell 3000 back over 3,000. And so there you go. All is well in the world, of course. Shifty celebrating. Hunt Brothers celebrating. Like, everybody is excited. Everybody's happy. So here's what we're going to do today, guys. If you can't beat them, you join them. Right? If you can't beat them, you join them. So what we're going to do, again, because the morning show, the afternoon show, still kind of getting used to that. Still kind of getting my feet wet when it comes to, you know, seeing y'all in the morning and then seeing y'all again in the afternoon. I'm like, man, let's take advantage of that. Like, let's take advantage of that by doing a little something in the morning and then doing maybe that same trade later in the day on the closing side. So we open it in the morning and then maybe we close it there in the afternoon. And so there have been a couple of trades that we've done with this very same type of playbook, I think with IBM and, SPX. We actually did an SPX butterfly, I think recently, that we took off on the show. We actually did it on Inside the Trade. We opened it and then we closed it on Inside the Trade. Like, we did an SPX butterfly. It was like 3, maybe 4 minutes apart in terms of the duration of the trade. In fact, let me look at that. Was that right? I think that's right. If I go to my activity tab, well, actually, I didn't even need to do that, but let's go to the activity tab. Let's look at SPX. Let's do the last 14 days. Yeah, there it is right there. Yeah, that was it right there. 729. So that's like a week ago or so, give or take. And then 729. Yeah, it was 4 minutes. Look at that, man. We did a trade during the show, near the end of the show. Like we were on the back half of the show. Like we were winding it down. Like we were doing cool down sets at that point. Like the main work had been done. The overhead pressing is done. The upright rows are done. The shrugs are done. Like now you're just doing pump sets of lateral raises in front of your favorite mirror in the corner of the gym with the good lighting. Like at that point, it's like it's over. But man, we were able to take that guy off in just a couple of minutes. So I want to do something similar here today. However, I'm not necessarily expecting that we'll be able to take this guy off during the show. So we might have to hold this guy until from theory to practice, but that's okay. That's fine. Again, using the morning and the afternoon kind of bookends there is an interesting little strategy. So let's go into SPX. I want to set up a SPX. I want to set up a similar trade today as to what we did about a week ago, but I want to go, let's explore SPX, but then I also want to explore XSP. And so SPX is, that's your S&P 500 index, and that's going to be, the granddaddy of them all. But the nice thing about something like XSP is it's a little mini SPX. Like it's a little micro deal when it comes to, man, I really want to size this down even more. Like, can I get even smaller? Like I think we can by using something like XSP. So let's set it up in SPX, and then we'll set it up in XSP, and we'll kind of talk through, the differences and the similarities and the gimmies and the gotchas, of course. And so we're going to go to a 0 DTE. And again, guys, I see you guys in the chat. Man, you guys are already here. You guys are already here. Man, look at Sam L is here. Man, Orgdenu is here. Aunt Doug is here. Man, hopefully Uncle Doug gets in the house here pretty soon. Orgdenu is here. Ranch is here. Ashfan is in the house. Man, what's going on? The man from many places. Rhett's Media. Man, Back Roads Overlander showed up. Christopher Springer is here. Man, I appreciate you guys so much. Adam Armfield snuck in at the end there. Okay, so let's take a look at... So if we do SPX, and again, if you can't beat him, you join him. So what do? You play it to the upside, right? You play it to the upside. I want to see what it feels like to be a momentum bro. And again, we're not buying property, right? We're not planting down roots. We're just passing through. I'm just checking it out. I'm just staying for an afternoon, right? We're not necessarily even staying overnight. This is going to be very much kind of a smash and grab type of deal here. So I'm thinking, what if we set up a butterfly to the upside? Now, this is going to look very different from a lot of the butterflies we would do on From Theory to Practice, where I would do one, and it would be for the next day or for earnings that night or whatever. That's a lot different because that's, you've got the overnight risk, you've got the whole next day. This is more of a concentrated kind of, very, very, I don't want to say specific because they're all specific, but I think concentrated is probably the best word. And so when it comes to the simple fact that the timeline is much shorter than it would be going, one afternoon into the following day's close, that's a lot more time. That's a lot more, expanse that you could travel when it comes to, where the stock could go. Now we've only got 6 hours left with no overnight risk. And so, when you look at like the strike selection and kind of the width of the expected move, I'm used to the expected move on either side of the market in SPX being, essentially plus or minus like 40, 50, 60 bucks. And if you look up to the upper right-hand corner here of the actual option chain, or the trade page, I should say, or the option chain, I guess they're basically the same. Now it's only $22, $23. And so it's effectively half of that. And so, you kind of have to scale down your expectations and scale down your strike selection appropriately to kind of fit within this kind of shorter, concentrated window. And so for SPX here, if we just kind of set this guy up, if I buy a 76.70, I sell a 76.95, which is just outside the top side of the upside expected move. If you happen to be listening to the audio only version of the show, and all you have is my sultry voice. That's a tough go, man. That is a tough go. But I'm going to do my best. I'm going to do my best to help you. I'm going to give you the stats. I'm going to give you the analysis, and I'm going to try to be even more sultry than I typically am. So 76.70, 76.95, 77.20. We got to buy that one on the end. And then we obviously double up in the middle there. So it's a 1 by 2 by 1. And so this guy is about 565. Now, we could tinker with the strikes. We could, move some things around and kind of, just kind of see where the wind blows us on this specific position. And that would be totally fine. However, I kind of think, and this would be about 1.5% of the account. Totally fine. I think it's totally cool. When it comes to intraday stuff, I mean, maybe you want to be even smaller. Maybe it's like, all right, I don't know that I want to necessarily, put a bunch of stock into this necessarily, but this would be okay from a position sizing standpoint. But if I go to XSP, so from an XSP standpoint, I'm thinking we set up a similar trade, but you're going to see it's going to be much, much, much smaller. So XSP. So if I go to XSP, same type of trade, right? 0 days to go. If I go ahead and if I set up, it looks like you guys got a little extra fuzz with the sultriness. That's probably an uptick, right? I see it in the chat. That's probably an uptick, I would think. And so maybe the fuzz is here to stay. Maybe it goes away. You guys have to tune in to find out. And so, but XSP, if we've got the stock at 767, then, to set up our butterfly here, you've got to scale it down again because you've got a $700 product now instead of a $7,000 product. And so if I do a 767, 770, 773, this is going to look a lot different. It's going to feel a lot different. But look at effectively the sizing of this trade coming in at about 1/10 the size of what we just had with SPX, which that makes sense. This guy's only 64 to 65 cents. And so this makes sense because, remember, SPX is 10x the size of XSP, or XSP is 1/10 the size of SPX. It works both ways. That's how, multiplication and division has worked since the dawn of man. And so for us here, we're in a situation where that's a very, very small trade. And so you could go in with, a 2 lot, a 3 lot, whatever. I'm just going to do a 1 lot because this is purely for educational purposes only, of course. And so when you look at, this situation, this is not a bad way to take a shot intraday. And maybe you have a smaller account and you kind of want to be a bit more active intraday and you have a hunch, you have a bias, and you want to play the market to the upside, you want to play the market to the downside, whatever, and you want to use something like an expecting move butterfly, but SPX is a little bit too big for you. You could do XSP, which is 1/10 the size, and you could do it in something like this. So I'm going to go ahead and ship this guy, and the markets aren't even that bad. I mean, you look at the the bid-ask spread differentials. One final note here: it's also cash settled, just like SPX, which is nice. But you're talking about 1, 2, 3 cents wide, which is really, really good from a sizing standpoint. And so, when it comes to the overall spread on the strategy, you're about 5 cents wide or so. That's pretty good for a 3-legged strategy, for a 4-legged strategy. And so, let's go ahead and ship this guy. And then let's just, we'll see where you guys are at. In the chat, man, I see you guys are putting in work. Man, you guys are putting in work. The early crowd already got filled at 67 cents. So there you go. So now, my plan is, if we can make, you got to keep in mind, we paid 67 cents for it. The max profit's $230. I mean, if we can make $70, $80, $90 off that trade, I mean, that's a really great trade in my opinion. So you want to be mindful of, you don't get nearly the bang for the buck that you do with SPX. And so from like a commission standpoint, transaction cost standpoint, you got to be mindful of that, right? Because, if this becomes like a daily driver for you or like a regular thing that you do, obviously you're getting much more, economies of scale when it comes to SPX, but it's a much bigger product, right? And so you kind of have to figure out, all right, does this make sense from a, transaction cost standpoint? And so, but from a sizing standpoint, it's obviously really, really nice. And we're already up 4 cents on the trade. We're already up 5 cents on the trade. And so there you go. If you can't beat them, you join them. And so, all right, let's see. Where are you guys at? Man, where are you guys at in the chat? Man, I see you guys in the house. So let's go ahead and let me go all the way back. There we go. I see Wolf is in the house. Clown Baby is in the house. What is up? Sergio is in the house. What is up? Ashvin is in the house. I hear you, my friend. I see you, my friend. Or then you said, Doc, that song is you and you are that song. That's true. That's true, man. I mean, that song will forever be burned in our skulls, and it is associated with From Theory to Practice from now until the end. Like, there's nothing we could do. Like, we cannot change it. Like, it has become one with our soul, and I wouldn't have it any other way. And so I love it. And so let's see. Where are we at? I'm trying to scan to see where you guys are at really quick. Christopher Springer. So you can do 2 expected move butterflies in AMD for like $100 worth a shot. So do you mean, let me take a look at that, Christopher Springer. I only have a couple minutes to go, so it's not like from theory to practice where we have, kind of the Elaine Bennis wide lanes on the second half of the show with like 20, 25 minutes. This is going to be a little bit different. But you were saying, I think what you're saying here is you can do, AMD is today? Oh man, wow. So we've got SpaceX and AMD tonight? Oh my goodness. Man, oh man. Wow, that's some good stuff. So did you give me an expiration? No, you didn't. But do you mean overnight? I'm wondering if you mean overnight. You didn't give me strikes. You didn't give me expiration. Man, I'm just flying blind. I'm just off in the wilderness, just kind of, just roaming free, for 400 years, like the Jews did back in the day. 40. And so if we look at, let's see here. If I do, it can't be a $5 wide, can it? No, there's no way. If I do 500, 555, 560, I don't know. Maybe so. Wow. That's only $10 wide on a $500 stock. So I don't really know, Christopher Springer, like what you mean in terms of the strikes and the expiration. So I need a little bit more context around this trade. So come back from theory to practice and let me know the more specifics around your trade, because I would love to know, because we're definitely going to be trading AMD later today, because you've got SpaceX, you've got AMD, and yeah. But let me see. I see the rest of you guys in the house. Man, Shane says, I love a good deal with a small account. Thanks, Dr. J, man. You are welcome. You are welcome, man. I remember you guys. I love you guys. And we've all been there. We've all been there. And I'm there with you guys right now. 37,000 is not that much capital in the grand scheme of trading. There are some shooter McGavins out there that are trading much, much, much bigger accounts than we're trading. And so let me see. Donald Chrysler says Oracle's been bouncing for the lows. Let's take a look at that really quick, and then I think I got to run. Oracle back to 144. Wow, man, Oracle. Man, look at that. Is that a daily chart? That's a daily chart, man. Look at that. That's crazy. This thing was 250. It was even higher than that, though. Wasn't it? If we go back a little bit, hold on. It was over 300, I think, right? Yeah. Look at that. Man, look at that. Wow. That's crazy stuff. You rarely see a chart that's more bullish than this one. I'll be curious to get Tim's thoughts on this, but you rarely see a chart that's more bullish than this one. And so again, this might be a bit too advanced of technical analysis for you guys out there, but you can start back. You can start back on the earlier stuff. But okay, so I got to run. I got to get you guys over to Tim. I see him in the waiting room. And so there's Inside the Trade with XSP, smaller accounts. That's an option for you guys. I will see you guys later today for From Theory to Practice.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us. We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. We got E-minis ripping, up 76, NASDAQ up 630, and we got about 40 minutes left with myself and Jermal. Jermal, what do we got the rest of the hour?
We got a whole bunch of stuff coming up. Don't go anywhere, folks. Right now, we got trading charts with Tim Knight. We got Tasty Research with Julia Spina. And then we got Morning Movers with Gus to close out the show before we get to Chris and Liz.
It's going to be great. It's going to be great. Action-packed. Tim Knight on the line. Tim, how you doing? Your dogs are barking.
My dog's been quiet for an hour, and he heard you guys. He's like, time to talk. Okay. Okay. I'll close the door if I need to.
You say, hey, we're still bearish.
It sounds like the Arsenio show.
Yeah. Blah, ha, ha. Well, no, listen. I have been...
First of all, how are you doing? How are you doing here?
I'm okay. And why is that? Well, a couple of reasons. One, I'm not making money, but I've been busy not losing money. And I'm serious about that. Let me explain. A week ago, I was like 43 positions. You know how many positions I have now? 7 positions. And I dodged some serious bullets lately. Yesterday, I covered Palantir early in the morning for a profit about this big. Thank God. I also decided, I'm going to take my profit on my Caterpillar puts, even though they don't expire till January. And that was a, on that one too. So yeah, I've been really light lately. My distrust of this market really spiked late last week, and we had our taco time on the weekend, and I got light and I've stayed light, and it's kind of boring, but I'd rather be bored than let's just put a bunch of trades out and just see what happens, So that's kind of where my head's at right now. But I got some charts to kind of augment that. Some bad news for the bears, definitely, but also some, I hope, insights that might be helpful to people.
Yeah, absolutely. Let's see them. And as you're pulling them up, look, you called it. I mean, I remember last week you were saying I'm taking off these positions. I'm rolling this further out in time to give myself time. The way things are looking for my particular setup doesn't really look good. So you are all over it. And actually, it was the time where we started adding a few more bullish positions because it did seem like something was about to change a little bit for a while.
Yeah, and it's been, it's fine that it bounced, but the severity of the bounce is what's alarming to me. I mean, we'll start off with the most basic of basics, the spider. This is big. We have broken above the range. This range has been in place since early May, all of June, all of July. Here we are in August. Today is the first time ever that we've broken above this range. And from a technical perspective, all that pent up energy and all that frustration from those 3 months basically gets released. And new highs tend to beget new highs because everybody's a winner at those levels. And so this really throws a big pitcher of ice water on, at least in terms of the S&P 500 realm, the bearish perspective, big time.
Yeah, first time breaking out of this for quite some time, and it's been really led by the Mag 7, which we've talked about, has been really lagging up until this point. And then you compile that with crude oil markets that are getting crushed right now. Backwardation is getting zapped out of there. Volatility in the 15 handle. So it's crazy times.
Well, that's a perfect segue because there's crude oil. And, depending on the news source you have or the Twitter feed you follow, you can affirm any narrative you want with Iran. You could have yourself convinced that the war is about to start going nuclear, all the way to they've already signed a peace deal or anywhere in between. And the markets tend to be a lot more kind of cold and rational about what's really going on. I think you're going to learn a lot more truth looking at the crude oil chart than you are trying to scurry around and see what people are saying on X.com. And so given the continued drop we're seeing here, maybe there's something to this. Maybe there's going to be a cessation to this Iran situation, because this is, we had been finding support here for some weeks. We've cut below that today. So looking at that, there we go. So that's looking like it's got every real chance of moving back toward maybe where the lows post-war were. Before the war, we were here. We had a big price gap, which we've never gotten below since. But we may be heading to those levels again, given the weakness we're seeing right here in crude.
This has been one of the wildest things with this and crude prices. I mean, even when we look back to like the Russia-Ukraine war, nat gas didn't even do this. It was really all the way up, and then eventually all the way down. And this has been wild.
Yeah, well, I've told the story before of back in January 17, 1991. That was the first Iraq war starting. And the universal supposition was, how high is crude going to go? 300 a barrel? People had all these crazy speculations. And like 4 seconds after the war started, crude oil collapsed. And that's because the market as a whole, as the collective brain of Earth, like, this is going to be over real quick. And they were right. And so likewise, we see crude here moving lower. It's like, all right, maybe finally this on again, off again stuff will stop, and we're really, really, really going to end.
I was in freshman social studies during that time. I do remember us talking about the war and everything that was going on. I didn't realize the correlation with oil at the time, being a kid, but I do remember that.
Yeah. Well, yeah, because, the fear, because this was the first major conflict we were heading into since Vietnam. And, it's just like with trading, you have recency bias. And the recency bias when it came to war was, oh, another Vietnam. This is going to be, and people learned the word quagmire again. And like, this is going to be years and years. And the Iraqi Revolutionary Guard is the fiercest military force, et cetera. And like 12 minutes later, the white flag goes up. So another big surprise versus general expectations. Dr. Jim was just alluding to some of the big earnings coming up. Wanted to touch on those quickly. One of the biggies, of course, is AMD. No sector's been more important in the past few months than semiconductors. And even though we're kind of past the bulk of the earnings season, this is a big one. I don't have any, like I say, I'm just light as a feather right now. I don't have any position in AMD. I do have some October puts in SMH. So, but this has been range bound, and it continues to be range bound. And until such time as it cuts above or below that rectangle, I don't think we have any clear direction. But this is definitely one to watch, because there's precious little else going on to inform what SMH is going to do.
Yeah, I think this one is going to be really interesting, because we've seen the tug of war between software and hardware, and today's markets and yesterday's markets so strong, with AMD up 6% pre-earnings. We did place some neutral to upside bullish trades in here with defined risk calendar spreads, but that's really all we can do here with a $500 price point. And the options are thousands of dollars. So yeah, our hands are tied to smaller positions with calendar spreads, but we're playing for a similar move like we're seeing right now.
Right, and I don't know if you're doing anything with the one that I think from a cultural perspective is going to get vastly more attention. But of course, the big news is SpaceX, because it's their first earnings announcement. From a chart perspective, it has shaken off its dismal performance, even though it was at lifetime lows yesterday on an intraday basis. We've at least gotten to the other side of this descending trend line, and we're getting some strength. But tonight is going to be interesting from a twofold perspective. One is obviously to see the reaction of whatever those numbers are, which is within the realm of. I don't think it's going to be mild either way. I think we're going to either see a meaningful rally to shake off this blasé performance, although I think there's massive amounts of overhead supply to curtail that, or, and I hope this doesn't happen, we could see just a shocker where we go back and where we cut down to the double digits for the first time. But I think what's important from a psychological perspective is whatever follows this, however this opens tomorrow, people are going to be really informing their opinion on things like Anthropic, things like OpenAI, and things like the entire hyperscaling industry, either for better or for worse, because this is seen as a really important litmus test for okay, now we're seeing a real public company with real accounting approved numbers, what SpaceX really like as a business.
Yeah, absolutely. I mean, they're not making money right yet, so it's just a matter of what they say that draws people's interest to the future, right? And so,
yeah, the Elon narrative is going to be crucially important. It's not going to be like, hey, we've turned a profit. It's like, well, how many billions did we lose? But Elon's razzle dazzle, which has worked great for a long time, is going to be the thing that really drives. I'll be listening with great interest, as will a lot of other people, because this isn't, this is a very young public company, and it's not a particularly important company to the economy as a whole. But from a cultural and psychological perspective in the equity markets, there aren't many more important than this one.
Yeah, and I think this is a repeat of the narrative that Tesla used to have, where the expectation was a loss of $3 per share, but they posted a loss of $2.90 per share, and the stock would be up 50 points.
Yeah.
Like that. Yeah. That's where I think we're going to be with this, to your point of the razzle dazzle, the Elon effect. And yeah, I think I would imagine it'll be one of the most listened to conference calls for earnings in recent history.
Are either of you doing anything with this from a trading perspective?
We've had the same trades we've had on for a while, really hadn't added. I think we've both been thinking this thing is just going to keep tanking until something positive comes out. So honestly, if it tanks, it goes to 98 and change, probably redeploy a similar trade that I have now, which is basically short to put and long upside just to see when it bounces. And if it goes up, I don't know.
Yeah. Same story. I've got a 125 short put to pay for a 300 strike call, and I collected $300 in the middle. So I have neutral profitability there. But if we do get that move to 200, 250, 300, it'll be a multi-$1,000 winner. But I'm happy to take shares at this level.
And he's in January and I'm in September. So we've been long out on this thing. It's,
Yeah. Well, I've got a feeling it'll be the first thing we talk about tomorrow.
Absolutely. Well, Tim, appreciate your time. We'll see what happens with SpaceX earnings, AMD earnings. But yeah, that conference call for SpaceX will be fascinating for sure. We'll see you a little bit later.
All right. Well, good morning, everybody.
Yeah.
Good morning.
Likewise.
See ya.
E-mini's up 67, NASDAQ up 660. Crazy days so far, but we're going to take a quick 90-second break. We'll be back on the other side of it. You're watching Tasty Live.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Global markets never sleep. Explore them with Forex. on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
What's up, Tasty Nation? Welcome back to the show. We've got a great segment for you. I like that new intro, Tasty Research.
Let's see it. Yeah.
Julia on the line. Julia, how you doing this morning?
Amazing. How are you?
Doing great.
Fantastic.
Doing great. Your hair
Best
is
day ever.
shimmering.
I know, right?
I know. I backed up from the camera a little bit today, so I got all this hair in the shot.
Hell yeah. What do you think of these markets? Crazy day.
Yeah, I know. They're marketing. Yeah, I had this QQQ iron condor. It was a little bit further dated. I think it was like 30 days out, and then NASDAQ went right down, and then it sprung right back up. Recovery was great. Didn't close the position out. I should have, and now I'm regretting it. So I'm probably gonna roll it out. But yeah, I don't know. I'm just kind of waiting for a shift. I don't know what's gonna cause it at this point, though.
Yeah, it feels like, I mean, this is the most strength I've felt in the market. I feel like all year, really. With it's kind of everything all at once, right? The E-minis, NASDAQ ripping, Mag 7 products up 100 points. Like literally, Microsoft's up 100 points, Meta's up 100 points. Everything's crazy.
Yeah.
Mag 7s have finally caught up to equal weighted S&P.
They have.
You got crude oil down 5%.
It is.
Backwardation is no longer existent there. So it's just like everything. Oh, and the VIX is in the 15 handle.
That's
or at least
true
it was.
also. At least it was. Well, where it is now.
1580.
Okay.
Same story. So, yeah, I don't know. And then SpaceX, after the close, maybe they'll say we're going to Mars. And
Oh my
they
goodness.
do. That's,
We are really going to Mars in the market then.
Then we're going to
It's going to be
to
on.
the moon. We're going right to Mars. Yeah.
that'd be
And then
crazy.
AMD earnings as well is one that I'm looking at with Intel as well, because Intel and AMD are like so correlated.
Yeah.
So when one moves, the other tends to as well, even with a binary event like earnings. So as well as like everything else kind of in the semiconductor sector. Although AMD is kind of on its own planet a little bit. I often like compare it to NVIDIA, but their price movements are actually like pretty different. So I'm going to be watching like a lot of the semiconductor names as well. And then SpaceX is like, on its own planet, I should say.
Yeah.
Haha. Saw what you did there. Do you have a research piece that explains all this craziness?
No, we're going to be talking. Well, I mean, okay, it's related actually. It's related, but we're going to basically be talking about how this, crazy market that's gotten a lot more expensive in the last couple of years is impacting smaller accounts, and kind of strategies that you can use if you do have a smaller account. How to trade in these very expensive markets. This is by Sahil. If you want to follow him over on X, he posts a lot of cool stuff over there. So it's related, but not it's a little more evergreen.
Love it. Let's dive in.
Cool. Let's get into it. So despite all the noise, despite all the chop that we've been seeing, markets continue to climb higher. As we are nearing all-time highs again, it might be easy to kind of like overlook the scope of growth that we're kind of seeing. In fact, over the last 5 to 6 years, the S&P has actually doubled, and the NASDAQ has more than doubled, and the Russell has increased by about 1,000 points, which I haven't taken a step back to really think about that until I was reading this piece through this morning. That's a kind of a crazy amount of growth in the last 5 or 6 years.
Yeah, if you look at like the monthly chart of NDX or SPX, it's actually hilarious. It's just like, it's basically a meme stock, but it
kind of looks like meme spot.
Yeah.
Exactly. So if we go to the next slide. So as a result, that has made a lot, of the assets in the market more expensive to trade, including the options on those assets as well. So for traders that are a bit more capital constrained, that can make it a bit more difficult to navigate the market when it comes to controlling, especially position size, which we know to be very important, right? So unless a stock splits, lowers its price, or there's some kind of correction, that means that you have to maybe like look in a little bit of a different way to find things to trade. So just comparing July of even 2021 to 2026 across QQQ, Meta, Broadcom, even for non-growth stocks like McDonald's, it's gotten more expensive. So what can traders with smaller accounts kind of do in this very expensive market? Make sense?
Mm-hmm.
Cool. Okay. So with short premium positions, one of those tricks for controlling position size is adding the long wings. Even if the wings are like very far out and you're basically trading a synthetic strangle, that can be very effective at controlling position size. But what you give up when you do that is probability of profit. That tends to go down when you add those long wings, as well as the capital that you can potentially collect on the position, right? That tends to go down, or that goes down when you add the wings as well. So when we're looking at like what you basically have to do to achieve the same pop, you're going wider and wider and wider. And that, increases position size, which is like, so that's a trade-off that's not paying off, or it's not as usable, I should say, as stocks have gotten more expensive, because even adding those wings can still result in very expensive positions if you're trading in a smaller account, right?
Yeah. Yeah. And it does create, higher priced products create less delta exposure too. So maybe you have less Greek exposure all in all, but you can still manipulate some of these things to make it worth your risk tolerance or fit your risk tolerance. Sure.
Yeah, right. So we go to the next slide. This is where this concept of product indifference comes in. And this idea of product indifference is that when you're trading like volatility, when you're trading short premium, the product itself kind of doesn't matter as much as the signals that you're looking for when you're putting on a trade. You're looking at the underlying price of the stock. You're looking at the volatility of the stock. And so when you're trading a stock or an ETF, the actual underlying doesn't matter as much as some of those other signals that, can be used to construct your your probability of profit, your estimated profit, and your tail risk. And so that is one strategy when you're looking, for something to trade, is this element of product indifference, really just looking for something that's liquid, that has the volatility and the sizing constraints that sort of align with the sizing that you're aiming for and the size of your account. So that is one strategy for being able to navigate these more expensive markets, which is like really just looking more at volatility and position sizing rather than the product itself, where liquidity really matters in that situation, right?
For sure. And this when you think about SIBO products too, you've got SPX, XSP. Like XSP is 10 times smaller than SPX, so there's definitely this is in their minds too, like of the product creators, where we have the ability to get smaller with new product offerings.
Right. And XSP has gotten a lot more liquid in the last couple of years, which, has just made that much more accessible for people with smaller accounts, with retail sized accounts. So we are seeing new products emerge as we are getting these more expensive markets, right, that make the markets more accessible. And so just as well, keeping up with that, as well as like shorter duration contracts, right? Like those are more volatile, but they're also much, usually less expensive than longer dated positions, depending on how you set it up. So we're seeing people adapt to these more expensive conditions. But yeah, this element of product indifference is one way to kind of get around that, where we're really just looking, with liquidity as the foundation for volatility and the kind of price that aligns best with your goals and your sizing, right?
100%.
Mm-hmm.
Cool. So then if we go to the next slide. So if we are, kind of like as we talked about a little bit with the wings, so adding those wings is one very effective way to kind of control position size. You have a lot more control over your position size when you're changing your long delta compared to changing your short delta. I talked about that yesterday, where changing your short delta doesn't change your buying power a ton, but changing that long wing width makes a very big difference. But if you wanted to trade undefined risk strategies in a smaller account, what can you kind of do, or what kind of strategy that can you adopt to sort of navigate these more expensive markets? And spoiler alert, the key is volatility, right?
Always is. Always is.
Often is. Not gonna lie. So let's go to the next slide. So for both high and low IV underlyings, using a defined risk strategy will cost some credit compared to an undefined risk strategy. But what you see is that, you're collecting significantly more credit in the high IV condition. So when you're looking at ROI, like how much can I potentially collect versus the capital that I have to put up? In the next slide, we're going to look at the capital you have to put up. In those high IV conditions, you're collecting significantly more, right? So your profit potential is higher for, per dollar that you have to put up. So, right, that's like a big part of it, right?
Yeah, indeed.
And then when we go to the next slide, this is actually quite interesting because of how the buying power reduction calculation works. Typically, when IV increases, the buying power requirements for an undefined risk trade actually goes down. Not always by much. Here we're comparing like Uber and Rocket Lab, which are about the same underlying price. But often what you see is that when implied volatility goes up, your buying power goes down. So you're collecting more in credit, right? But you're also putting up generally less capital, although it obviously, depends on the conditions. So when you're looking at ROI, you're actually, being a bit more capital efficient, you can say, when you're trading in high IV. So that's like one kind of other way for getting around, these more expensive markets is waiting for vol to kind of pop. And then that, allows you to put up a little bit less buying power and then collect more in potential credit.
Yeah. And I think some people might be like, well, how is this possible? You have a high IV product that gives you more flexibility. Well, what is implied volatility? It is the implied range of where that stock can go. So with Rocket Lab's 1 standard deviation strangle, you're getting much further away from that $65 price point versus Uber with a low IV reading. You are much closer to that stock price with that 1 standard deviation strangle. So I think weighing that and then also weighing the cost of defining risk. Like for me, I don't like to sell premium unless I'm getting 20% return on capital, regardless of the strategy. So that also influences my decision to buy a wing. And really, that's also related to implied volatility. If I'm selling anything in Rocket Lab, I know I'm getting 20% return on capital. But a lower IV product, if it's 25%, 30% IV, I know I have to look because it's going to be tougher to get that return on capital because you're not picking up as much premium for that notional risk, and you're significantly closer to that notional price relative to a higher IV product where you can get further away more easily.
Right. That's exactly right. That's actually kind of an interesting, non-intuitive thing. But yeah, because of how the buying power reduction calculation works, when IV goes up, your expected ranges also go up. So there's a couple different, it's actually a pretty cool calculation. If you ever want to look at it at some point, maybe we'll do a segment on it. But because that expected range goes up, and we're looking at the probability, or I would say the expected loss of like a strike breach, for example, that underlying price is so much further away from your strikes at that point that it actually, in a lot of cases, causes your buying power reduction or your capital requirements for the trade to go down when IV goes up. So that is one other strategy for smaller accounts, which is waiting for IV, which you can, measure with IVR or IVP to kind of be relatively elevated, right? And so that usually has like lower capital requirements. It does have, you want to obviously be mindful of the, the risk of the position when you're putting that on. But just from a capital requirements perspective, it tends to go down while the premium that you're collecting tends to go up, right? So it's just from an ROI perspective, a bit more efficient, which can be, beneficial potentially for smaller accounts that are a bit more capital constrained.
Absolutely.
Mm-hmm.
Yeah. And then I think I got some takeaways.
Sweet. Okay.
So markets have gotten significantly more expensive over the last 5 to 6 years, which can make it a bit more difficult for traders with smaller accounts or people who are more capital constrained to navigate those markets. So defined risk strategies are, adding long wings to your short wings are a pretty common way to control position sizing, but that comes at the cost of credit. It comes at the cost of pop. And then in addition to that, depending on the price of the asset and depending on the pop that you're trying to get, it might not reduce the position size sufficiently for you to be able to comfortably trade it. So that being said, there's a couple different strategies for kind of getting around this. One is product indifference, really just looking at the underlying price and the volatility rather than the product itself, noting that liquidity is a very important foundation for that. And then in addition to that, trading, when, short premium when, high IV conditions sort of appear, which tends to reduce the buying power requirements based on how the calculation is done and then offer more credit. So the ROI, the credit to buying power ratio, tends to be a bit more favorable for smaller accounts when those conditions emerge. So just a couple different ways to sort of navigate that, as well as maybe some of the other ones we kind of mentioned. But yeah, that's all I got.
I love it. Thanks, Julia. Appreciate it as always.
Thank you, guys.
See ya.
Peace.
Later. Yeah. What a great segment, and that is the name of the game. High IV products in a lower IV or lower account size. You can always find opportunities in that $20 to $50 range for certain stocks. But we're gonna take a quick 90-second break. We got Gus on the other side of it. You're watching Tasty Live.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks,
options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Welcome back, everyone. We got E-minis and NASDAQ ripping higher, and we got some movers on the move, which behooves us because we've got Gus in the room.
Hey,
Gus, how you doing?
Doing good. Yes, let me address the elephant in the room. There was a shaving mishap with my mustache, all right? You can save your comments. My hand slipped. We have some asymmetry going on. I look like this for the next 3 days. But yeah,
I didn't even notice it.
Oh yeah, you're on the good side of me is the thing.
I don't even notice it, man.
We had a bad
There it is.
Yeah, there's the close up.
I still really don't even notice it like
Read it and weep, people. Anyway, we got all kinds of interesting stories. Yeah, the production telling me they can see
I'm not
it. There we go.
zooming in. See, a friend of mine told me once upon a time, you don't point out, only you notice the mistake just because of you don't even see.
I know,
nobody,
nobody perceives you, but I don't care. Sometimes your hand slips a little bit. These things happen. We're all human.
It does, yeah.
Anyway, yeah, we have all kinds of interesting stories in the docket for today. Kicking things off, we're going to talk about our old friend Jeffrey Bezos, who has filed to offload $4 billion, count them, Amazon shares, about 15 million shares in total, 4.1 billion to be more exact. There he is with his beautiful plastic wife. But yes,
you can get one too.
It's true. But yeah, driving Amazon shares downward on the news there. There's lots of speculation about why he might be doing this. It seems pretty cut and dry to me. Amazon at all-time highs. Might as well take your $4 billion cash and, I don't know, buy another yacht or go to Monaco. I don't know what they do. But yeah, so it's not nearly his entire position, obviously. Amazon shares up 23% on the year, which is doubling the gains that we've seen in the S&P 500. So I think this is just him sensing opportunity and jumping on it. But obviously dilution risk, as this is essentially 15 million new shares being issued into the market for all intents and purposes.
So was this like a transaction that was already in place? I mean, probably, right? Like something he had already had set up.
The filing came Monday after the close.
Okay.
So it is last 24 hours, but I don't know how long he might have been planning that for when he filed it and it just hits the public.
Yeah.
But this did break in the last 24 hours. So I don't know. Good for Jeff.
Yeah.
I was wondering how he was going to afford to eat next week. So good.
Yeah, right.
I'm happy he got that figured out. Next story we have on the docket, the White House is set to meet with the 4 largest AI companies right now about the regulatory environment, potentially putting some new regulations in place. That includes Anthropic, OpenAI, Google, and Microsoft is the 4th.
Yeah. Can we back up one, though? Let's back up one.
You want to go back a picture?
I mean, just about everybody is smiling and happy. Look at Bill Gates. Look at Bill Gates' face. This dude.
Sam Altman.
It says it all.
Sam Altman was a little confused over there in the corner as well.
Yeah.
But yeah, going to be meeting to discuss the regulatory environment. And the priority here is the government wants to approve new AI models before they are released. So that's what the government is pushing for. The AI companies are obviously going to push back on that. And I don't know. It's when
there you go.
when asked, if I want to take the side of the government or corporations, it's kind of a lose-lose, I feel like. But I do think I lean in the corporations' direction on this one, simply because does the government have the people to even properly scrutinize these new AI models anyway? Because Meta and OpenAI and all these people, they're giving engineers larger signing bonuses than the NFL. We're talking about $20-30 million signing bonuses for some of these engineers. That's the budget that it takes to get really high-level AI employees who can actually provide this type of scrutiny. I don't think the government has them. So if the government wants to, do their own guess and check and make it take 3 months longer, I'm sure, for these models to hit the public, okay, whatever. But I don't know that they necessarily have the expertise in-house to make that happen. And if they do, my tax dollars are paying for it handsomely. So.
Yeah, it's an interesting question, but I mean, I think I would have to agree with you that the government likely does not have the people in place to be the oversight or manage the oversight of that. But
one would think, but
yeah,
I don't know. I do appreciate them wanting to do some kind of regulation here. It's a scary environment. All this stuff unchecked. These models breaking out and hacking other websites. Yeah, crazy town. Third story I have on the docket for today pertains to Polymarket. They are in talks to have another fundraising round at a $20 billion valuation, rather substantial. There's talks of an IPO in the next year and a half-ish as well. Timelines are still murky at this point. The company reported in late June that their annualized revenue was, quote, well above $1 billion. That's as specific as you have to be when you're not a public company. But yeah, $1 billion in revenue, $20 billion valuation really sounds pretty fair. If you ask Palantir, the valuation should be something like $300 billion on $1 billion in revenue. So yeah, I don't know. Good things happening for Polymarket. Prediction market space ever expanding. I'm not surprised at all if we see Polymarket or Kalshi go for an IPO sometime in the next 2 years. Feels pretty logical. But obviously, this is an ever-changing regulatory environment as well. Should a less favorable administration, perhaps one that doesn't have a son on the board at Polymarket, come in and take the White House, we could see things change dramatically for the prediction market space.
So what's funny about this is that literally, less than a week ago, we heard about how New York State is suing Kalshi, and Kalshi's valuation was about $20 billion or somewhere in thereabouts. And I think the state of New York was suing them for $36 billion. So basically, they're trying to bankrupt them. But clearly, Polymarket saw it, is like, well, they weren't even at that evaluation. They saw that and they're like, let's do a funding round for $20 billion. It's not that hard. It's like the NFL, right? As soon as a team gets bought, guess what? Everybody's value goes up. And that's just kind of the way the game works.
Yeah. It's like, it's the same with housing too. It's like house sells near you for way more than you think. All of a sudden your price point's significantly higher.
Yeah.
That's astute. And speaking of Kalshi, that's the next topic. We're going to roll straight from Polymarket into Kalshi. We're talking about all of them, pretty much viewed as perfect competitors in the eyes of the average consumer, I would think. But Kalshi is taking even further steps to prevent insider trading. They have now partnered with a compliance technology company called Comply. I had not heard of this company before. To prevent insider trading at private companies is the idea. They have existing partnerships in place to try to prevent insider trading within the government, but this one specifically is targeting companies, financial firms, anything of the sort where people would have the ability to insider trade, be it earnings reports, executive hirings, firings, whatever. There's lots of markets for these things at major companies. So Comply supposedly going to help with that. Comply currently works with 5,000 primarily financial firms, and they will be adding Kalshi's prediction markets trade data to their regulatory software. So might see some flags coming through for insider trading at some of these companies. Kalshi, this to me is Kalshi saying, please don't regulate us. Please. We're trying so hard. Because I think that's such an easy talking point for anybody who wants to regulate against Kalshi, try to work these things out, is that it's way too easy to insider trade, which is something I agree with. We've seen this happening in politics a lot recently. I know just leading up to this midterm, there's already been 3 people who have been convicted of insider trading on Kalshi specifically. On various things. So, and here's the thing too. So they'll say insider trading. Some of these people bet on themselves to win the election. And it's like, you know what? We should let them do that. I think it's fine to I think it's fine to bet on yourself to win an election. I don't think it's okay to bet on yourself to declare your candidacy, which is what happened in a few of these cases. But if you want to bet on yourself to win, I've been saying this. Aren't UFC fighters allowed to bet on themselves to win? Yeah, I think sports should be letting people bet on themselves to win. Why not? Let's do a little more competition. Politics can be the same way.
And they do bet on themselves on the regular. I'm betting that you're going to grow the mustache back at some point in time. Although somebody in the chat said we must have a brown Sharpie in the office. That's what they said. So.
Yeah, we need a
a maroon Sharpie.
We need a red one. It's got kind of a hue to it.
Yeah, well,
maybe I'll just put on a big comical fake mustache.
Dude, you're still looking good. I didn't even notice it till you said it. But then again, I don't go around staring at dudes' faces, so that's just kind of how I.
It's true.
Yeah, I'll never forget. Back to the insider trading thing. There was this sportscaster, and it was like an afternoon baseball game, and they were scanning the crowd, and they were like, "Look at these fine young men working on their laptops as they're enjoying a nice game." I'm like, "You're so out of touch. These guys are gaming these markets.
Yeah,
they're working on increasing their profits by seeing what's happening before it's listed."
Yeah.
I know there's a video of I think it might be Jeff Gundy calling a college basketball game. It was when maybe 2023 March Madness, Furman had a crazy upset in the first round as like a 14 seed or something. But there was like a crazy Furman had to score like 5 points in 10 seconds at the end of the game to win, and they did. And he looks like somebody who just lost a bet. It's like one of the classic things. Like he just stunned silence, and he's supposed to be on the commentary.
Yeah.
Kevin Harlan's next to him, like, "Oh my gosh, this is the greatest thing I've ever seen." And Jeff Gundy's just like.
Yeah,
that's great.
Well, as we close out, sports are really exciting here right now in Chicago. Obviously, we got the Bears coming up. You got the Cubs and Sox making moves at the deadline. What? That's really exciting stuff. Yeah. I mean, you just can't beat it. Obviously, we know we got a young dude in the Bulls. This is a great time to be in Chicago.
Yeah, Caleb Wilson, he's going to be good. We got Caleb Wilson, Caleb Williams combination.
I've already confused them.
I know. It's going to happen a lot more.
Yeah, it's exciting times for sure. But Gus, appreciate your time as always. And just a few days from now, we'll just brush this aside, the old mustache.
Yeah. 2 days. Give me 2 days.
Yeah. Like you said, Hangover 3, just forget about it. Just forget about it.
Incredible. Well, there's a tornado siren going on outside, so I think that's our cue to get on out of here. But E-mini's up 90, NASDAQ up 600. Crazy day in the markets. Keep joining us on the YouTube channel and tastylive.com, throwing those trade ideas, questions, and funny comments. Of course, we'll have the production team pull them if they meet the requirements. But you've got 3% match for new Tasty Trade accounts. If you want to check that out, tastytrade.com/bringit. It's the new promo, up to $3,000. So definitely check that out. But we're going to pass this over to Chris and Liz on the other side of this break. You're watching Tasty Live.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
So you're an active trader, looking to increase your return, decrease your risk, or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
What is theta? Options lose part of their value over time as they get closer to expiration. That's why they're called wasting assets. Theta is how fast the option's value changes in a day, not taking any other factors into account. Way far out, an option's price doesn't change as much as time passes. But at about 60 days till expiration, the time part of the option's price starts falling, and at around 45 days to expirations, it starts dropping much faster. If you bought an option, you'll feel time decay pushing down on that option's price. If you sold the option, though, time is on your side, and keeping the credit from the opening trade becomes more likely. Even though options lose their value over time, Tasty mechanics say to exit the trade near 21 days till expiration. Remember, gamma risk gets stronger in the last several days, and stock movements will have more of an effect on options prices. Again, theta is just the rate at which options lose part of their value. Pretty simple.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1, and Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario, or something that would give us pot odds to stay in.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
We are back. You're watching Tasty Live. It's still Tuesday, August 4th. This is Confirm and Send. Liz Deerking, Chris Vecchio. How are you, Liz?
Number one, you're in great shape, because if I would have run up and down those flights of stairs, I would have been breathing a lot heavier than you are right now. So you got a gold done.
60-minute hitting hills, knock out a quick 20 miles in an hour. You build up some stamina.
Are you a Peloton?
I am.
Who's your, okay, we can talk offline if you want, but who's your favorite teacher?
I'm indifferent. I actually look for just the time, the specific class that I want to take, and then the music choice. And so as long as the music's there, I need something like 120 beats per minute, usually, to be where I want to be.
I feel terrible. I don't know her name. I like the British girl who always signs off with, and the best hour of the day, done and dusted. And that's how sometimes I used to sign off.
Maybe that's Hannah.
What's her name?
No. I'm thinking of someone different then.
Yeah. Do you love Peloton? I'm gonna have to find you on Peloton. I'll friend you, Chris. I'm coming to find you.
Find me. We can do a session together. Yeah. No. It's. I'm finding that I'm working out early in the morning these days, given the kids now.
Yep.
It's not fun.
My alarm used to go off, and now it still does because I'm an addict. But 4:45 a.m. I would open up my garage door, and 7 women would come in and work out with me. 4:45 a.m. Now we don't have to do it that early.
I'm not there yet. And also, like, if I had 7 women come over at 4:45 a.m., my wife might be have some questions about that situation. So maybe in the future. But hey, Liz, look at us. Can you believe that we're here? 77.17 on ES. 4 days ago, we were talking about 7,300.
Did we hit? We crossed all-time highs, right? Yeah, with that.
We did, both in ES futures, both in ESU6. If you happen over to SPX, that happened a little bit earlier today. Now 76.89 here. We were talking yesterday, Liz, about the seasonality. Volatility goes up, but it's not a bad month for stocks per se. August 0.84% for the S&P, 1.3% and change for the NASDAQ. You've covered that in 2 days here, Liz. Month's over.
So what bothers me the most, and it's just because of who I am. Can you go to the VIX? This is bothering. So the VIX is only up. It's only up a little bit. And at some point today, I believe it was red. So if you take a look at that, with the SPOOs up 1%, we're up almost 90 right now. That the volatility has barely ticked up. Or I mean, the vol is up. We're green and green, which is a bothersome thing.
Yeah, I mean, yesterday the market had a big move higher, and I was asking TP. I asked Jim Cresson after the our new Tasty Crumb segment. Is it somewhat interesting, or does it raise an eyebrow that you have the stock market up so much and the VIX was only down a little bit, like 29 cents, I think, yesterday?
Yes. Well, we're not down today. We're up.
No, we're not down today. We are up today. It's interesting. It's almost like folks are panic buying to tap it. But like that, just the semiconductor volume that we saw, the market loves hunting for over-leveraged names. We've seen this so many times before in history. Long-term capital management, FTX, MF Global, all those guys' positioning was ultimately right, but they were too leveraged. And so once they got knocked out, the market bottomed and bond yields fell, or crypto rallied, right? FTX being the most famous recently, where literally the day it goes under is the day that Bitcoin bottoms. And we haven't seen those prices since then. So we get the news last week. Semiconductor leverage gone, Liz. 4 straight days up. We haven't seen 4 up in several months, actually, since the end of May. But I think the scale of this rally is what's most impressive. 400-odd points in 4 sessions. This is a very quick turnaround.
And it is a very quick turnaround. And so what are you doing with your position?
I'm riding this thing into the sun. I earned this. Are you kidding?
So with the people in the chat were saying, close it yesterday, but you held it. Good job. You had diamond hands, and you're still in it.
Well, the market was looking like it was breaking out, right? And so there was that was different. It wasn't pulling back in from the consolidation. That was different. You saw VIX breaking down. So there were some things to kind of just, let's be patient and wait another day here or so. I have received questions about how I've been handling the longer term ESH7 position that I've been managing, because in, I guess it was April, I suppose, we were looking at studies, Liz, and we had this 7 days up, 7 in a row. We covered basically 10% over the course of 10 sessions, which historically does not happen that often. But the stat that had jumped out to me was, if you look back over the past 30 years, 19 of the past 20 occurrences in which the market had strung together at least a single 7-day winning streak. The rest of the year's average return was 18.8%. So I didn't do much thinking there. All I did was go out to the end of the year. I added 18.8% to where the market was at the time, and I got long the 8,000, 8,200 call spread, which just, if the market's going to do what it usually does, why not reach there? So this position's been ebbing and flowing. I have zero intention of cutting the bait on this, taking 50% profit, doing anything.
What did you
until
pay
we get
for
to that 8,000 strike?
What did you pay for it?
Oh, gosh, that is a great question.
You did it a while ago. You've been in this position for a long time.
Let's see here. I have not checked that in some time. ESH7 here is going to be $28.50.
It is now trading for about 80 is what I saw.
Now I could sell it off for $83.
Okay. Yeah.
So there's no reason to change, right? You and I were talking recently, like, what do you do when a position's getting 50% of the money? It depends. If you're short premium, you take the money and run. But if you're long calls and they're out of the money and you still have a lot of time on your front side, let the market keep doing the lifting for you.
And so, yes, 100%. Sometimes I'll look at like butterflying something off, maybe sell the additional, but you don't want to do that. Only because then you need it to pin. You're bullish. You want it to go through your long call.
Yes.
Yes.
And we are making very nice progress there in the past 4 sessions. This happens every single time Ilya goes on vacation, by the way, Liz. I go on vacation, the market falls. He goes on vacation, the market goes up. Like, it's an inside joke between us for, I don't know, almost 19 years at this point. And sure enough, he goes on vacation last Tuesday, and the market has basically been up in a straight line since then. So
I love that we can blame it on Ilya. We'll blame it on Ilya.
Blame? I've been long. I'm up blaming him for everything. I'm thanking him.
I'm not. Yeah, we can still blame him. Hold on, let me see.
That's fine. Okay, he still gets blamed.
So I have, oh, never mind. I'm not anywhere near it. There was a huge volume print that went up, but I have 16 days left to go, and it's pretty far away.
Liz, I guess the question is, when you've seen this kind of gain over the past 4 days in something like the NASDAQ, I know that there's the contrarian instinct in all of us to think too far, too fast. Is that something that you're feeling right now? How do you examine this market now? Make any adjustments after this? Just, it's really been a face ripper.
I'm the VIX is what's my tail. This is my cautionary tail right now, where they're both green because they're supposed to be trading inverse, right? So they're not. So with the VIX up and SPOOs up as much as they are, that's a cautionary tail for me. I'm not saying I'm doing anything, and I'm not knee jerking. I'm not hitting a close all button. I'm not trying to take, but I'm taking my profits. I'm defining my risk. I'm going to be cautiously optimistic to the bullish side, right? So, but it's going to be baby steps. I like defined risk now because I think that at some point, no one can be surprised if it was too far too fast. No one.
No one should be surprised if it's too far too fast. Yeah, I definitely hear that. You know, we'll have a shorter session here because we had a great little segment at the top of the show regarding, well, we had Kevin on from NASDAQ. So confirm and send is a little bit shorter here today. Let's go over to confirm and send. Actually, before we get there, there's a little product update from the CME that I think is worth sharing. Starting August 24th, it will come into Tasty Trade soon after, but kind of like how you have the gold products, GC, MGC, and 1OZ.
Yes.
MGC being a 10th of GC and 1OZ being a 100th of GC. They're going to have Nano coming out on August 24th. So you'll have your ES, you'll have MES, which is a 10th of that, and then you're going to have your Nanos, which are going to be 100th the size of your actual ES contract. So it's going to be an interesting scalping vehicle. I personally like using 1OZ as a scalping because it's just so liquid. I can get in, out, trades buck for buck, whereas, S&P, ES can be a big contract. So that might be a new thing for retail traders to wrap their heads around.
And that's August 24th, you said?
Yeah, I see the CME alert here today, starting August 24th.
Yeah.
E-Nano Equity Index Futures with 23-hour access moving forward.
That's, I like that. And that'll be fun. Oh, yeah. I like when new things come out.
Yeah, new products to the market. And quite frankly, for retail traders, right, one of the benefits of fine-tuning your overall exposure is that ES is a huge product. And MES can be big for particularly newer traders.
Yep.
So getting something a little bit smaller in there so folks can dip their toes in. I love going through these posts, new traders on social media who are like, I've been back testing the strategy, blah, 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 paper trading it. How come it's not working out when I put it into real deployment? It's like there's a lot of friction in the market. There are transaction costs, there's slippage, there's all these other things that your paper trading doesn't account for. Yep. So dip your toe in the water, experiment. This may be a good way to experiment.
So your scalping vehicle, you don't use options. You can just buy it and sell it because it's small enough, right? With the OZ?
Absolutely.
Yep.
Thank you. Yes. Okay, so confirm and send. Send your questions in. Research at tastylive.com. Research at tastylive.com. You can also put them in the YouTube chat. So if you're on the platform, come over to the conversation. Tell us what you're thinking about these markets. Our producers take the 4 best questions they find, and then they give them to me and Liz, and we figure out what's going on here today. So Liz, better late than never. Let's get to the questions.
Let's jump in. Okay. Do you want me to go first? Do you want me to read it to you?
I'm going to actually ask you this because it feels like this is a good question for someone with encyclopedic knowledge about the market. SpaceX reports its first quarter ever as a public company tonight. No earnings history, no track record of how it reacts to a print. When there's literally no precedent to reference, what do you anchor to when you're trying to price that risk?
You honestly have to just trust. I mean, not trust. Trust is the wrong thing because it can go in any direction. But there's a lot of people playing in SpaceX right now. So there is a lot of people. It's a liquid product. So you look at SpaceX right now. Let me pull it up. Well, so I'm looking at the same thing. You've got 37 million shares that have traded. You've got a very, very tight bid ask for the stock. So you've got a lot of players in the game. And when there's a lot of players in the game, I think things are pretty efficiently priced. Now, that being said, earnings are the wild, wild west. Whether or not there is a history of earnings, I don't think that matters either way. I know a lot of times you will look at the seasonality or the history of what they happen to do, what it happens to do. I think earnings events are like toddlers. It's going to do what it wants to do, but you're going to get paid right now to take that risk because it's never been done before. You've got a 231% implied volatility in the 3-day. 231% implied volatility. So that gets you all the way to, you're selling the 138 right here. So that's 20-point move in either direction, and you're getting $3 for it. That's getting paid to play.
Yeah, I mean, I'm looking at the defined range here, and just this being an AI company, how many times have we seen this recently where one of these AI-adjacent companies has moved outside the expected move? So I'm partial just as that as a top layer. There's no history here. what have comparable names in the space been doing this earnings season, right? And there's not many companies out there like SpaceX, Liz, so that makes it even harder to price because how many IPOs have we seen like this? Frank chimes in from the top rope that he has not seen many IPOs going into their first earnings reports like this specifically, and now that his comment just disappeared, he says he's not sure there's ever been as much options open interest in an IPO as there has been in SpaceX right now. I go back to the short float here, Liz.
Well,
right?
they broke the mold when they put this SpaceX options in, right? The NASDAQ bent the rules. Everybody bent the rules to get it out fast and get it out furious. So I don't know. I don't know what's going to happen with this. And there's if somebody's asking what they think it's going to do, no one knows. I know what I'm doing. I'm staying the course. I'm actually a little bit more durational in this than I have been in the 3. Like usually for earnings, I play the 3-day. With SpaceX, I've been acquiring, and Frank corrected me in this. Acquiring meaning short. When I say I'm acquiring, I am shorting puts, meaning that I am long. So I've been selling puts as it goes down, then I've added another. I'm at my position limit. So I've got in the money puts in SpaceX. I'm fine with that because there's so much juice there that I can take it farther out in time. I'm not playing for vol collapse. I'm playing for an up move.
Curious, is this a situation where the Jade Lizard fits?
Yes, the Jade Lizard would fit here perfectly because if you're afraid of a rip your face off rally, then you won't lose any money with the Jade Lizard. So what you can do, like Chris, if you wanted to do a $2 wide Jade Lizard, so you got to bring it in. I mean, I would go to the 38.40, 138, 140.
Okay.
Because what you're doing is this is the expected move. You're right outside the expected move. What are you getting there for that? And then you're going to sell a different put. Go down until you only get $2.
That's what I was looking at the 100. 99 is actually $2 right now.
Yeah, or you can even take it down until you're getting $2 total collection. Keep going to 198.
97.
Yeah, there you go. You want to get just over $2. So this is what a true Jade Lizard would look like. Your break even is going to be at 96, and you're getting $2 6 days within there. It is a decent Jade Lizard candidate, and it's easier to do it before the move than after. I know Palantir. People were asking me if a Jade Lizard made sense in Palantir. Not after the fact. Before the fact, yes.
Sure. I mean, the reason why I brought that up is because I'm looking at the 96, $22 away. SpaceX could obviously do that in one session.
Yeah.
But when you're setting up the parameters of a Jade Lizard here, right, this thing could be a little bit of a bounce higher. It could be a little bit of stability higher. It could be a rip to the upside. Your risk obviously is capped here.
Yeah.
What makes this so interesting, I keep going back to this. I mean, this is the first time we've seen an earnings report from a company with this kind of interest, and the short interest is just absolutely through the roof right now. So I'm partial to the idea that this thing is going to move, given how much it's been hammered. It is like a coiled spring, and if there's going to be a big directional move, it feels like the asymmetry is to the upside right now. So I'm personally not looking for any vol here. I'm not playing this. I'm going to probably bounce back and forth all day long, but if I do anything, I might just simply look for a bit of a bouncier, go 140, 135. Do I do call butterfly? Do we want to do a call butterfly here for this today?
So I don't. In my opinion, I don't want to pin a strike. So that's just it. Is with SpaceX, you can do whatever you want, and then the options are priced that in. But pinning a strike in SpaceX seems insane to me. It's either going to go up and fly through. Pinning the strike is going to be tricky.
Yeah, we're gonna have to keep an eye on this over the course of the day.
One thing I don't like, Chris, when I was looking at this, now I'm already in it, and I know I'm short put, so I should have been more attuned to this. It's a lot of capital. When you had that, I forget what put you had in there. You were using $4,000 for that put. Now that, to me, common sense, risk reward, it's a lot with just a naked put. It's $4,000, right? Yeah, that's a lot for a $100 product.
It's a lot. It's a 231% IV.
Yes. No, that's a lot of capital that it's holding up. Not a lot of credit. It's holding up, in my opinion, too much capital for your reward.
Well, I think about our viewers. We know what our average, account sizes are around the retail universe here. So if you're like a more experienced trader, it's going to be, mid 5 figures. If you're a newer trader, it's probably going to be under 5. You're just dipping your toes in the water after all. Liz, if you're a new retail trader, first off, you shouldn't be swimming naked in this market at all. And if you feel so inclined to, going in SpaceX, where that could be all of your buying power, half of your buying power, you're going to risk all of your buying power for $220.
Well, in the buying power, to me, if you're a newer trader and you're just starting out, some people might want to do this, but what happens when the wheels fall off? This will be your only position in order to defend it. If it goes down to 100, you're stuck holding this and you're using more buying power.
And you are trapped. Okay, Liz, next question here.
Okay, I'll read it. We'll talk about it. Palantir just posted 93% revenue growth, and the stock is still down on the year, even after a 16% jump. When the numbers are that strong, but the stock has been that weak, does the options market give you a read on which one wins?
I mean, the question is really, what are the options telling us, right? What's the option market pricing in here? Are we seeing continuation or exhaustion after this price gap? So, Liz, if the call skew stays bid, right? If longer dated IV starts holding up, put skew isn't steepening on the rally here, then the markets are probably giving you a clear read through that we've seen a little bit of a shift here, perhaps to the upside in Palantir. That's the other side of it, though. Like if we see front week IV collapse, calls are getting sold, downside skew rebuilds immediately, then it's probably just a squeeze of sorts. So that's what I'm watching for today in Palantir. Like, will we see that downside skew rebuild, or is the market just going to keep on an aggressive call skew for, say, the 21st? And go ahead.
Can you do a quick analysis of how you're going to look for skew? 17-day option, you're going to go equal distance up, equal distance down, and see those prices of those options, right?
Right. So we're basically trading 159.44. The closest strike that we see at 17 days is 160. So I'm just going to go $10 wide down to 150, up to 170. What's the ask? 425 on the call versus 385 on the put. So there is still call skew in the market here, Liz, right? This is not like a market that has gone out and said, no, this was the rally, things are overdone. There is still a little bit of a tilt to the upside. So I don't think necessarily it's 27% higher now. Last night when I checked, it was only 12, and this morning when I logged on, it was 15, and now it's 27. So clearly the market is fine with this running. I don't see any indication at first blush that this is looking for a turnaround or a fade.
No, and I mean, hit the chart real quick if you don't mind. So it's not even as if it hasn't act like you've been here before, right? Because it has, and not too far long ago. It's been here. So I think, I don't know, but you are getting some call skew, and that's how you can kind of say what the options are pricing in. We don't know which. That means the options are pricing it. That doesn't necessarily mean that's the way it's going to go.
No. Question number 3 here, because we are running out of time. What actually happens to my short positions if the company gets bought out or does a split? I've never dealt with corporate action mid-trade, and I have no idea whether my position just breaks. Liz, is there something that we should be doing here? But
We'll answer this quickly. There is no gaming of the system, right? So I will have a tendency to get out of, they become non-standard options, which then I prefer to get out of my options before they become non-standard because some of the liquidity dries up, but there is no gaming of the system. They will be split adjusted according to whatever corporate action is taken, right? So everything will be split adjusted. There is no gaming of the system, but I prefer to exit stage left before that happens.
Yeah. The OCC automatically adjusts the contract so that the options holders and the writers, right? It's not just about the options holders; it's about the underwriters too. They're treated as fairly as possible during the shift.
Yes.
So you're not going to have an upper hand one way or the other. But it is an interesting question, right? In a normal stock split, the adjustment is going to be straightforward, like more contracts, lower strike.
Right.
That's right. We saw this with Amazon, Netflix, a few of these companies. NVIDIA, in a recent year or two, when they've done their splits. The adjustments are made automatically.
No gaming in the system. There is no, and when you're in those liquid products, it's not that bad. But I do prefer. And then they become non-standard options. If you see an option, Costco had a dividend or a corporate action, so you'd see like 100.765. I like standard options.
Yeah. All right, we can go on to the last question here, Liz. Some options have huge bid-ask spreads on their positions. How wide is too wide before the spread eats more than the trade is worth?
There's so many liquid products out there. I would stick with the liquid product. I like pennies. Now you have to understand, SPX is huge. It's liquid, and it's $7,000. So you're going to get more. There's going to be more bid ask between there. But if you're looking at a $100 product, I need pennies. I want them pennies wide.
Let's go over Netflix as an example here. Then we're going out to 3 days to expiration. You talk about pennies wide, $1.16, $1.19.
Yeah, your at money. Nice. Your 72 puts are 70 cents at 72 cents. I'm fine with that. This is a couple pennies wide market.
Right, and we were looking at something just as like an example. I'm going to go to WBS, 17 days to expiration. Liz, like right at the money, we're talking, look at these option prices. No one's trading this first off.
No.
This is not something you want to get into. I call it the Hotel California, as you know. Liz, we are winding down this confirm and send here. Listen, wide markets can easily turn bad trades into good trades. That's why you try to avoid them. And so stick to the tight bid-ask spreads here. The NASDAQ up 2.57% here. I'm going to call the last 2 days just lucky. I feel very lucky the last 2 days because at 10 days to expiration, Liz, the 695, 700 put spread here that we had on the follow account went from being a max loser to something that's flat. And you know what? I don't want this on my book anymore with 10 days to go. So we get rid of you, and we're going to get rid of, what's going on with M&Q here? Hey, we're back above the short strike as well, and this can be taken off. I don't like the structure of this trade anymore, so we will get that working here too. When you
I
get
like
an
how
opportunity
fast you're
like this,
I like how fast you're pressing that button to get out of trades that become scratches. Good job.
they become scratches. We can move on. We can use the capital elsewhere, buy more time, get better risk to reward. But we're back to the midpoint of a trading range. Don't look a gift horse in the mouth. Liz, what an exciting 4 days here. But we have a few more exciting things coming up today. I know after this, we have Gus and Errol coming up. At the top of the hour, of course, we're going to have more live trading, and then the trades of the days coming down through with some research in between. So be sure to stick around. Keep watching Tasty Live. Liz, always a pleasure.
Thank you. Have a good day. We'll see you tomorrow.
Stick around after the break.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
What is going on, everybody, and welcome back to Risk and Reward. We have an exciting day in the markets today. Palantir earnings blew the roof off of everything. We are flying higher, and I'm pleased as always to be joined by wonderful. How are you feeling? What's going on?
Doing pretty well, bro. I seen Palantir earnings absolutely knocked it out of the park. I had seen Chris Vecchio's morning post about kind of what's going on overnight, and when I had seen that earnings, I guess he provided a little bit more volatility and a little bit more excitement with all these the AI talk going around right now, especially since we kind of seen some things slipping. But this overall market right now is all gas, no brakes. I'm doing well though, brother. Today's what, Tuesday? How are we doing so far?
Yeah, doing good.
Good.
Hanging in. This Palantir earnings, it's just so funny. I mean, my valuation concerns just remain and in fact even grow. Like, yes, this is a revenue surprise. The revenue for the year is probably going to come in a little bit ahead of schedule, but man, this company, the valuation on this company is just unreal. And I think it's funny because I said yesterday on air, like, even if Palantir were to double revenue estimates for this year, their valuation, their PE ratios would still be really crazy.
Yeah.
And they have this beat. They post almost $2 billion in revenue in the quarter. And I've seen news outlets throwing around the word otherworldly revenue out of Palantir.
So what do they mean by that?
This is like, I mean, it's good revenue. I mean, it's a beat, but it's not. They didn't double expectations or anything. I don't know about otherworldly, let alone, double their yearly, like I was talking about, in which case I still think the company would be a little bit overvalued. So
right
now with Palantir keeping back up here, I'm definitely looking for short opportunities. I don't know that I want to step in front of the freight train today as it does continue to carry momentum higher and higher. But we do seem to be finding a little bit of resistance here at this 158 level. There's well-documented historical resistance at 160. So I think I am going to be looking to get short some Palantir here. I just don't think that this justifies this much.
I think it's a little over-exaggerated.
Yeah, we're talking about a 26% gain.
Yeah, no, it's nuts.
Because they beat revenue by what, like 8%?
Is it about 26%? That's insane. And that's not even like it's a cheap company.
26%.
Okay.
And it's just this feels like it has to be too much. So we'll definitely be looking to get short by the end of the day, maybe by the end of the show.
Yeah.
But my opening move on the show today is I'm going to go ahead and take off Microsoft for a big winner here.
Oh, there we go.
136 days left on this one. This was a longer term play. I wasn't trying to center it around.
I missed the boat on that.
What?
I missed the boat on that.
Yeah.
Not to cut you out, but man, I missed the boat.
Yeah, no, you're good. I've had this open 96 days actually, so a little while already out of the 136. Sorry, missing my charts here. But yeah, this earnings call and subsequent run up, it's just like, okay, it's time to get out. 96 days ago, 3 months, so that's like beginning of May. So yeah, I got involved at these levels ish. Not quite this far back. Yeah, somewhere right here in this range. Suffered some more drawdown, but finally got off its butt. I kept saying the whole time throughout the duration of this position, when is Microsoft going to get off its butt? Like, it has to catch up with this broader rally sometime. Yeah. Then right as it looks like the broader rally is ending, that's actually Microsoft who comes through to save it and continue to push us higher. So more than content to just go ahead and get out of this one for a very considerable profit.
It's starting to look a little attractive for just seeing how overextended it is with that 4 consecutive day run after that gap up. It's starting to look a little attractive for some short delta.
I agree.
Right.
Yeah, especially like short dated, short delta. Yeah. Like if you wanted to go short into the next,
just a little pullback.
Yeah. I think some pullback is going to come. But at the same time, I don't know. I mean, in this, we're seeing a pretty clear breakout on SPX.
No, we are.
I'll get into that position here in a sec. But I mean, we're well into all time highs. 7,600 just blown out of the water. We're testing 7,700 for the first time right now.
That had to have been like a major bear trap at those lows, because what a reversal, right?
Oh yeah, just incredible coming straight off these lows. I mean, literally 5 days ago, I was worried because my Iron Condor was we were sinking all the way to 7,300. And I needed 74. And here we are with the top side just blown off. To anybody who is in that position along with me, I'm going to continue to hold this through the end of the week. I think through the end of the week, or like 77.50. Like I'm not going to be too ridiculous with letting this get overextended, but I'm also not surprised if something comes through and manages to, just give us a slight pullback into next week, perhaps even into the end of this week. It's just, this is a lot of momentum. I mean, nobody was confident in the AI trade like 4 days ago. And now all of a sudden, we're back.
Yeah,
all the AI companies, all the hyperscalers, everybody's flying.
Even the ETF, SMH.
Yeah. Oh yeah. Everything. And even if even if that momentum is here to stay once again, I just don't fully believe that we can go from zero confidence to full rally confidence.
Yeah.
In this short of a window, especially should any bearish news break regarding Iran or should any bearish news break regarding regulation of the AI space. There's a bunch of AI companies meeting with the White House today to talk regulations. There is surface area to pull us back down a little bit. And now all of a sudden we're in a situation where, even if we got back down to like 75, 50, that would still be a very elevated level, coming off of these lows. That wouldn't be an unreasonable, little drawback before we make higher highs, as we've seen a number of times over the course of this consolidation phase. So we are clean through 7,700 now. So not looking to act too fast here, but also not going to hold this stupid long. If the momentum is clearly here and here to stay, then I will be looking to get out of this. But I think I'm going to hold until open tomorrow at least. I think I'm going to hold through the pain at least that long. And there's really not too much pain to talk about at the moment either. We still have 17 days on these, plenty of protection. $45 to $65 down is kind of where notional value is, kind of where we've been bouncing around all day here. And that's just not that bad. That's just, it's a little paper cut at the moment, despite how far out we are. The elevated volatility kind of keeping everything propped up. I shouldn't say the elevated volatility, but the elevated expected move perhaps is better verbiage to use. But we're still well within the expected move to get back down below 7,600 within 17 days. So going to continue holding this. However, now that we are seeing the momentum return, unless there is something large that I feel like is going to cause a sustained drawdown, should we get the little dip back down under 7,600, I'll be looking to get out of this right away. Not gonna be trying to hold this one to max profit. Just a little bit too aggressive with my time horizon to get a better risk profile. But I don't think it's a foregone conclusion that this loses yet either. We could totally see the momentum get sapped out of the market at any moment.
And to the point that you made, how sentiment shifts so quickly. And I mean, if you go on social media, right, everybody has their opinions. You come on the show, everybody has their opinions. You watch other shows, everybody has their opinions. And when you just see how quickly sentiment shifts, that just lets you know, like, whatever idea you have, you should just allow it to play out, because you're going to hear one thing being said by last week, you're going to hear another thing being said completely flipped on its head over across the next week, depending on what happens in the market. So 100%. And I know the other day I was talking about how iron condors are one of the most boring trades, in my opinion, to trade. But at the same time, I guess that's what's nice about it too, because that P&L volatility is extremely manageable, right? Like, even though we're busting to all-time highs right now and it's testing that call side, I mean, you have so many options. You could roll the put side a little bit. You can keep it the same, keep that width. But at the same time, at the end of the day, you're still banking on, time to pass, and maybe we get a pullback into that zone that you're looking for. So at the same time, I always kind of dog on the iron condors, even though it's probably one of the most common trades I put on the first couple years when I was trading as well. But I mean, they have their use cases, 100%. It's nice that the put side's still gaining value. So
it's basically just, it is just two verticals, more or less.
100%.
So there's all kinds of things you can do. I don't think I'm going to be looking to manage this with a roll. If in a world where my bubble pops and I want out of this trade, it's because there's a lot of momentum, and I'm not going to try to roll to try to figure out where the top of that momentum could possibly be. Obviously, anytime you're in uncharted territory, trying to decide where the top might come in is very difficult to do.
It is.
I'm not going to play that game. Just hoping for the little pullback, or the only other slightly different managerial thing I might do would be just liquidate the call side of this and hope that we continue to hold above 7,400 and then recoup some of that on the put side. Obviously, still plenty of meat left on the bone should I want to just convert this into a short put vertical. So that is an option as well.
100%. All gas, no brakes. As NASDAQ pokes into another high on the day, I know SPX and SPY has kind of been leading the charge there. The volatility finally coming through on NASDAQ a little bit. We've started to see more of that divergence between both of the assets. As you can see, the S&P 500 is breaking through to a new high. NASDAQ trying to follow suit, but still just shy of that all-time high on NASDAQ. So I'm curious if the Qs are going to be able to catch up fully. I'm curious to when we're going to see that tighter correlation between both of those assets. But it is interesting. Before we were seeing this extreme run to the all-time highs, I think a couple weeks ago, we saw one of the largest divergences between both of those assets. Not that it really tells us anything, but it's definitely unusual behavior that I think at least catches your eye on what might be going on under the surface, even if we don't know the reasons for why that might be.
Well, yeah, it's a good illustration of the dispersion that we know is going on right now under the surface. It's it's the rotation. Well, what has caused this drawdown? Obviously, this is not valid anymore over the last few days. But what caused this drawdown was rotation from tech stocks into other stocks, into small caps, into financial institutions. It was a big rotation. And when capital rotates out of tech, that's going to hurt NASDAQ a lot more than it hurts the S&P 500. When people talk about the .com bubble, it's NASDAQ that people are always talking about. S&P 500 obviously did get hurt when the .com bubble burst, but NASDAQ fell, like 80%? Crazy amount. So, NASDAQ is obviously the tech index. And should you see a rotation out of tech, you're going to wind up with NASDAQ her a little bit more. And as we've talked about at length as well, is it RSP? Yeah. RSP, the equal weight S&P 500, it's been chugging this entire time like nothing, because like I said, dispersion, it's rotation. So when everything is equal weighted and the S&P 500 isn't also putting all of their weight into tech companies, we do see that the growth has been constant this entire time. This is a very healthy looking chart on the S&P 500 equal weighted. But when we go over to SPX, the not equal weighted S&P 500, you can see that we did have much more stagnation due to that capital rotation. So 7705.
Yeah,
just continue flying.
Hey, we're chugging on up. What's going on, Big Deal? What's going on, Ranch? What's going on, Nice Boy? Hachi, Darker. What's going on, guys? What's going on, Chris? What are you guys looking at? How are you guys managing your positions? I was just letting Gus know over here. I'm absolutely getting crushed on oil right now. I had put on that. I bought one of the futures contracts on oil yesterday at about 79 flat. And just quick update on the micro crude oil futures. It's a really great way for smaller products to get some exposure to the oil market. You can use /CL, but it might be a really volatile ride. I think MCL gives you a little bit more flexibility in how you might want to manage that trade. And then also, like the example over last night, right? Going to bed last night, we're up over $200 on that contract. I think at around 4 a.m., we're up about 3 something. We're catching a little bit more of a bid. I get out of the shower and we're down like 150, 200. Right now, we're down a little bit over $300. And I'm just like, how quickly the tables can turn with a product like this. So it's nice that it's the micro crude oil product, but it's probably a deeper drawdown that I've sat in quite some time. So it's a little bit uncomfortable. As we sold off to these new lows on MCL on the overall oil products, my USO position just got filled. So I got a little bit more long. Not that I'm trying to add to a position in drawdown, but I do find these prices a little bit more attractive. But on that one, I sold an out of the money put spread. I think I put that in earlier this morning, didn't get filled, but I just saw it got filled as oil takes another step lower. So I'm going to manage that micro crude oil best of my ability, but that's what's causing most of the volatility within the portfolio today. But with that being said, I think it was a little bit more to do. Not that there was a new headline that came out about oil, but I believe it was more so something with the Strait of Hormuz and like things are fine right now. It was one of those kind of sentiments that I think was kind of bleeding into the market to cause prices to fall a little bit more. But I'm hoping to see a little bit more of a pop just because we haven't necessarily gotten a resolution out of the market. So going to put on those USO puts at a better price point now that we've sold off a little bit more. If we take another leg down, I'm going to be forced to cut that crude oil futures position. But managing the risk on that one's going to be top of mind today because this oil market is no joke. I mean, it's so extremely volatile. And if you look at the USO product itself, we got gaps everywhere. Come on, guys, we got to get these gaps to fill. I heard others talking about that earlier today. And I heard some really good points. I heard some really good points being made, like, are the gaps going to be filled? And a lot of times these gaps are getting filled because of the volatility that's being priced into the market. And if those gaps are within that range of volatility, they're going to be likely to be filled regardless if they're on the upside or downside. But I mean, with that being said, USO, or just oil in general, probably one of the more in play, exciting, volatile markets right now outside of the indices and SPX. That feels a little bit like a meme coin. But we're going to see how we manage that throughout the day. I know we got a few hours left. And really not much else to say about that one. Really just trying to manage that one best of my ability. And then, maybe SpaceX can turn things around into the close today.
Yeah,
that's what we got going.
I have some strong convictions about SpaceX as well. But yeah, I mirror your sentiment on oil and your managerial choices, quite frankly. Put this short-dated oil on yesterday. We're probably dead in the water. The frustrating part is that my original thesis totally still stands. Like I could totally still see a world where before the end of this week, some sort of bullish oil news comes out. The relations are breaking down with Iran. Oh, they shot down one of our helicopters. Whatever it may be.
Yeah.
There's plenty that could happen to continue to prop oil up. I think I was just a day too early with getting involved with this one. And should the bounce come now, I'm not sure that we would see that 123 level that we need before the end of the week. But that said, as I said yesterday, talking about this on Trade of the Day, it's $80. That's $80 buying power for a 1.5 to 1 risk profile on that. So should I wind up losing the $80 of buying power? I'm fine with that. That was my whole thesis on Trade of the Day yesterday. I'm okay with being wrong here. Should this be the one time that these headlines are real and this thing actually ends, which I think is very unlikely in a longer term context. I don't know about before the end of the week, but
yeah, I'm of the same sentiment.
But should this actually be the time? Okay. I'm fine with being wrong this time. We've learned to fade these moves. We've made a lot of money fading these moves. And if this is the one time that the move is real and shouldn't be faded, okay, I'll take that on the chin. This is the way these things go sometimes. But again, I mean, yesterday I was saying, we're right at the level, like it would just take one tiny crack to push us over, even just something that makes this look like it's going to be delayed for 2 weeks or whatever would be enough. Those goalposts have moved now. We would certainly need something a little bit more substantial that makes this look like it's going to, sustain for maybe a few more months or whatever. It would be a much larger move to get us to the level that we need now. But I don't know that it's out of the question. And as such, I am going to continue to hold on to this position, currently down.
I like it.
Yeah. I don't know. What is that? 40. Quick math. 140. So
Quick
70
maths.
each. So yeah, we're down 70 out of 80 on each of these. So whatever, we'll keep holding and we'll hope the headline that we need comes through.
I know Chris said 68 on CL. MCL has been the base. We're getting close to buy territory, and the Don is due for a taco on oil. He's due for some comments about erasing civilization. I could see one of those in his drafts right now, waiting to hit it. If you want to send that through already for us, Trump, go ahead and do so. But yeah, no, I mean, that's the point that you were making, and then also the point that Chris is making right here too. I mean, I don't think it's over. It's more a matter of, since I have the futures contract on, I have to be a little bit more mindful about the risk because we can continue to sell off, and the risk that I have on an oil isn't defined risk, so I have to be tentative to that position. But I'm just hoping before it breaches my last level of risk, my risk parameters, I'm hoping we get something like that. So it's like the bullish sentiment remains, but I'm hoping that we can get the move that we're looking for before it breaches the structured trade that I have around oil. So sometimes I think that positioning, it's not that you don't have the same sentiment. It's just that the timing was a little bit off, right? We dipped down a little bit further before we're getting the upside move. And, you can be flexible in your portfolio on how you might want to manage that. But at the end of the day, we're stair-stepping lower here. And the only thing that matters is price. It's like, cool, this can get priced in. Cool, this conflict isn't over. I'm expecting this. At the end of the day, where's price at? What's your risk on your position? And I guess that's how we got to go about it sometimes. I mean, it looks like Frankie and everybody else in the chat is going to go fill up all their vehicles with full gasoline right now and take advantage of that price drop. So
I don't know if they drop at the pump that quick, Frank. maybe here sometimes.
Self-fulfilling prophecy.
Yeah, as a consumer, as an American, quite frankly, I hope that it's over. I don't want us in Iran, but for my position, wouldn't be so bad.
Yeah.
So yeah, we'll see how things pan out there. Let's talk about a winner. Let's talk about Rocket
let's
Lab.
do it.
And this will lead us right into SpaceX earnings as well, which we'd be remiss if we did not discuss. So Rocket Lab going swimmingly. Could not have possibly timed this better. We're up 385 notional right now. This is a 2x1, as you guys may recall. So we just continue to chug on upward on this one. The disproportionate risk profile is rewarding me handsomely here. Grab the bottom on Rocket Lab. Now, management becomes the question. We have SpaceX earnings after the close today, obviously. Did you guys know SpaceX reports earnings after the close today? It's actually their first.
I appreciate the reminder, though,
company,
because that might be the one green thing that could pop in the portfolio if we get some good news. So
yeah, so let's start there, because I think, well, I'll just say this broadly. Rocket Lab is going to do whatever SpaceX does. I don't really see a world where something happens and it's bad for SpaceX and good for Rocket Lab. SpaceX is the market maker in the space sector right now. I don't think that that's even questionable. It would be like NVIDIA having an earnings call and expecting AMD to move the opposite way. It's not going to happen. So when we look at SpaceX, I have found myself quite bullish on this earnings call, I must say.
I like it.
I think, perhaps that's sort of a normie take, but my logic is that things obviously have gone very poorly since IPO, just sliding. Though finally catching a bid today, up 4.5%, almost at 120 at the moment, after seeing lows of well sub 110 in the past week. I think that things can't get too much worse for SpaceX, and I see this earnings call as kind of a free roll for them, because everybody knows their revenue doesn't back their valuation. That's not even the question. It's not a question of whether they meet, exceed. It's not a question of what happens with EPS. Everybody knows that these the valuation is not going to be reinforced by the revenue. So you can throw that out, because if we were going to trade SpaceX based on its valuation, this would be like a $40 stock.
Right.
Okay. So let's chuck that, and then if revenue doesn't matter, if EPS doesn't matter, and they matter a little bit, I'm being hyperbolic here. If they were to have an extreme surprise or disappointment, that would be problematic. But what this comes down to is guidance. Elon, we know the man. He has a little bit of an ego. I don't think he's super happy that his new toy is such a laughing stock in the stock market right now. I think he wants to do anything possible to prop this up especially considering he's the largest shareholder and stands to gain many, 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 many more shares should he complete the tranches that SpaceX has laid out for him, including a permanent colony on Mars with at least 1 million permanent residents. So we're a little ways from that.
That wasn't the incentives, not to cut you, not to throw your thought off, but that wasn't the incentives, the Mars thing.
That is one of the incentives for him to get his
full
pay.
I totally forget we touched on that.
Yeah. You got to do a permanent colony on Mars with at least 1 million people and a data center on Mars capable of 1 terawatt of compute. It's 100 terawatts. That's what it is. Yeah, it's even more ridiculous. He's got to put a data center on Mars capable of 100 terawatts of compute. There's not currently a data center on Earth that can do 1 terawatt.
If he can genuinely get a data center on Mars, that's more realistic and I feel like more effective than sending people to Mars.
Sure.
If we can use up some of the space over there, right, a little bit of the real estate, I think because there's a lot of conversations going on in America, right, with where we're putting these data centers. There's a lot of opinions on both sides of the aisle there. So I mean, that would solve, regardless how you feel about Elon, that would solve a lot of that conversation.
It would, but there are so many questions about how you even do that, how the data is transmitted.
Trust the process.
How the data is transmitted.
That's the only
back to Earth
answer.
in a reasonable amount of time. Yeah, I mean, and like I've said a bunch of times, I am bullish SpaceX just because I buy this. I don't think he would tie his pay package to all of these illustrious goals if he didn't think he could accomplish at least one of them.
Yeah.
And at the same time, Elon, first trillionaire, it's like, even if you're going to think he's not motivated by money anymore, which perhaps is true, the money is basically just a side game to him at this point. But he's motivated by legacy. He's motivated about what he can leave behind. And if he could leave behind a permanent colony on Mars, that would be a giant, quite possibly the crowning achievement of humanity in history.
No, I mean it would.
It would be. It would just straight up would be.
Yeah.
So I think that's certainly on his radar. But
so it's a legend. It's kind of a legend play, or maybe it's because again. Sure. Right, money's not going to satisfy Elon. He's probably wants to do something outside of the box of money, right? I mean, he's the richest man on earth right now.
Yeah, it's about what you can
legacy,
leave
right?
Behind, how you'll be remembered at this point, and that would be a great thing for his legacy. But all that future stuff aside, here and now, I think that Elon has a little bit of an ego. I think that he is sick of his new toy looking so poorly in the stock market, and I think that he knows the things that need to be said to give this some life, even if they're not entirely true. Like I said yesterday, he could say something. We're going to Mars. He could say something, we're going to merge with Tesla. And even if these things are goals in the distant future, I think SpaceX bulls, obviously, but the market as a whole really wants something positive to latch onto with SpaceX here. There are so many holders. There's so many people that bought at IPO that are down right now. There's so many people that have their calls and their leaps. The same thing as me. I think the broader sentiment is that the market would like to see SpaceX go up, at least in the retail space. I'm sure that institutions could care less. I'm sure they're protected both ways. But I just think that there's not much they could say to make things too much worse. It is a real possibility that it goes down, but I just think that the upside is disproportionate here. I think there's so much more that they could say, and I think they know what they need to say to push this up. So I found myself fairly bullish. Going to try to workshop a trade on this sometime before the end of the day. Not sure exactly how I want to try to attack it. But I mean, I'll definitely do something on this 3-day expiration cycle, and we'll be looking for a level like by Friday. I really want to isolate just this binary event because I also think it's a real possibility that they say a bunch of exciting stuff. This gaps up to 135, and then all of a sudden everyone's like, "Wait, all that stuff has been happening for 5 years," and we start a slow sell-off. So I would probably do something centered around the 120 or 125 level, and just be looking for the move up. For tonight.
I like that. I'm hoping for it as well. Chris made a really good point over here in chat. He says. He says, I was thinking the other day, we might not make it to Mars, but our AI counterparts might. They won't need oxygen or food, and we're going to send the robots to make the trip. Big deal agrees. I'm sure some other people probably agree with that sentiment as well. That makes a little bit more sense. It feels a little bit more realistic to get robots on Mars to do the heavy lifting that we as humans might not be able to do yet.
You guys took your mushrooms this morning.
Yeah, I think you did.
Interesting.
I had seen some certain substances spoken in the chat a little bit there. I hear Elon might take certain substances to help reduce ego.
I
know he takes some. Why do you think he takes them?
Why?
Yeah. Just based on,
I don't know about to reduce ego. I mean, there certainly is a lot of credence to the psychedelics reduce your ego thing. I don't know if that's his purpose specifically. There you go. Trade alert. Mike's selling a SpaceX vertical. He's well aligned with me on this sentiment. But I don't know if it's necessarily to reduce ego. If anything, I think it might just be to open his mind up. I didn't think I'd be discussing why Elon Musk might take psychedelic drugs on the show today, but
what is interesting, two people could take them and it could be for completely different reasons.
Yeah, and I think especially when you're somebody as smart as him, because love or hate the guy, he's smart. I can't stand people who say, "Oh, Elon's an idiot. Oh, he started rich."
Elon is an idiot.
These things are true.
He's stupid. He's dumb.
These things are
Come
true.
on.
Oh, he started rich. His dad has mines. Yes, that's a bad thing. Don't get me wrong, but you can't discount something. You know, even if, which this is not remotely what happened, but even if you gave somebody $1 billion to start, could you 1,000x $1 billion? I couldn't. I certainly
Hey,
couldn't.
just let me try. I'll let you know.
It's like there's so
No,
many things
it's
that have
nuts.
to happen, and I think it's something like $10 million was his starting fund or something. That's a much bigger head start than the rest of us get. That's a silver spoon situation. I don't discount any of that. And perhaps if he was worth $100 million, I would say, okay, well, this is all just his daddy, and he managed to grow this money. Big whoop. He's a trillionaire, guys. He's a smart guy. So I say all of that to say maybe the drugs are just because I think if you're crazy smart like that, sometimes you just need to settle your brain down a little bit.
Yeah.
And on the other side of things, when you're an innovator thinking about things as crazy as putting a permanent colony on Mars, opening,
You got to think outside the box a little bit.
helps you think outside the box a little bit. But anyway, that's it's gonna be about all the time we got. I guess we'll leave with that. But yeah, I'm bullish. SpaceX headed into earnings. Gonna do something to isolate this binary event into Friday. It'll be posted in the follow feed when I do. Just need to give it a little bit more thought.
I plead the fifth. Taking that from ranch and shot. Yeah, I plead the fifth. I'm gonna revoke my Fifth Amendment there. I'm gonna use my rights as an American citizen right now.
Yeah,
appreciate it.
I extend those rights to you. You don't have to incriminate yourself, brother. All right. That's going to be all that we got for today. Thank you all so much for watching, taking the time out of your day. We dearly appreciate it and never take it for granted. Errol and I will be right back here, same time, same place tomorrow, 10:30 a.m. Central Standard Time. But before that, we got quite the illustrious lineup coming at you the rest of the day. Stay tuned. Immediately after this, Quentin will be joining me right here for Live from the Trade Desk. We will roll into everyone's newest favorite segment, Trades of the Day. Jermal, Mike, Errol, and then myself circling back at 12:15. Don't miss any of them. We got some good stuff loaded for you guys. That's going to do it for us here today on Risk and Reward. Thank you all so much. You're watching Tasty Live. We'll see you guys next time.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Global markets never sleep. Explore them with Forex. on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
Welcome back, everybody. I missed you all so dearly in the 2 minutes since I saw you last. We have a very exciting segment lined up for you today. I am joined by a man that I go way back with. We were interning together in the trenches in like 2021. I'm getting a page from Mars coming down the pipeline. Quentin Dooley. Quentin, what's going on, brother?
What is going on? What a pleasure to be here with you. I've got to say, we've never done the show before together, so this is really fun. And yeah, you mentioned back in the day, we were interns together in the trenches, and look at us now on the show together.
Full circle moment, yeah.
That's pretty cool. Yeah, and we got Chase here as well on the private client team, which is super cool. And so, yeah, I know how much we've grown within the company. So nice to see. Yeah, what's going on? How are you doing?
Doing great. Yeah, back at the Hyatt House at the Sangamon office. All those years ago.
19 North Sangamon. I think they still have the cherry there.
They do.
I think they still have it.
It's a synagogue now, though.
Yeah, I think so it's like the West Loop Chabad, actually, which is really funny because I'm like sort of involved in that community a little bit.
Oh yeah.
And so I'm like, oh yeah, that's our like old office with like the cherry on it. And they're like, oh, that's you guys? And I'm like, yeah, that's us. But yeah, really funny, part of the tribe.
Well, let's dive straight into things. You got your ear to the ground. What's the skinny recently? What are the customers calling in about? What's giving people some trouble?
Right now? What's been so interesting recently, especially like in the past couple of days, because the market has just absolutely ripped to the upside, right? I don't think a lot of people were expecting that based on like customer sentiment. I mean, I will say when you hear things from customers, it's always usually like people are like, oh, the market's going to crack today, it's going to crack tomorrow or something like that. But you really felt like an overall sentiment from a lot of the customers that like, it's been a lot of choppy back and forth. Choppy back and forth just means down is what the customers were saying. And so that was just clearly like so opposite. And then in the last 2 days, because I like to look at the SPX expected move every single day, just see what it is. And then, are we going to stay within that or exceed it? And then I looked this morning and yesterday, it was like 25 to 30 points. I mean, that massive green bar that you see on the chart is just so like, I don't want to say that like, 25 and 30 points was just way too small for an expected move. Because I mean, the prices are the prices, right?
Yeah, especially with the stagnation that we were seeing.
Yeah, but I was just like, wow, that is a really small move for like what we're seeing today. Like this is like probably like close to 2 standard deviations compared to that.
Oh, certainly.
Yeah. And so, yeah, it's just been a lot of movement. A lot of our customers like to sell premium. And I was talking to this guy earlier today. He was saying that like, when the expected move is so small, it's like he wants to buy the iron condor, but he just can't do it because, it's against his blood of selling iron condors, right? He's like, instead of buying it, I'm just going to stay away rather. But he's like, I so badly want to buy it, but you just can't sometimes. You just can't go against the strategy, right? But yeah, it's been a really interesting 2 days when like, you look at the charts, it looked like, topping pattern, right? It was like, okay, we're seeing some downside movement. And then exact opposite. Customer sentiment was probably downside movement too. Vol was saying downside movement as well. And then Vol got absolutely crushed past 2 days.
Oh yeah.
And so, yeah.
Yeah, the compression that we've seen in the VIX has just been insane, and yeah, it has just been such a tail risk environment. I was starting to shift towards the neutral bias myself, and now we're actually seeing VIX elevate a little bit. We're getting that much upside that it's rare to see VIX making the move up alongside the market. It takes some serious upside to facilitate that. But yeah, I totally can relate, and especially I think it's a great point you bring up about it's hard to abandon your strategy. If you abandon your strategy and you're wrong, you're just going to be so upset that you put that trade on. I would say it's kind of like blackjack. It's like hit 16s or don't, but don't be switching whether you do it or not, because it's a recipe for disappointment. You gotta pick your poison. So yeah, it's just insane environment that we're seeing right now. And so you're saying that there was a growing, I should say bearish bias happening. People were selling premium on the top side, and
Yeah.
now we're seeing a lot of that get blown up.
Yeah, I would say like a lot of people that are like typically bullish, a lot of the customers I talk to were becoming more neutral, and a lot of the more neutral customers were getting like more negative delta. Because I will say, even with like a lot of the customers that stay neutral, they kind of like to have negative delta to make sure that like when the market goes down, their negative delta can sort of hedge the vol expansion that you see as well in the short Vega that just comes inherent with selling premium. And so typically, when you're neutral, a lot of the time we see customers actually having short deltas because you're not really neutral if like you're zero delta and then the market goes down and then you're getting killed on your Vega risk, right? So a lot of the time we see neutral customers actually have a more bearish sentiment, but even getting more bearish than that already. And then, yeah, probably a lot of short call covering today, I'm sure.
Oh, yes. Yeah, I would imagine. Yeah, I spoke at length over the past couple of weeks about how this consolidation phase that we were seeing for the last couple of months felt very similar to what we saw, October through like March of this most recent.
It does kind of look like that, doesn't it?
It's the same thing. I mean, right down to the dates. It's V-shaped recovery out of April. We have this crazy bull rally, and then all of a sudden we just start stagnating. 7,000 was the level the previous time. This time it was closer to 7,600. But similarly, it's funny how these time horizons played out, because we did get that same pattern, but it was a shorter duration on the run up, and then subsequently it's a shorter duration on the consolidation. So yeah, definitely lessons to be learned, and we just keep ripping.
Yeah, and then I mean, you would know this better than I do, like, because I'm just looking at the prices and I'm looking at the market all day. But was there any like news that prompted any of this, or is this just like prices moving?
Yesterday it was because the Iran stuff looked like it was fully going to subside. Trump said some very bullish things about how the Strait of Hormuz was going to completely reopen.
The war is off.
Yes, exactly.
The war is off.
We are ending this war bigly. Yeah, precisely. And so that was the reason for the initial run up, and the collapse in oil that we saw yesterday was, Strait of Hormuz reopening news was painting that picture. And then today it's basically just sustained momentum off of that. Palantir earnings were good. We've seen a lot of good earnings out of these tech companies, these hyperscalers, Meta notwithstanding. And so yeah, it's just, I mean, I was just joking with Errol on risk and reward, but it's like, 5 days ago everyone was like, oh, the AI trade is over. Like this is,
yeah.
And now all of a sudden everything is just right back at the highs. This Microsoft chart is just preposterous. Like I feel it's almost my obligation to get short here sometime. But this is starting to look ridiculous. And if you zoom out, it's not as ridiculous. I mean, they're far from the highs. But is this sustainable momentum? That remains to be seen.
Yeah, well, speaking of some of, is the AI trade over? Are we still trading these stocks? Why don't we get into the top 20 symbols going through the system today?
Yeah, let's do it. Still familiarizing myself with this new platform.
All right, well, we've got it pulled up here.
High options volume, yeah, is usually my preferred list. But yeah, I mean, it's a lot of the usual suspects.
See, you're not typically doing this show. That's why you're not giving me a chance. But typically what I'll do is I'll like read through the top 20 symbols and give them the IVR as well. And I do, so like when Marty comes on, he takes like 10 minutes to go through just the list. He's like, all right, at number 20, we've got XYZ with a 58, But so I can go through the list nice and quick here. Yeah. At number 1, Palantir, very expected with 34. NVIDIA, 51. Micron, 73. AMD, 80. SpaceX, 87. Tesla, 29. Microsoft, 50. Intel, 72. Apple, 55. Amazon, 30. TQQQ, 59. Broadcom, 61. SNDK, 73. Oracle, 55. SMH, 83. SOXL, 84. Marvell, 88. Meta, 43. Google, 45. And SoFi with a 2, rounding out the list there.
SoFi, 2. No IVR.
Yeah, no surprises here, really. A lot of tech names that we see. And this is, very standard list here that we see the customers trading.
Yeah, we're it's crazy. We're into a world where we have ETFs with 88% implied volatility right now. SMH now at 84.3 currently, still just incredible. And it's a scary environment to trade. I at least I find. I don't know your take on the situation, but these tech stocks, I just don't know what to think anymore. I was much more content thinking that the run was over and that we had at least a few more weeks of drawdown. Now I don't know what to think. I could just as easily see the momentum get sapped out of this tomorrow as I could that we're just right back on this trade.
Yeah, there's been an overarching theme that we've seen for probably like close to a year now, is that like even at all-time highs, like right after the tariff move, even at all-time highs, volatility is still so high, and so that's what's keeping the trading very interesting for premium sellers, right? Wanting to sell that volatility. And then also if you're looking to get more directional, it's like, what sort of vol's not really giving you an answer. It's like the market's at all-time highs and volatility is not at all-time lows. So, today it's been crushed, but it hasn't been that way recently. And so that's just really interesting, makes for a really interesting market.
For sure. Well, that's going to be about all the time that we have with you. Just real quick before we leave, if you can, what do you think is a mistake that the average trader might be making in this environment? How could you prevent it?
Yeah, I would say, as always, this market environment and any other market environment, size kills. When you see opportunity, take it. But more importantly, when you don't see opportunity, stay away. And there's nothing wrong with that, waiting for the right trade.
Love it. Hard to sit on your hands sometimes. I think that's a wonderful tip. Thank you so much for joining us, Quentin. We always appreciate it. That's going to be all that we have. Stay tuned for what do we got next? Trades of the day, of course. One of our best new segments, Trades of the Day, coming up next. Got a great rotation. Here it is once again. We just talked about it at the end of Risk and Reward. Jermal, Mike, Errol, and then circling back to me. I have an exciting one planned for you. So do stay tuned. That's going to be all we got live from the trade desk. See you guys next time.
You bring it, we match it. Get a 3% cash match on all qualifying deposits. Up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto. We got it. We get it.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
How many trades must a man roll down before you say that he's afraid? How many times must we be stopped out before our portfolio's decayed? Yes, and how many times will our positions get too big before our minds can be forever swayed? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade. Yes, and how many days to expiration is best? And do I have the right chart? What's the right number of trades to put on to make my probabilities be smart? Yes, and how many episodes will it take before I know where do I start? The answer, my friends, is found at Tasty Trade. The answer is here at Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
It's time to trade smart, post-PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty Trade.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1, and Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Hey, what's up, everybody? Thanks for watching Tasty Live. I'm Jermal Chandler, and joined by Kat from the research team with some trade ideas. How you doing?
I'm good. How are you doing?
Doing fantastic. How many you got?
3 trade ideas.
Yeah, you got 3 trade. You ready for them?
Yeah, I'm ready.
Let's get into them.
So before we started the trade, I was asking you a question like, how do you feel like to speak the whole day?
This is what I do, Kat. This is what I do. This is what I'm good at, and I keep doing it.
I don't know if I can do that. Oh, boy. Yeah. I feel like I can trade. I can code the whole day. I can read books the whole day.
See, there you go. Yeah. I would never do either one of those the whole day. So that's the difference.
Coding's fine. Reading is fine.
If you say so.
Yeah.
I'd rather talk about trading all day long, for sure.
Also, I can trade the whole day. So making money.
You're getting there.
Yeah.
You're getting there.
So let's make money now. So let's go to trades. So I have 3 trades. Most of them like post earnings trades.
Okay.
So pretty easy, and most of them they have the high IVR. So we have the first one is Robinhood, the whole ones. So I'm being bullish with this one.
Okay.
So they have earnings last week, and I think they beat the expectation from Wall Street scientists. So if you look into this perspective, this whole stock, it's on the day of releasing earnings, they dropped a lot, like 3 to 4%. But afterwards, they rose. So they pick it up. They pick it up day by day. Even right now, today, it's up like 2%, right?
Yeah.
It's changed by 2%. So, but if you look in horizontal of like 5 days, 1 month, so the stock is going down a little bit. So that's why I'm doing short put spreads into Robinhood just to make sure I protect myself on downside of the stocks. So right now it's on $92. So the IVR is 59. So I'm doing short put spreads, which can spell like put spreads, 75 on puts. 75 and 80. So it's 45 days out from now. I'm betting like if the stocks continue to drop, it won't get between 75 and 80 bucks. So that's my bet on, and you're gonna correct $1.26.
I like it. I mean, the near-term low in here was 83.68. The last time it was lower than that, you'd have to go back to let's hold on. Got it on an hour chart here. Let's go on by day.
By day.
I like to look at a daily chart.
Mm-hmm.
So last time it was below that, you'd have to go back to before June, when markets were a little skittish.
Mm-hmm.
But obviously we're in a different regime now. And look, the more the markets go up, the more it's good for Robinhood. Obviously, Robinhood is in the same space as Tasty Live and Tasty Trade, although truth be told, we have more active traders as far as like people who actively trade, whereas sure, they have a lot of different people who trade. So it's kind of similar but different. We kind of go after similar but different people. That being said, I like it. I like the trade. I'm going to put some on myself. I'm going to sell this put spread, see if I can get filled.
Yep.
Might have to step down to 125. Of course, that's where it is.
Good.
But I like it.
I like it. I like how you're putting on my trade. So let's go to the next one. So next one is I'm going to the big boys, Apple.
Okay.
Yeah. But I can't take direction on Apple because I don't know where Apple is going right now. So I'm being neutral on Apple and doing short earning candle. If you have money, if you have like highest buying power, like capital you're gonna invest, you can do Strangle. It's okay. But I don't have that money. I'm still like a cheapy guy. So so I'm gonna do earning candle with my buying power 338. So you're gonna correct $1.64. And the IVR is great. I'm gonna take advantage of this IVR. It's a juicy trade, but it's a cheap one. If you want to go into Apple after earnings from last week, it's a good trade to slide into Apple, enjoy the high IVR before the crash or it contracts.
Yeah, I mean, look, Apple, like we noted, things went. They had good numbers on earnings. The reaction wasn't that great. That worked out for me, actually. I had a put diagonal in here. So I was able to take advantage of that downside move. But to your point, I mean, this is a $4,000 trade if you're just trying to do a strangle, if you will, which obviously strangles are always higher pop, but they're also higher buying power. In this case, you're pairing it off with these wings and going with the cookie cutter setup here. 159. It trades in pennies. Let's see if I can get it down to 157. There you go. I like that trade.
To see,
28 vol, which is not super high, but that's one of the reasons. Normally, I would probably be interested in selling a strangle in this, but the reason why I'm not is because right now, overall market volatility is pretty low.
Yeah.
VIX is in the 15. I don't necessarily want to have a whole lot of strangles in that environment, but I don't mind selling this vol not only this vol, but specifically got these strikes. Like this is 285 for it to breach 285 or 335. When a stock does this type of move, big move to the upside and then to the downside, it might have a little bit of trouble reclaiming that. So I'm fine doing that.
Yeah.
I don't expect it to drop that much lower, 285 or anywhere in that range. And I think it's going to take some time to carve out and get back above. See this right here? This particular day was a day before earnings, I think.
Yeah.
And so it would have to reclaim this level, which is about 330. We're at 335, so I like it.
Exactly. We still have some earnings coming this week and next week. So I think the market is going to react on some earnings, especially the microchips ones. And also I think if the market reacts on that, Apple will pick it up and they also can be affected. That's why you can protect both sides of your trade. So because it's a big boy trade. So
I think it could chop in this range between 311 and 330, which I'm willing to.
Exactly. Yeah.
Okay.
Good. So the last one. Also, it's Coinbase. So if you look into the Coinbase earnings on Thursday, they miss the Wall Street expectations. So the performance, when you look today, it's like up 3%, but over the past 5 days, it's down like 9%. So if you look right now, it's going to be up, but if you look to the longevity of 5 days, 1 month, it's down. So it's better you protect yourself. Also, it's better you see how instead of doing short put, there's people can do short puts, but it requires like a lot of buying power into that, a lot like 3,000. So you can do that, but to be able to conserve your portfolio, you can do short put spreads. And that's what I'm doing right now. 125, 130, and you're gonna correct $1.40. And the IVR is good, 53%. It's a juice one. It's tastylive sweet spot for entering the trade, and buying power is not that crazy expensive as well. Yeah.
I like this one too. It's butting up against the near-term low. I'm not going to do this one because I already have a trade, but also approved, very, very good. I like it. High vol, selling downside, selling towards near-term lows. It works. I like it.
Yeah, it's like people are afraid to trade after earnings most of the time. So we come to the extent like, hey, let's show you like cheap trade, and also juice one you can trade during after earnings periods, so you can make some money and so you can enjoy yourself. Yeah,
I actually like trading the most after earnings. So,
really?
Yeah, I do. We'll get into that another time. Good stuff, man. Good stuff. Great trades from the research team. God, thanks for your help. Thanks for your work. We appreciate it. Folks,
thank you.
Thanks for watching. Tune up next for Trades of the Day. I kick it off, followed by Mike, followed by Errol, followed by Gus. So you don't want to miss it. Tune in. See you in a little bit.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks,
options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
To the upside, 1.5% in the E-mini S&Ps, 2.8% in the NASDAQ, and it's joined by everything. I mean, we've seen days where one day it's the NASDAQ because of software names. We've seen because it's chip names. It's both today. It's both. Obviously, Palantir leading the way to the software side, but it's been quite a move here. I've had to look across the portfolio and try and find something that doesn't interfere with something else, honestly. We got a lot of trades going on these days. Hopefully you've seen a lot of them going up on the follow page. I mean, we just keep pumping them out left and right. I mean, even today, when I look back at some of the trades I've done, it's been fast and furious. It really has. And Palantir's leading the way. That's one of those where we had a Super Bowl in that thing for a very long time. I mean, probably dealt with the highs and lows with it as yourself. You probably heard me and Mike talk about it. Microsoft was another one. We always just felt like the names that we were going to play were going to be Palantir and Microsoft and possibly CRM, which I did play to the upside for a while. Eventually, I flipped that around just for the heck of it because it didn't perform well on earnings. Palantir and Microsoft were the ones that performed the best on earnings. And you're seeing the after earnings move. It's been glorious. I mean, really, it's been quite amazing. As you can see here, we're having a banner day here. This is a pretty good day. We're looking at it. And a lot of it is upside plays. I mean, Micron is a call calendar. SanDisk is a call calendar. MNQ is part of the year-long trade. As a matter of fact, I got 2 of those now. I got in the Z contract as well. SPX is from a Super Bowl that we just put on this morning. I also had a Super Bear countering it, but the Super Bowl is starting to take control. SpaceX even running into earnings. And that kind of gets to the point. SpaceX has earnings tonight. That's the big play here. When you're looking at what's going on, obviously this stock has been down. It's been the poster child for what's going on in a lot of tech names to some degree. There was a lot of pullback. It's also been the poster child for IPOs, right? I'm sure you've seen the graphic at this point. A lot of things that have gone IPO, and they've been major IPOs. Palantir is kind of in that group. And Facebook, once upon a time, which before it was Meta, it's ticker FB. When they had IPOs, they were so hyped up that they ended up falling down at the end of it, and it took some while for them to recover. Now, we'll see if that ends up happening here, but these guys have their first earnings as a public company today after the close. So we'll hear from them. It's not about how much money they're going to make. They're not expected to make money. The company isn't really making any money. And so it's more about what they're going to say to keep you clinging on for the future, or how much they did not lose, if you will, when it comes to EPS and revenue. So I'm paying attention to this name for earnings. I already have a trade on in here. I am, and ignore this. This is just short upside for, and these are way short upside. And you're like, some of you are probably like, why don't you close these? Dude, the stock's trading 120. This is the 250, 275, 300 calls. They are part of a calendar call spread with some September options. You could arguably ask why I have those still on, but I figured why not? 250, 275, 300, right? So I'm just holding on to those just for the heck of it. Why not? I really don't expect those to amount to anything, but maybe at some point I'll close those further upside calls out when the August ones expire. But this is my real trade. Now, this started out as the short put, 125 put against, I think I had like maybe the 200 or maybe even the 250 call. No, I might have been. I don't remember. But I kept rolling it down, and now it's the short put against the 160 call, right? So this has earnings. I don't really want to add to this per se, because my only other way of doing this is I want to do the same type of trade, and I don't want to do it at these levels. So I could do a similar trade, but again, the buying power in here is up, 4,900, which I can absorb, but I just don't feel like doing another one. I'm already doing that, right? I would do the same trade again if stock ends up trading below 100 after earnings tomorrow. For some reason, all of this bullishness gets wiped out and stock falls tomorrow, right? And then I would probably look to, I actually wouldn't even do it in September. At that point, I'd probably go out to January, if you will, and maybe do that type of trade, being able to sell that type of put, maybe buy the 200 call. Again, just collecting a credit to get a bullish position. But again, $4,800 in buying power. If I'm going to deploy that, I'm going to deploy that further out after a very big down move into an ugly sell-off where, honestly, most people are probably scared, and that's where I jump in. So what I did decide to do, again, when you look on the side here, you can see, NVIDIA. I got my watch list here sorted by a lot of the main tech names. These are the things that move the market. I've had this kind of similar sort for quite some time. So I got it sorted by size: NVIDIA, Google, Apple, and obviously these have changed that time. I think Apple might be one. I might have to move it up now. But Microsoft, which again is in Mag 7, but has largely been categorized as software more recently. Amazon, which is down today. AVGO, all these similar names are all moving to the upside today. Meta's taking a pull back today, but you can see the memory storage names are in there because those have been interesting. Micron kind of gets the first start. But again, we're talking about AMD, which also has earnings after the close. They already have a trade in there. Look that up on the follow page if you haven't. You see Marvell, SanDisk, they all move together. SpaceX essentially moves along with these is really what I'm trying to say. And while it is not a chip name, while it is not a software name, it is a tech name, and it's moving along with the NASDAQ, and it sort of pulls them up. And we all know it has a big weighting, even if that weighting has been diminished some in recent weeks. So I decided I wanted to play SK Hynix, which is a chip name, which does move along with the rest of these, which also has a chart that has not been that great since its ADR shares have IPO'd here in the US. This stock has struggled as well. You can see it is moving big today, along with a lot of these other names that we'd laid out. So I decided to take a page out of Liz's book. Now, Liz didn't do a trade in SK Hynix, but she came up with an idea today, which is basically kind of piggybacking off of Mike's idea, which I've adopted as well, the idea of the super bull. That's right. And we've talked about these trades many times. Those who are on here are probably aware of it, but if you're not, this is not the exact Super Bowl setup, but the idea of collecting something so that you could buy something in case there's a huge move to the upside. Now, the other way you can do that, right? Like, I'll show you the trade I'm doing first, and then I'll show you the other ways you could potentially do it, but the reason why I don't like those as much. So what we're doing here, typically when we do a Super Bowl, we will, sell like a put spread or a put, however you want to do it, to finance buying, say, a call spread, right? And you collect money. In this case, this one is wide, right? Say I did the 200, 220. Say I bought this call spread out here and I sold this put spread to finance. And now we're collecting a credit. Now, of course, it's not like it does not come with risk. Most of your risk, if not all of your risk, is to the downside, right? That's the thing. But instead of doing this in the same expiration where I got to buy this $50, upside call spread just to begin to make money, I decided to sell this put spread to buy a near-term call spread. So I bought the 150, 170 call spread, very aggressive, basically at the money, right? Decided to do that. Now, that's why I say I piggyback off of Liz's idea, because this morning Liz had an idea of selling two puts further out in AMD at a very lower strike to finance buying a near-term call spread. And again, you would imagine that this near-term call spread doesn't have as much value as a call spread further out. That 200, 220 call spread I just showed you in October has way more extrinsic value than this call spread in the August 7 expiration, right? And that's 3 days to go. So we could get a scenario. I likely hope there's a scenario where this stock makes a move and even runs into the end of the week, and it could easily be up $20, right? Let's just figure $7 a day for the next 3 days. That's a possibility. Hell, it's moving $8 and change a day. So that's my thesis behind the trade, right? And so I ended up doing this trade overall for a 55-cent credit, where I bought this near-term call spread, sold this $20 wide put spread. Now, that's the caveat. It is a $20 wide put spread. I don't necessarily sell $20 wide put spreads when I'm usually doing Super Bulls. But because this is October and it's further out, and I did it basically against what was near the near-term low. $124.80 was the near-term low in SK Hynix when things were looking really ugly and really bad, right? When you'd wake up every morning and you hear about South Korea having circuit breakers and selling down 9%, 10% in the overnight, and we'd come in and our market would be down. And so that was the low. That was the ugliness, right? So what's the opposite? Well, you need to look no further than a day like today. Up 823 points on the NASDAQ, 2.8%, 1.5% on the ES, albeit in a little bit lower volume, right? 899K. We usually like to see $1 million a million contracts in volume in the ES by almost noon Central Time, but I'll take it. This is a lot of volume, right? So SK Hynix is my play. Even though it does not have earnings, I am playing it as if it's earnings adjacent to SpaceX earnings, right? If SpaceX ends up moving up, right? And again, they don't have to knock it out the park because they're not slated to knock it out the park. They're not making money yet. But if they just say some positive stuff that gets the stock moving, well, guess what? Everybody all of a sudden is going to forget about these share lockups that are coming into place with SpaceX. What is supposed to be happening over the next couple of weeks here into August. Those who've had shares for a long time, the lockup will expire and they'll be able to sell out their shares. But how much will they sell out? If things are really positive and the stock is moving, they actually still might do it. But my bet is, let's look at some high volume days here. So let's see, 7-6 was a very high volume day. Where was the stock? It was trading around, and this is the real inside baseball here, folks. It's trading around 155, high of 167. I think we will see a little bit of resistance in that area if the stock makes a big move tomorrow. As a matter of fact, I almost feel like the stock is going to go to 150 and then pause for a little bit, and we'll see what happens in that area. If it does get to 170, this will be a nice trade, actually, because that'll work out really well with my near-term call spread. And the share lockups haven't expired yet, so you won't see any selling. But I think once the share lockups expire, you could see some selling in the 170. If it gets to 180, who knows, 160, 150 level, because these are the very high volume day when I'm looking on the chart right here. So those are the areas. This is another high volume day, right? Around the 170, 190. I feel like somewhere between 150 and 170 and 170 and 190 is where you'll see some selling when it comes to those days when you're talking about the share lockups being released. I feel like that'll be an area. So it's one of the reasons why instead of going way out way out in SK Hynix, it's a sort of, again, I'm using it as a proxy. Like instead of worrying about playing this name for SpaceX earnings, instead of playing SpaceX for SpaceX earnings, I'm playing this name instead of playing SpaceX earnings, even though I already have a position on SpaceX. But I think this is one area where I like to be able to sell this put spread further out, do that credit, and basically, let's just see what happens. So let's pull up the graphic here, give the people a view of what this trade looks like. So like we said, we're buying the August 7th, 150, 170 call spread, and we finance that call spread by selling the October out of the money put spread, selling the 120, 100 put spread, right? And so the nice thing about it's this two-stage payoff. As long as the stock is above 120 at expiration, which I won't hold this to probably October expiration, but again, as long as it's above there, we make money on that put spread. But if this stock really explodes tomorrow on earnings, it ends up jumping big, then we could really see some strong value on this put spread. The stock is already trading 151 right now, 151, almost 30. I chose to get aggressive on the call spread and going basically at the money in the near term, so that if this jumps tomorrow, say $20, which, who knows how SK Hynix may move, but let's just say, let's not get carried away. It doesn't have earnings itself. Let's just say over the next couple of days, this thing jumps $7 a day. We're above 170 at that point, and this call spread is deeply in the money. So that's kind of the way I'm playing it out. But again, this is not, I don't have to worry about earnings vol. I don't have to worry about vol crush in this situation, because I'm not playing earnings in SK Hynix. I'm actually playing it for SpaceX, uplifting the whole entire NASDAQ, right? In that regard, when we talk about a rising tide lifts all boats, that's kind of the idea here. We're hoping that there's a little bit of bullishness behind SpaceX earnings, and that bullishness extends to SK Hynix, which you can see today. A lot of the NASDAQ names are running up higher, and it's working out well for them. So that's the play. We'll see how it plays out. But hope you guys are enjoying these trade of the days. We love to bring them together for you. And, that's the play. We'll see. SK Hynix, a short put spread in October to finance buying the AUG7 150, 170 call spread. We'll see how it plays out. So that's my trade of the day. And now I'm going to get you over to Mike Butler for his trade of the day.
What's up, everyone? What an insane market we have today. I can't even believe it. I mean, when we opened up 20, 30 points, I was like, okay, maybe we'll just chop around here. And then we're up 40, and then we're up 60. Now we're up 125 in the E-minis, and the NASDAQ is up almost 1,000 points today. Intraday, craziness. What a move, what a move. But we've got some earnings after the close that are going to be really interesting to watch, particularly SpaceX. I think AMD is also going to be a fun one. It's up 40 points right now before the announcement. I've got a call calendar spread on there that we posted to the follow page. But SpaceX has my full attention, and I think this is going to be a really interesting one. I might actually listen to this conference call. I don't normally listen to these things. I usually just digest the information after it's released. But SpaceX is kind of at an interesting turning point. Of course, you had the IPO euphoria from 150 all the way up to 225, and then after that, just crushed back down to 150. Tried to catch a bid sitting around 160, 170, and then it was just a sell-a-thon from that point on. But we are catching a nice two-day bid. This is the first two-day bid or two-day green day that we've seen, and it's up pretty sizably, almost 20% from yesterday's open. We haven't seen that since the rebound after the initial sell-off from the IPO. So there's a lot of question marks here. I think it's going to be really interesting to see what this business is really made up of, how they're getting their revenue. You have your speculations, but we'll have our first go around of an earnings report and conference call here. So conference call, definitely going to tune in and see what's what when it comes to SpaceX. But this is a very similar implied volatility landscape that we're seeing today as we saw in Palantir yesterday. So different environments, of course, but when you look at an implied volatility in the weekly cycle, it has a 20-point implied move relative to a $120 stock price. That is an insane implied volatility, and you can see it in the reading, right? 240%, 235% in the weekly cycle, and even the August cycle, 140%, September, 100%, and these back months going all the way down to like 74%. So you're going to see an absolute volatility crush here in the near-term cycle. And I think I have a structured trade that takes advantage of that in a pretty good way here. But similar to Palantir from yesterday, you've got a huge implied volatility relative to the notional value of the stock price. So that's the first thing I always look at for earnings reports. What is the implied move for the week relative to the stock price? Normally, you see between 5 and 10% of the stock price priced in as the weekly move. Here, we're seeing almost 20%, 20-point implied move for the week. And really, more importantly, you're still seeing a little bit more implied volatility in August, but nothing too crazy. You got a 20-point implied move for the 3-day cycle, only a 26-point implied move for the 17-day cycle, and only a 32-point implied move for September. So any way you slice it, selling premium in the 3-day cycle makes a lot of sense here. You just have so much premium relative to the cost to buy something in a later dated cycle. And that can be true for a calendar spread, diagonal spread. Like, you have the ability to reduce basis in a big way. And we can show this here if we just look at a 130, 140 option For the next 3 days, a 130 call is trading for $700. A 140 call is trading for $450. If you were to just look at the calendar spread value here, if you look at the 130 and 140 going out to August versus the weekly, I mean, look at this. It's absolutely nuts. We've got a $7 debit on the 140 strike out in August and a $450 credit on the 140 strike in the 3-day. Same story in the 130 strike. $1,000 of a debit if you bought this in the 17-day, $700 of credit received. You're reducing cost basis by 70% by selling something against a long option you're buying out in August. I think it's a really nice setup. If you have a slight directional lean and you get that move, you're going to make money on the August cycle or at least retain this value. And the 3-day cycle is going to get crushed, of course, by Friday. So selling premium in the near-term cycle versus buying premium in a later dated cycle. That's typically how we like to set up these super high IV earnings announcements. I like to keep it defined risk just because you never know what's going to happen. SpaceX is expected to lose money, of course, post a loss on earnings per share or lack of earnings per share, if you will. But it's just like Tesla 5 years ago, 6 years ago. Like Tesla was one of those companies where the market expected them to lose $3 per share. They would post a loss of $2.50 per share and the market would go nuts. They'd be like, wow, they beat expectations in terms of the money they're lighting on fire. Let's pump the stock up 50 points. Like, I feel like that could really be the case here in SpaceX, where the market expects a loss number. They post a lesser loss number and the market rips. There are some bear positions out there in terms of the share float that's going to be unlocked recently or soon after this announcement. That could create some downside pressure if you have internal people selling their shares to get out. But yeah, I mean, I think when the entire market is bearish on SpaceX, which has been the case for the last couple of months, I think, maybe it's time to take a stand in the other way. You could see a big short covering here. You could see a complete sentiment reversal. And I think that's especially true when Elon is involved and you have a conference call where anything could be said. So really interested to hear what this conference call comes to at the after the close here. But looking at this trade specifically, there's a few reasons for why I went to where I went for these trade setups. So first things first, we can show you the whole trade view, and we need to isolate my 2 positions that I've got. I also have a longer term position, which we'll talk about in a second. But first things first, the short put spread. So I sold a short put spread here, the 110-105, picked up $208. Pretty good value here, being 11 points out of the money from where we're currently priced. Of course, the expected move for earnings is 20 points. So this is within the expected move in the August cycle, of course. But I think this is good value here. Selling a 110-105 put spread, basically a chicken put spread setup where you're collecting $200, risking $300. And really, I didn't want this neutral upside premium here where I make $200 on an upside move, especially because I know that SpaceX, this value is not going to go to zero because SpaceX still is going to have 100% implied volatility even after this earnings announcement comes out. So if you get an upside move in SpaceX, this $200 of premium that I sold at the 110-105 strike, it's not going to go to zero. Maybe you lose half of it. Maybe you can buy back for $1 and call it a day. But you would really need a huge move to the upside for this thing to lose 75-80% of its value with 17 days to go in a 140% implied volatility environment. So I sold that to really finance the other portion of the trade, which is a call butterfly. So I really like the way that the whole package sets up. I bought this butterfly for $100 exactly. The 130, 140, 150. Max profit on the butterfly itself is $900. It's 10 points wide, and I paid $1 for it. So in isolation, the butterfly has a nice 20-point wide window here where we can land by Friday in SpaceX. This is at the expected move or just inside the expected move on the value proposition here from 130 to 140. And then, of course, my risk side here, 140 to 150, where I sold the call spread to finance the debit cost of the 130 to 140. Still profitability there if we land in this range. So all that to say, bought a butterfly in the weekly cycle because I want to lose all the extrinsic value in the butterfly. you don't get this profit tent unless you're at expiration and you pin this level. So I didn't want to buy the butterfly in the August cycle. I wanted to buy it in the weekly cycle. We're getting tons of implied volatility, and that's how I was able to buy a 10-point wide butterfly for just $1 here. If we had way less implied volatility in SpaceX, this butterfly would have cost me a lot more. But because we have the ability to sell these 140 options for a decent amount, I'm able to get into this butterfly for a cheap initial debit cost. Then you layer this on with the put spread, and you have yourself a position where I don't lose any money as long as SpaceX goes up, period, or at least stays above 110. So because I bought the butterfly for $1 and I picked up 208 for the credit spread, I have $108 of neutral profit potential here with an upside kicker that's wrapped around the expected move in the weekly cycle of up to $1,100. So the max profit on this trade is if we pin 140 on Friday and I keep all the value in my short put spread, which really isn't going to happen. These are in 2 different expirations, so keep that in mind. But max profit, if all of this expires as it should, around the 140 strike, $1,100 in premium. But that's really not what I'm shooting for. I'm shooting for a theoretical P&L, which is going to be pretty sizable still. So if we kick this evaluate at date to Friday, we're going to get a nice bump from that butterfly here. And then we're going to have to crush implied volatility in the 17-day cycle, of course. And let's bring this down to like 100%, because I really think we're going to get a big vol crush here. If you imagine that this July or the August cycle drops to 100%, these back months probably drop to sub 100%, but let's just say a 37% vol crush in the 17-day cycle is a pretty big vol crush here. So if we get a rally in SpaceX up to 140, we crush implied volatility in the 17-day cycle, and we assume that I get all the premium out of the butterfly here, we're looking at a P&L of around $500. Like that's really what I'm expecting out of this trade. If we get an upside move and a vol crush in August, and a range bound in between, or a stock price that's range bound in between this butterfly here. So all that to say, I like the risk reward of this trade. $300 and change of risk, $500 ish max profit if all these things come to fruition. But even if we do get a nice rally above 140, up closer to 150, I can still make $300, $200, as you can see here in this Theo risk graph. So that's the trade of the day. Going to the 17-day cycle, also because one of the issues with a short put spread in the weekly cycle is if SpaceX drops to 100 or 90 or whatever, you're SOL. Like you don't have any management opportunity unless you convert that put spread to a naked put where you could sell out of your long put, but that changes the whole dynamic of the trade. Your risk is no longer defined to that $300 value. So I went out to the August monthly cycle. So I have 16 days after tomorrow, or after today, I should say, where the market can reverse. I can see SpaceX dropping and then recovering over time over the next couple of weeks. So I usually like to go to the monthly cycle if I'm selling a credit spread, but I always like to go to the weekly cycle if I'm trying to create some sort of butterfly pin or just have that short premium component, which is, achieved with that butterfly here, where you're collecting so much premium against the legs that you're buying as well. So that's the trade of the day here. As you can see on the screen, short put spread in the August cycle, bought the butterfly in the weekly cycle. Max profit's 1108 if everything expires worthless, but 108 base profit potential if we just get any kind of move above that short put spread at 110 and 105. So I like the way that this trade sets up. We'll see what happens with SpaceX after the close, and definitely going to be interested to see what I hear on that conference call, because I think it could be a wild conference call. But I also have this longer term position. We talk about these Super Bowls all the time with near term cycles in like SPX and whatever else you want to trade it in. But the Super Bowl in SpaceX, I put this on. I sold the 125 short put to finance the entire cost of a 300 strike call. And I did this in the 500-day cycle. So this is like a super long dated trade. But you can see here, my expiration graph, I sold this package for $345, or I collected a credit for this package, $350. If we chop around here, we have the ability to make $350. But if we flip this to Theo, you can see if SpaceX does rip higher, closer to 200, 225, 250, without changing implied volatility or time, I don't think I need to do that with implied volatility because we're in that really long dated cycle. That IV number is not going to change too much, at least right now. You can see we can make a couple $1,000s here on an upside move. But that is ultimately the trade of the day in SpaceX. Again, we got a 20-point implied move in the earnings weekly. I think it'll be interesting to see if they can exceed that or if they stay within it. Even though it's such a huge number, it feels like it's going to be one where maybe you see an outside move of 20 points. But that's the trade of the day. Let me know what you think in the YouTube chat in the comments. But we got E coming up next for the next trade of the day. So stay tuned.
What's going on, guys? Welcome back to another trade of the day. We got a lot of options on the board for today. Today we're putting in another leg to the upside on the overall market. So we still see that pretty large divergence between NASDAQ and the S&P 500. So we're going to continue to keep an eye on that. I know over the last couple of weeks we put on more positions in QQQ and in SPY. So we'll talk about how we manage some of those trades. And then we're going to get into a trade that we're going to be looking at for today. And it's going to be an extension off of another trade that we had put on earlier in the week. If you have any guesses, let me know what you guys guess that you think I'm going to trade today. But we're going to do a little bit of an update, a little bit of an extension of a trade we put on at the beginning of the week. So with that being said, we can jump right into the Tasty platform, see what's been going on over here. I mean, things have been so volatile. NASDAQ and the overall market feels like we're trading at that like all-time high kind of territory again, even though NASDAQ is still trading below its high and S&P 500 is making new highs right now. But I've had my mind on something a little bit more volatile than the indices that we've been seeing. But I'm taking a look at USO right now. We have so many gaps, right? We had this extreme sell-off from 153 on USO all the way down to a low of 103. And then we had seen that initial rally all the way to a high of 141. We got the pullback over the last few days, sending us down to about 118. And this is where long started to become a little bit more attractive on oil. But with that being said, I want to quickly go through some of the positions that we have on because I think that's going to provide a lot of the context for the moves that we're making right now and into the end of the week. So with that being said, top of the portfolio, I'm getting crushed on oil right now. I mean, we were down a little bit more earlier today. It's looking like oil's catching a little bit more of a bid. And I mean, we're not too outside of some of the risk parameters right now. It's a little bit more of an aggressive position because it is a futures contract. So with crude oil, for every 1 point move in crude oil, for every full point, it's going to be about $100. So very similar to like a zebra type trade when you have on 100 synthetic delta. So we got long oil at around 79 flat, right? And right now we're trading at 76.06 on oil, breaking through the lows from the last few days. And this seems to still be moving off of the same sentiment with Iran, the Strait of Hormuz, right? Trump, and I know earlier today, right, Ranch, Chris, we were touching base on how, we're probably just going to be waiting for another tweet from Trump saying that we're going to erase civilization, out in Iran. And I think a tweet like that, we could see these markets turn around very aggressively, but within doing so, right, we can't violate our risk parameters waiting for something to happen in the market, even if we maintain the same directional bias. So I want to make that clear. But something that we did today was we sold an out-of-the-money put spread on USO just because these prices are a little bit more attractive, right? And the reason why I chose an out-of-the-money put spread on USO that we got filled in not too long ago, we're up about $13 right now, but the reason why I went with that is because number one, it's defined risk. I don't want to continue to assume all this volatility in the oil market, and because of all the unpredictability, right? Unpredictability. We're talking about markets right here, but all the added unpredictability that's added to a product like oil is why I'm a little bit more comfortable doing an out-of-the-money put spread. So it's not that we're trying to double dip right now, because I think one of the worst habits to form is continuing to add to a specific position when it's going against you. So I'm cognizant of that, but this is just a better price point where I feel more confident on getting on a little bit more long delta. It is defined risk once again. We collected about $1.78. So it is out of the money, so we gave ourselves a little bit of breathing room, and it's gonna be nice for this potential out of the money put spread to hedge the futures contract in a way. I know they're both long delta, but they're both positioned so differently, right? And one is a lot more aggressive than the other. One is going to take advantage of time passing. So even if USO doesn't necessarily make any leg to the upside or any legs to the downside, at least we can use the USO position to potentially finance that futures contract a little bit there, but we're going to get a little bit more exposure to the oil market. Again, I have the same directional bias. I'm still bullish on oil, but at the same time, regardless of what your conviction is or your directional bias, you got to stay within the risk parameters. That's going to be number one, because we always want to make sure we can trade or live to trade another day. So with that being said, we got the micro crude oil futures on. We have Google on still, and I think Google, we're up a little bit on this position. This one's kind of another slow bleeder. It's testing our call side right now, but we were able to collect an additional credit, so we widened out those break evens a little bit more. Probably the most boring position in the portfolio, but hey, sometimes it's the boring ones that work really well. And then Micron down on the day. These stocks have been insane. I mean, even if we look at the semiconductor ETF, right? We look at these other AI and memory names. I mean, these things have seen such an aggressive reversal, and it really sucks right now to be a Leopold. I don't want to butcher his last name, but to go under and get your book sold off to Ken Griffin at the lows of the market has to be one of the worst feelings ever. That's like getting stopped out of your position and the market completely reverses from that point. But this is happening at a much larger scale, so that's tough. SMH and some of the semiconductors trading at about 575 today. I had this one on the board to potentially start fading, but given all the uncertainty, I'm just gonna stick with some of the exposure that we have in the other products before I start getting more exposure to this side of the market. Because again, right now on Micron, we're down a little bit on the day. We're about we're exactly break even on this Micron position. So we have 17 days left to expiration. We got a little bit of short delta on, and I'm going to continue to use this position to express my short bias on some of these memory names in the short term, at least. The way that I'm viewing things is this is just a lot of normal volatility that these memory names and some of these semiconductors typically experience. But I have a hard time seeing memory names rip through another all-time highs. Like I know the SPX is doing it right now, SPY is doing it right now, but I'll completely change my thesis if we do make a new high. But even with the volatility we've seen, I mean, we would need to put in another 300 points to the upside on Micron to really see another all-time high. So I'm going to maintain that short bias there. We're not going to add to that position, but we're going to let it ride for the next 17 days. And then SpaceX, we got earnings after the bell today on SpaceX. This is probably what I'm most excited about. Number one, I want to hear what they have to say. I kind of want to hear the route that they choose to take for this earnings call, because it is the first earnings call for SpaceX, and SpaceX has been absolutely getting crushed from IPO. This is one we talk about on the daily, but this is the first time we've seen any life from SpaceX since the end of June. So the entire month of July, we have consistently made lower lows on the daily time frame, and today's the first day we're getting a gap up with a little bit of a continuation to the upside. So I'm going to see how earnings pan out on this one. And at this point, right, the overall SpaceX position is up a little bit. Let's go to the order change to see exactly what we did in here. We'll go back 60 days. So we sold this one June 30th. That was the initial trade. So we sold this one June 23rd. We sold it for 170. We haven't adjusted or done anything to it since. So our max loss on this one is going to be about 320. So given where the stock is at right now, this position isn't as bad as I was really making it seem over the last month. I was just frustrated that SpaceX was making consecutive down days. But if we get a little bit of a pop to the upside, if we can manage this one with reducing the loss, that's going to be a win in my book, especially with this IPO continuously making downside moves on the regular. So with that being said, even if we get a little bit of a pop on SpaceX, we're probably going to take that one off. We could wait out the entire 17 days left that we have on this position, but it's going to be a W in my book if we get a pop to the upside and I can reduce the risk on that trade. So after that, TLT is another position that we put on earlier this week. This was a zebra trade. So this one's going to have no theta decay. We don't have to worry about our options contracts losing value as they get closer to expiration, because these have zero extrinsic value on them. So it's a pure directional trade. It's a pure synthetic stock trade where we have about 100 deltas. To be more specific, 95.49 deltas on this trade. So every dollar move in TLT will make about 95 and some change every dollar move on TLT. So that's working out pretty well so far. We're up a little bit more on the day on bonds. Overall position is up just a little bit. It's been a slow mover. We had a lot of aggression to the downside. Now we're getting a little bit more of a gap up and continuation to the upside. So who knew it was going to be the bonds, right, to become green in the portfolio? Who knew it was going to be the bonds that's hedging our SpaceX position, our oil position, and I guess that's all that's red in the portfolio right now. But the bonds are green. It's nice to get some more exposure to that. and just a little bit more experience trading these bonds as a whole. So we'll be patient, and we're going to keep an eye on this USO position. It's nice that it's up a little bit today. I know we've seen oil curl off its lows a little bit more, so you know, we're headed in the right direction, but things can change so fast, right? And I mean, if we look at this volume profile over here on crude oil, we can get an idea of where most of the trading activity took place. So usually whenever you're using a volume profile, that value area, it's going to be that one standard deviation of the data that we're encapsulating, right, whenever we use a volume profile. But the default setting is on 50 on here. So if you are using the volume profile, I would double check yours. Change yours from 50 to 70 if you want your volume profile kind of how it quote unquote should be. So you can get a better defined range on what we're looking at. But I mean, if we adjust that to 70% and we encompass 70% of where the trading activity has taken place since the initial rally on oil, that value area low is going to be sitting at around 72.34. So with that being said, we're trading below the point of control that's sitting at 83.64 on oil. So what that lets me know is we could potentially have a little bit more downside on oil. And this is one of the reasons why I went with selling an out-of-the-money call spread, or I'm sorry, an out-of-the-money put spread on USO rather than doubling down or buying a call option on USO for a little bit cheaper, because of the fact that we have a little bit more room to the downside. And selling that out-of-the-money option is going to give me more breathing room to do so. And when I see the value area just sitting just below this area, it gives me a little bit more insight that we could have a little bit more room to run given where participants in this specific product has shown interest, and they show interest by buy and sell orders. So with that being said, a lot of volatility to the downside. I don't want to catch a falling knife, but this is definitely an area where I'm more comfortable getting on a defined risk trade. So we're gonna keep it at that. We're gonna see how this plays out. We're gonna give it a little bit of time. We got to be patient with it, but that's what we got going on in the portfolio. And I mean, earnings into the close is going to be interesting, because I know this week about 20% of the S&P 500's companies are reporting earnings this week. So I'm curious to see if SPX and the S&P 500 is going to have a pullback before NASDAQ reaches all-time highs. So we can see SPY over here trading at 771. I mean, just insane. This is one of the biggest bear traps I think I've seen in a while. And I say it seems to be one of the bigger bear traps because this was one where the market was kind of teetering on the edge. It's not like we had seen such an aggressive pullback like we had seen earlier in April and the year before that. This one was one where it was like a slow bleed to the downside, right? And then you hear news about Leopold and his fund going under. We hear all this CapEx spending. We hear how AI and the real estate we're using for all these data centers is we're overextending ourselves, right? That's all you heard as we had a slow bleed to the downside. So it wasn't too aggressive. It like snuck up on you and then it rips back to the upside. So insane markets. We just got to trade whatever the market gives us. But I am curious to see if S&P 500 will take a little bit of a pullback before NASDAQ even reaches an all-time high, because it seems like that divergence between both of those assets remain. I mean, this is one of the largest divergences I've seen in some time, right? I mean, we're not even close to the all-time highs yet. And I want to say that lightly, because I mean, today alone we put in almost over 1,000 points since Monday's low. So another 1,000 points to the upside, we're just going to be shy of another all-time high on NASDAQ. But it would be crazy to see it put in another third consecutive day into the week, into the highs. But we'll be patient. We'll see whatever the market wants to give us. At the end of the day, it's our job to put on a trade that's favorable from a risk reward and win rate standpoint, and then manage the risk from there, right? The market's going to do what the market wants to do. And it's another testament to really just show how quick sentiment can shift in the market. I mean, just last week, right? Everybody was, everybody was scared. Everybody was calling for the floor to fall out from beneath us, and I mean, that couldn't be more not true on what we've seen this week. So, with that being said, I'm going to keep my eye on the trigger, keep my pulse on this overall market, and hopefully Trump comes through, man. I know he's got something in the drafts right now talking about how we're going to do something to Iran. And we might see oil get a little bit more momentum to the upside. What's the thought on Mike's SpaceX put earnings? We'll have to circle back around to that. I'm sure if you reach out to Mike too, he'll give you a little bit more insight on what he might be doing on that. I'm not going to be doing anything again for SpaceX earnings. I'm just going to keep on that trade that we had already had on, which has 17 days left to expiration, and we'll go from there and see if it can play out a little bit more. Maybe we get a pop to the upside, maybe not. But with that being said, guys, quickly, if you are just joining us, we have on the micro crude contract on an oil. We have the gold position. We rolled down that call side a little bit to collect an additional credit. We got the Micron position on. This one's about break even right now. We were up in the profit, but this rally with the overall market has taken some of those profits back. And then SpaceX up on the day. This is one of the first times I'd seen SpaceX green in the portfolio, so nice to see that. We're long bonds right now. We got a zebra to the upside in bonds. We sold an out of the money put spread to get a little bit more long delta on an oil. And to be exact, we sold the 112, 107. We collected about $1.78 in credit. So we're gonna go from there. Got ourselves, 100% organic ranch. We'll see how these are. Again, only time will tell. We'll manage the trade as time goes on. But with that being said, we will be back giving an update on these trades. Appreciate you guys for hanging out. And let's check out what Gus got going on for his trade of the day. But I appreciate you guys joining us. And let's see what he's got for us today.
Thanks, Errol. Great trade. I am going to do something a little bit crazy here, guys. Some might argue a little bit stupid. If you guys want to do something a little bit stupid with me, then we can dive straight into this. Also, side question for the chat, is Isaiah Pacheco going to be effective in the Lions offense? Let me know. I'm getting short Palantir. All right, that's what I'm going to do headed into this post earnings move that we've gotten. We can throw the trade card up on screen right now. I'm going out of the money with a short call vertical. Obviously, all the premium presenting itself on the call side of Palantir right now as we rip towards the upside. And so I'm going very short dated just into the end of this week, as I did with USO yesterday, and we all know that's panning out so swimmingly. But I'm going short dated just into the end of this week. I am buying the 167.5, selling the 165 call. So I'm just looking for Palantir to not eclipse 165 by the end of the day on Friday. Now, I am Palantir hater number one. If Alex Karp, if Palantir have no haters, I am dead. That said, that is not the reasoning behind this trade. I think that this move just must be a little bit over-exaggerated. So before we dive into the charts, let's talk about why this move is actually happening, because I don't want to discount. I said earlier ignorantly on risk and reward, oh, well, the revenue EPS beats aren't that crazy and we're just flying. The numbers really are that good. So to be fair, revenue is up 93% year over year. U.S. commercial revenue up 149% year over year. They're at $764 million in U.S. commercial revenue. That's up 380% since 2024. They are bracing for U.S. commercial revenue in excess of $3.42 billion in 2026, which is up $200 million from their prior guidance of $3.22 billion. So Palantir, this was legitimately a great report. Their U.S. commercial deal value more than doubled last year to $6.24 billion. So Palantir certainly moving up in the world. Now, let's talk about what I don't like about Palantir. There's plenty that I don't like about Palantir. First of all, I've gone on and on about Palantir's PE ratio, but their trailing PE, their forward PE, and to their credit, those things have compressed a little bit. We have the forward PE ratio currently at 84, and the trailing PE ratio currently sitting at 138.2. So those have become very compressed. There was a time when Palantir was at a 425 current and a 600 forward PE ratio in the peaks of 2024 and into 2025. Those times are gone. Palantir now has virtually erased their losses on the year. They had a really rough start to 2026. The low of the day on January 2nd, the first trading day, was 166.34 or some such. So they were down 29% on the year, and now they're up 29% on the day. My public school math tells me that's pretty close to the same number. And as we can see, that obviously is the case. We're $4 from completely erasing these losses that we've seen so far on the year. I think this is just an exaggerated move. I talk at length all the time about how one of my favorite strategies to deploy is fading big earnings moves like this. And it's not even to say that, the move might not be substantiated. I just gave you 10 reasons why it could be. The revenues are absolutely soaring year over year, and everybody's particularly excited about that U.S. commercial revenue. I think that Palantir could easily be at $200 by the end of the year. However, it's just hard to sustain this type of bullish momentum in a company this large. And when I say this large, I mean market cap, because need I remind you, even though they've now hiked their guidance to $3.44 billion before the end of the year for $6.24 billion total, we're talking about a company that is valued at $388 billion right now. Okay, $6 billion in revenue, $388 billion valuation. So it would take north of 50 years for Palantir to make enough revenue to be the same number as their current valuation. And that's obviously revenue, not profit. Now, they have great margins, but this is also an expensive business to be in. Everything in the AI space and the defense space is very expensive, from personnel right down to materials. It's all expensive stuff. However, I'm not giving some giant long-term dissertation on Palantir right now. I'm talking about what happens before the end of this week. And what I think happens before the end of this week is that it is really, really, really hard to get to log a green day after a day like today. It's just the nature of the market. If you have a day, even if Palantir was up 10, 12, 15% today, I would be saying these same things. We're talking about it being up 30. It's really, really, really hard to log back-to-back green days. And, you know, to be fair, it does happen. It's more or less what we're seeing with Microsoft right now, to give another example. Hasn't been this exaggerated. A 29% move on Microsoft from 400 would be $520. We're not even to that yet. But we are seeing Microsoft string together a bunch of these gap days right now. It's possible. I'm not saying it's impossible. However, Palantir, 29% in a single day. This just feels like the profit takers come through tomorrow. There are institutions, there are individuals who got long Palantir, excited about this earnings call, who are now up 30% on those positions if they have shares, multitudes more if they have options, and even more so if they're naked. And I think that some of those people are going to be happy to take their profits. We started to see Palantir lose steam intraday today. Let's go to a shorter dated chart at pretty much this level that we're at right now, 162.50. We've briefly eclipsed that for a few moments, but you can see the resistance seems to be coming in right now. These are 5-minute candles that we're looking at. For the last half hour or so, we've been struggling at this 162.50 level. And as I say all the time, when you're talking about parabolic upside like this, each percentage point becomes increasingly harder to get on the back end. It's what I said a bunch of times about SanDisk as I was losing shorts over and over on the way up. So I'm going to step in front of this. This is not as aggressive. I would usually not be this aggressive with my entry and my time horizon on a position like this. When something seems uncapped in the way that Palantir is just flying to the upside right now, I would usually say, oh, well, I'm going to wait a day or two. I'm going to wait for a red candle to come through. But I really want to capitalize on this before the end of the week at the peak of call side premium inflation. So that's how I've chosen to go at this. Centered this around the 165 strike because there is pretty well established resistance here at this 162, really basically this level that we're at right now, 162.50 to 163.50. We've seen it hit this ceiling a few times in the past. Now, this is obviously a different situation. We have a major catalyst pushing them this high, but I just find it really hard to believe that they can log another green day tomorrow. And I'm talking about tomorrow and not the end of the week because I think it all feeds into itself. I think if Palantir is unable to log another green day tomorrow, then I'm fairly confident that we're below 165 by the end of the week. If they go even slightly red, even just dip into the 150s, suddenly at the end of the day tomorrow, Palantir is $158. I have $7 of wiggle room, and I only have to make it through 16 more trading hours to get this home for max profit. Now, I have done something very differently here, something that I don't usually do. You guys know when I take a vertical, I usually don't hesitate to put these on in the money to get the way more attractive risk premium and let these things move in my direction. With Palantir, I'm not doing that because of how much I'm stepping in front of a freight train right now. It scares me out of wanting to try to let this dip back down and do some crazy stuff centered around 160 or something like that. That feels like I'm getting too cute with this time horizon. If I had a broader bearish thesis about Palantir, even just into the next month, I'd do something that was 2 or 3 week dated, and I would look for I would look for something in that vein. But in this circumstance, because I'm stepping right in front of a freight train, I've gone for this 165, 167.5, selling the short call vertical rather out of the money to give us a little bit of a head start. Now, you are going to pay a price for that. This is $163 of buying power for 92 of credit right now. Let's verify those numbers. Yes, 163 buying power for 92 of credit. You can get a better entry than I did. I got this filled at 88. So there is now another $4 or $5 sitting on the table if you would like to follow me into this trade. 2 to 1. I guess I should say 1 to 2 to use my usual ratios. A 1 to 2 reward to risk here is a little scarier than I typically like to get involved with, and it's very scary when you're talking about something that appears to just be flying to the upside with no reason to stop, like Palantir. But I'm willing to do it just because of how strong this and again how strong I mean like the last hour, but this intraday 162.50 level seems to be a pretty decisive level. We're rejecting off of it intraday right now at 162.12 now, coming back down a little bit. And as you can see, I mean, there's been 3 times in the last, really just since the beginning of the year, there's been 3 times in 2026 that we have seen confirmed rejections off that level. And this one in early June, last day of May, first day of June, is particularly interesting to me in a purely technical context as it pertains to this resistance level, because we got a very similar thing. This is a post, I believe this is a post earnings. I guess that doesn't make any sense. They wouldn't have had earnings a month and a half ago. Getting mixed up here. Maybe this was earnings over here. In any case, we had uncapped bullish momentum in the exact same way. We go flying from just a little bit higher. This run started from 131 at the lows compared to this big gap up that we've seen today, which came off 123. So we go from a very similar level to a very similar level, and then we decisively reject that level. This level that I'm talking about, by the way, and I don't know how much this psychology is really playing into things, is roughly the $400 billion valuation level. So I don't know if institutions are scared of that level or what might be happening to market make, or if it's just pure coincidence. But 163.50 is a $398 billion valuation, and that's the top end of this range. So we're talking about that $400 billion valuation mark being a tough one to eclipse for Palantir for whatever reason. And like I said, it could be happenstance. There could be a slew of other technical or psychological factors that are driving this as a resistance. But the steam seems to be running out. As I continue talking, it just continues to flatline here, and we're actually starting to see a little bit of bearish momentum come through here. And I'm willing to step in front of this and hope that 165 is the ceiling, with the momentum starting to be sapped out of this a little bit right now, with the ridiculous valuation that we're seeing relative to their revenue. And even though their revenue numbers are incredible, we're still talking about a very, very lofty valuation relative to those numbers. And perhaps more than anything else, because it is really, really difficult to continue to log legs to the upside immediately after you get a move like this. Now, like I said, I actually, and I will say, I just went on about how I'm a Palantir hater, how if Alex Karp has 0 haters, I am dead. Love this company as an investment. Because for the same, like a long-term investment, I mean, for years and years, this could very easily, I mean, I'm being tight here. I'm doing, I'm looking for a dolphin dive, as Errol and I like to have coined it, the opposite of a dead cat bounce, a live dog sink. I don't know. But yes, the dolphin dive is what I'm looking for here. Just a couple red days before higher highs. If you want to know about my thoughts on Palantir in the long term, it's the same logic that I extend to Meta, okay? Alex Karp is a scary, I would argue, evil man. Those are the people you want to have your money, okay? This is what you want to do. If Alex Karp, if Mark Zuckerberg are Illuminati lizards, why would you not want to invest in their companies? They're obviously going to work out. I've gone down the tinfoil hat rabbit hole a few times over the past few days, but Peter Thiel, deeply involved with this presidential administration, even more deeply involved with J.D. Vance. Should we ever get a J.D. Vance presidency in the future, Palantir will be getting every single deal. I assure you of that. So I think this is a good put your money with the lizards situation as a long-term investment. All I'm looking for is just a slight little blip on the radar into the next couple of days. And when I make the comparison to this run that we got in early June, let me be very clear. I'm not expecting this type of downside. I'm not expecting us to retest these lows. These numbers are legit. This growth is substantiated. I don't discount any of that. I just think that we could maybe just get this first candle. And then we start to work towards higher highs. If we could just get a little blip down to 155, little bit of consolidation, and then we rip higher. That's really kind of more how I foresee things. I thought deeply about calendars and trying to get super cute with the double doink thesis. I'm not going to do that. I'm willing to take it one step at a time, but stepping in front of Palantir before the end of the week. Let me hop over here to chat. Did anybody answer my Pacheco question as well? I'm curious, besides production in my ear, of course, who disagrees that he's going to be effective in that offense. Nothing wrong with a little stupidity. Thank you, Ranch. Appreciate it. A lot of with that being said, being thrown at Errol. Why is everything ripping? Is today Taco Tuesday at Tasty? It is Taco Tuesday at Tasty. And apparently we're tacoing out of the bombing Iran as well. So it all aligns. LOL, he's right about Karp. Thank you. I'm all in on the Lizzies. Good. Thank you, everybody. I appreciate the lizard. I appreciate the lizard love. Yeah, put your money with the lizards. Yeah, good. Yes. But yeah, this is a move that I would usually be very hesitant to step in front of, especially with this time horizon, especially with this uncapped momentum. But we're just seeing just enough of a little bit of a crack in this momentum that I'm confident enough to get involved with this trade. And that's the thing is, and that's kind of what I keep saying and why I say that this is a little bit stupid, because if this was a 1-to-1 risk profile, I'm slamming this. Give me 5. I'll take them. But paying the 2-to-1 premium, having to post up double what I stand to benefit from a company that is ripping to this extent. That's a scary thing to do, particularly when there is no, tangible resistance put in yet. When I put this on some odd 30 minutes ago, we're still just ripping pretty much unchecked to the upside. That would have been something like this candle. We had just begun to stagnate a little bit at this 162.50 level, but I'm willing to do it. If for no other reason, then it's going to be really hard for them to have a green day tomorrow. If they have a green day tomorrow, if Palantir puts in 30% today and then another 5 tomorrow, good for them. Congratulations. Like I said yesterday with the oil trade, if I'm wrong here, if this happens to be the statistical anomaly where they can put in another green day right after a 30% green day, good for them. I'll take it on the chin. These things happen. I do have a tiny bit of breathing room as well. I mean, if provided that we hang at this level. But if we were to close at 162.50, there's a world where we could still log a minuscule 1% green day tomorrow, and I still do have just enough breathing room for that. But one of these days is going to need to come through red for me before Friday. And honestly, that's part of why this trade is so attractive to me in the first place, is because I think if we just get one red day by Friday, it doesn't have to be big. 2%. This is home. I mean, like that's all that it takes to get this home. I would be shocked to see them emerge with some other catalyst this close to the earnings catalyst that we just saw. That would be shocking to me if there was something else to push them like substantially higher. I think if we get the 1 day of drawdown, that's all that we're going to need. This is under 165 by Friday. We can take our money and move on to the next one. I only have one of these on. Risk profile is scary, and I'm being very tentative, but I do really like the spot, given the historical resistance, given the difficulty of logging those 2 straight green days, given the consolidation that we're seeing at the historical resistance right now. Feeling pretty good about this one. So that's going to do it for me from Trades of the Day. I will do it for Trades of the Day in general. Thank you to Mike, Jermal, and Errol for contributing theirs before. That's all I'm going to have for you all today. I will see you guys later on Overtime with Chris Vecchio at 3 p.m. Come hang out with us then. I'll see you guys next time.
It's good to be here in the studio.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, it's not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets. Tasty Trade. Trade with us.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Welcome back. You're watching Tasty Live. I'm Chris Vecchio, here to continue some more live trading, live programming as we make our way through the midway portion of what's been a very big day here in equity markets right now. S&P 500 up another 135 points, building on yesterday's 110-point gain. The NASDAQ's up 3.2% right now. NASDAQ futures up at 29,811. But that's not really where the story ends, folks, because there's a little bit of a divergence there, right? While the S&P is pushing into new all-time highs, the NASDAQ is not and still has some ways to go, which is why we bring on a guest here for today's program. Dale Pinkert joins us again. The audience doesn't know this, Dale, but you and I have been trying to talk for the better part of a decade. I have had to cancel on you for a number of times. You've invited me to come onto your show.
I know
remember. I know you as the Forex stop hunter all those years ago.
I still am.
Good to see. Well, it's good to see you.
You too, Chris. Great to meet you.
So we have the S&P 500 pushing these new highs, and I mentioned the confirmation is not really clean there. But let's start with the S&P here right now, which up 137 here right now. It always gets people's attention. So what do you see here with these new highs? Is this sustainable?
Well, my interpretation is we're coming out of a triangle. And if it's a fourth wave, it implies this is 5. And, you know, if you drew your line a little differently instead of horizontally, but with a little bit of an angle, looked like it broke down going home Friday. And you know, Wednesday was one of the wildest days I've seen, and you could tell I've been around for a while. And so it was really algo time. They cleaned out buy and sell stops a few times during the day Wednesday. So in many different instruments, not just the S&Ps, in metals, it was almost disorderly. So, you know, they cleaned out the bulls that got out with the line that you're showing, and that was a close on Friday. It doesn't look like a candle most people would buy, right? But it was still, it got right back inside of the triangle, and even intraday, I think it was maybe Tuesday, we tagged it and we're headed higher. I don't like to be a hero, and I capitalized on the semi-break, especially in Micron, because it was a parabola. I compared it to the weekly in silver. I said that Micron would end up looking like silver did, which lost 50% of its value. SanDisk did, but Micron didn't. So I like this S&P strength because I prefer to short weakness. If I get Micron back above 1,000, I'll be laying out my shorts again. My long-term target's 400.
Long-term target is 400. We don't hear that often around these parts. What about Micron in particular in this chart setup that makes you feel so compelled to look down there? Is that anything to do with the cycle?
The
weekly chart. So we'll head over there.
Yeah, parabolic, right? And now put up silver. Parabolic, right? So basically, one of the things they had in common is they were both parabolas. Today, I learned, and you know, I've been doing this for a while. It's my 50th anniversary in the industry. That when you have, I found out today, you're either growing or dying. I really didn't know there was a tight correlation between silver and semis. Someone shared a chart in our community today. So I'm looking for a rally to sell in the semis and one more washout. That would imply that even though we're getting a nice bounce in the metals, that silver would take it out too. I'm really not a believer this is a bottom in silver or gold, and I think that because I'm not convinced that we've seen the high in yields, and the metals are becoming more yield sensitive than dollar sensitive.
Talk to me about the yields here. I mean, this has been actually a pretty violent move over the past week or so, and I know oil prices have come off here. The 10-year still at 4.65%, which is only about 6 basis points from the yearly high at 4.71, and oil has come off, what, $20 now from the highs? Brent was over 100 2 weeks ago. What's the problem with yields right now? Why aren't they getting the memo, or are they sending a different message to this market?
There is some divergence, almost a three-drive pattern, but I'm looking for over 5% on the 10-year, maybe up towards 5.10 before it completes. The only thing that would change the picture for me would be closing back under 4.5. That would change it. And it's the same old story, supply. And, we did intervene, something I've been talking about, that it would take the U.S. to intervene to stop the decline in the yen, because the BOJ couldn't do it by itself. So that's one of the reasons to take the heat off the bond market, try to lessen liquidation by the Japanese trying to defend their currency. But I do believe there is the beginning of repatriation happening. That may have been a major high in the yen. I'll be interested to see where the yen's at when we're at over 5% on the 10-year. It's the market likes it because it's stabilized. But if we rally and have another break in U.S. dollar yen, say we trade back to 160 and then down towards 145, you're going to see it affect equities too, the unwind of the carry trade. It's interesting. The same thing happened.
Can we go on that? Can we go on that for a second? I mean, that seems so fundamentally different what we've seen over the past few days, so to speak, than what happened in August, July 24, when you have the carry trade unwind in the end and NASDAQ's down 15% from high to low. Maybe it's not that different then, because we just got confirmed intervention in the market and the NASDAQ washes out right around the same exact time.
You haven't seen yet. I mean, this is just a start. So,
the yields, Dale, I mean, that I don't want to gloss over for a second real quick, because if Japan and the BOJ don't have enough ammunition to defend their currency, they can go to their treasury reserves, sell them, get their dollars, convert them back into yen. So Besant stepping in, to me, reads like an effort to keep long end yields capped in a certain sense.
Well, eventually there was an accord between Treasury and the Fed before Warsh took over the chairmanship. And that accord, I believe, is eventually going to lead towards yield curve control. And the sacrificial lamb of that is the U.S. dollar.
You're the second person from outside the network I've talked with today who's mentioned yield curve control. That can't be serendipitous.
Well, I've been talking about it for a while, ever since the nomination, because this would be the first time that, the Treasury and the Fed, it's like they're one. Kind of like our military with Israel, CENTCOM moving over to Tel Aviv. So, this is the plan, and it's been done before. We all know Japan did it, but the U.S. did it during World War II. And
yeah, we did. We have implemented this before, so it's not like unseen. It's not just a Japanese thing in recent years. We've had yield curve control with the Treasury and Fed working in hand to pin rates, for the war effort. So, but this isn't that type of situation, is it? Why do we need? I mean, I guess we are in a war. Do we need yield curve control because of the war?
We're going to need yield curve control to contain rates. And, contain rates and the interest bill that we have to pay.
Well, we might be going down that path right now. Certainly, we're spending like a greater chunk of our federal budget on interest payments now just to service the debt. It's becoming, I think it's bigger than most line items at this point in time.
Look at a monthly in TLT. Where's it gone since the break? So we, right? That's not a bullish chart to me. That's a market that still could wash out. In fact, Hank Paulson came back into the public eye about 2 months ago, suggesting that the Fed should have some type of break the glass measure in case things seize up in Treasury. And Hank's been through it before.
Hank has certainly been through it before here. So we've skated up a bit on Micron here, a little bit on NASDAQ. There's a divergence, though, here. You mentioned that in your notes. When you take a look at something like NDX versus SPX, you're not seeing a market that's returned to all-time highs yet. Now, granted, it's trying to close that gap with earnestness right now, 3.35% higher on the session. NASDAQ's only up 1.91, both impressive performances here. Why does this sort of divergence concern you here? I know a lot of chartists were talking about a diamond top up here and, potential a three-wave correction. I know you're an Elliott wave theorist, so.
Not really. I'm an amateur. My main tool is RSI, which I've renamed Real Simple Implicator. By confirmed highs and lows, tell me to stay with the trend, and then I have techniques for divergences and turning points.
So this four-day chase move to the upside, though, how are you approaching this? Because if you weren't already long, I can understand why a lot of retail traders themselves may be thinking that they're chasing after 5% since last Wednesday's close.
Yeah, I wouldn't chase it. I did put out a buy in our room. I run a social trading community. It's free, and said that we could have a C wave in Micron, ABC, and I'm looking for over 1,000. So I think NAS 100 will not make a new high. I think 30,000 should cap it. And, there are a lot of people that are going to try and top pick S&Ps, and I'm not saying it won't work, but why not short something that hasn't made a new high yet? Relative weakness and strength, I think, is such a simple thing for people to learn. When you have a big red day, what's green? Those are your long candidates, right? When you have a big green day and what's red, sell that stuff on rips, because the market will tell you. It's not a new invention. Bill O'Neill, Investors Business Daily, it's been around a lot. So always short the weak sister and buy breaks in the leaders.
That was one of the comments that several folks actually at our chat were making last week in Google. You had that big down day, of course, on Wednesday with the Fed, but Google, for some reason, was holding up in that tape, and sure enough, when we go out a week later, Dale, Goog here has made quite the move. It's back up to 375, and it cleared out its July highs along the way. So, yeah, look for strength in down tapes, look for weakness in strong tapes, and that's usually a good sorting process to find.
In a New York minute, and the most important word for traders is next.
Next. We always got to find the next opportunity. Dale, we need to take a quick 90-second break here on the network. Folks, we're going to be back with more live trading just around the corner. Be sure to stick around Tasty Live. Hey, thanks, Dale. Finally, we got to talk face-to-face. Thanks for joining us here on the network.
You're welcome. Adios.
See you after the break.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
We're back. We're here for a quick little Futures Power Quarter Hour by CME Group, sponsored by CME Group. I'm your host, Chris Vecchio. He's Errol Coleman. Errol, what on earth is going on? Why are there so many green bars in my account today? Oh, I can't hear Errol, unfortunately, studio. You mind piping him in? The audience probably gets him, but I don't have the sweet sound of Errol's voice.
That handled here in a quick second. I know Chris can't hear me right now. All right.
Now I can.
All right, never mind, guys. We'll change what we were about to say since Chris can hear me now. But no, Chris, you should be doing very well today. If I'm not mistaken, you had an ES trade that you weren't super fond of, but that thing has had to have recovered. I mean, 1,500 points to the upside on NASDAQ since Monday's low. Chris, what's going on with this market right now? How are you perceiving things? I mean, I don't know what to say. I mean, this is really impressive. I mean, I'm looking at it right here, trading at 29,888 as we speak, at its highs on the day. This thing is all gas, no brakes.
It's been all gas, no brakes. Today has been a very good day for me. Yeah, you know, Errol, sometimes patience is a virtue, sometimes it can be a vice. Throughout July, it certainly felt like a vice for me, particularly trading MES. Yesterday, we were talking about how this market closes will shape whether or not it's worth hanging on for the ride because there were still 45 days left to go in the U cycle, or having gotten back to break even, maybe get out and call a breather after what had been a stressful month. The market closed above the breakout point yesterday, so sticking with it became the plan.
Okay.
And that virtue, less vice, more virtue. We're now at 77.82, which is a new monthly high, a new yearly high, a new all-time high. Can't say I had it on my bingo card for this week, but certainly this has been an explosive market where a rising tide has lifted a lot of boats today and saved a lot of skin around here.
Yeah, I mean, I think we got to pour one out for Leopold because, I mean, to get liquidated at the bottom of these moves, the memory names, SMH is up, Micron is up, SanDisk is up, Intel is up, and I forget the rest of the names that were in his portfolio too, but we got to pour one out for him because, I mean, that's probably one of the worst feelings. You got Ken Griffin in swooping in on your book at the lows of these moves. I mean, almost the lows.
Did you see Citadel's note this morning?
No, what was it?
They think now that all the leverage has been cleared out of the system, it's a good time to get long.
Oh.
The AI trade again.
Is that the case? I was going to ask you, actually, Chris. I don't know if you were going to say the same thing, or I don't know if you're going to piggyback on that comment, but I mean, how are you perceiving things like semiconductors right now? I mean, SMH is a perfect ETF to visualize what's going on over there. I mean, does this change things? You know, what's going on over here? I mean, the sentiment is shifting so quickly. It's difficult to stick with the current conviction in any of those markets right now.
No, I don't think anything really has changed. I mean, from my perspective, a lot of, I've had a lot of action in some of these names. So the drawdown wasn't a lot of fun, but today, like TSM is back above water. What else here? Western Digital, short strike is at 510. ASML, short strikes are at 1680.
They're all out of the money, right? Yeah, those are.
They were not like 4 days ago. A lot of these are sitting at max loss.
Yeah.
It's not having a good time. Today I'm having a very good time comparatively speaking.
Yeah.
But it's now the question is whether or not we can see further extension from here. So I got a question earlier today. I want to address this up front because this is a futures 15 and this is one of the futures trades that we put on back in the month of April.
Okay.
Looking all the way out to the end of the year, the December 31st expiry sitting at the 8,8200. We could take this off today for $89.50. When this was put on, it was put on for $28.50. So it is a nice little winner here that we have working for us right now. But the idea there is still valid. So it doesn't matter what the position's doing. It doesn't matter that it's making money. It still needs to work, right? Like, get back in the mines. You need to go do some more work for me. You have more profit to make for me. And the rationale there was if we go back to where we were in April, we had this string of 7 days up, 7 in a row. Over the course of 10 days, we basically put in a 9.8% rally. When you looked at the mix of the data historically, just forget where we were with the Iran war and tariffs and all that jazz about what's happening in D.C. What mattered most was history told us that 19 of the past 20 times you had a year with at least one 7-day winning streak, the market was returning close to 20% the rest of that year. When you had 9.8% up over 10 days, the market was returning something like 18% for the rest of the year. That period in time henceforth. So what was 18% on top of where the market was in April? It was about 8,000. There was literally nothing else that went into this trade beyond thinking about what the history told us. So sometimes it works out, sometimes it doesn't. It didn't look like it was working in July. There was a lot of time left, so there was no reason to take it off. Even though it's now working and the market's pushing into new highs, there's still nothing to do here because there's so much time left and it's doing what the trade was put on to do. So managing it, there's nothing to change. MES is a different story because this is something where the winds have shifted in our favor quite quickly. Errol, if this is a market that looks like it's breaking out to the degree that it is, then we may have just seen the next leg of a more meaningful rally get started. And that does not warrant exiting a position either, despite having some money in the pocket or money on the table. It's not in the pocket until the trade's closed.
What's your take on oil right now? We saw a pretty big gap down. We're seeing a continuation to that downside move, right? I think. No, go ahead.
My question for you first is how?
Yeah.
I mean, are you chasing this? Like, how are you looking at these stocks right now? Because I know you're someone who trades MNQ. I know you operate sometimes in those names. Do you sell this rip? I know that yesterday you and Gus were talking about, looking for the thing to stall out a little bit. So you've had to make a positioning adjustment or perhaps reconsider your perspective.
100%. And I mean, to the point that you're making, I mean, I'm definitely not against getting on a little bit of short delta. I'm kind of the side of not trying to FOMO right now. So not that right now is not a good opportunity to get on some short delta, but I do feel a little bit of that FOMO. And no, I didn't catch the rally to the upside. So that's why I'm a little bit more cautious diving back into the short side of things, because I don't want, excuse me, that fear of missing out to be included with my trading decisions at all. So I mean, with the divergence we're still seeing between both of those assets, I think it is still attractive to get a little bit of short delta on now at these levels. Right now, in hindsight, now that we're up 1,500 points since Monday's low, or almost 1,600 points up since Monday's low. In hindsight, it's a little bit more, right.
The VIX is up almost 70 cents today in this strong of a tape. I mean, there is outrageous call buying going on right now. I think Frank pointed it out earlier. We had 1 million calls print.
Wow.
By 10 o'clock.
So what are we pricing in some risk to the upside? How do you perceive that?
I mean, when you get these kind of moves, it speaks to kind of blow off top.
Yeah.
To a certain extent, right? One of the rules of thumb that I've always abided by is that volatility is typically highest at the turns. So that means vol is going to be spiking at the lows. It also means that when the top is being carved out,
right,
you kind of get this excitement, and all of a sudden volatility starts rising because people are aggressively buying. Options, placing options trades that are bidding up the cost of vol. So, listen, two things can happen at once. Over the past decade, the S&P has averaged a 0.84% return in the month of August, up 7 out of 10 times. It's also the case that volatility has tended to go up in the month of August. I know we don't quote things in percentage terms around here, but because it's just a spit out 3% higher volatility. So, if we keep seeing this rally, Errol, and vol doesn't break down into the 15s or even lower, it does beg some questions about what happens when we get to the mid part of the month and we get through OPEX. And then we start looking at the scary weeks when everyone's on holiday and we got to start thinking about Labor Day and going back to school. And then September and October just sucked for the market. So
yeah,
it creates an interesting dynamic here, though, in the short term.
No, it does. It does. I mean, I think regardless, I think whatever side you're on, I think there's opportunity right now at the table. I mean, S&P 500's into all-time highs. And again, to the point that you were just kind of making too, right? We're seeing the rally off of NASDAQ. But we're still shy of those all-time highs as well. Not only that, I mean, you add oil into the mix. I mean, how do you get a grasp on things right now, Chris? Is it something where you kind of just sit silent? Because, right, if you're in some of the positions, it's nice to be along with the ride. But when you're thinking about doing something right now, whether it's oil, NASDAQ, S&P 500, whatever it is, I mean, do you sit on your hands until you gain a little bit more clarity, right? Because I even feel in something like oil, I mean, the sentiment over there is still shifting like crazy. So what do you do in a time like this when all assets are kind of going berserk right now, when you're really at the mercy of another Trump tweet at any moment here at the same time? So, I mean, what do you make of? I mean, I don't doubt he has something in the drafts waiting to say we might, end civilization in Iran, right?
We're not paying $100,000 a month for access to his tweets.
You're right. Not yet. No.
Not yet.
No,
I'm not paying that money for tweets.
Hey, I think Tasty could come through. Hey, I will say, I think if Tasty was down for that, I think a lot of the viewers would love it. Imagine we had access to that and we spoke about it while we're live here on air, going over what Trump's got going on. But anyway, it's probably just it's a latency edge they got over there. So
I can guarantee that information is going to leak out for free. I will protest that line out of it.
It's probably only going to be useful to algorithms and things like that. I know it's only a little bit of a head start by just like, just that latency that they're able to market that off for. But no, I mean, nonetheless, oil sitting at its lows right now, Chris, such a volatile market we're seeing here. I really do love the volatility though.
Oil dropping, dollar a little bit soft, yields bouncing back and forth. To me, the most interesting chart about this is gold still. Our last guest, Dale Pinkert, is a little bit more bearish on gold than I'm certainly leaning long right now. I love the fact that this thing is just like a spring coiling down here. I'm going to look to silver here too. it kind of feels like we're starting to turn a corner of sorts. Errol, I know you're not much of a technician in the way that I am, where I paste charts around my house. But there's this head and shoulders person inside of me that's saying that this looks like a market that we, maybe we're carving out a little bit of a bottom down here. Maybe. Today would be a breakout kind of day. So the metals are looking good, stocks looking good. There seems to be a lot of liquidity coming into the market. We're gonna have to figure out how to, operate around some of these earnings though, which is why we have the perfect guest coming up next here. And I say guest, and I mean host. And when I mean host, I mean TP, Tom Preston.
Chris.
We have more live trading coming at you. Coming up next, Errol.
Give me 5 seconds of your time. What are your thoughts on bonds before we leave here?
Garbage. QRAs tomorrow.
Good to hear. That's a little bit more
garbage.
context. Amazing. Cool.
That's it. See ya.
Cool. Thanks, guys.
Explain pot odds.
Pot odds is my favorite term, but pot odds in the poker world or gambling world refers to having a greater payout than your implied odds would suggest. So let's say I have 3-to-1 odds to win a pot, but the pot is giving me 4-to-1 odds to make that bet. I would have a positive expected value over time. So in trading, let's say you have a defined risk debit or credit spread that's currently at a max loss, and let's say there's 30 days left to go. There's not really a reason to close that position because you're already at max loss. You can only go up from there. So in that scenario, that would be a positive pot odds scenario or something that would give us pot odds to stay in.
Get live trade ideas, technical analysis,
Earning setups,
option strategies,
macro insights,
and real positions from traders putting capital to work
in real time.
only at tastylive.
Only on tastylive.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Alright, you maniacs, let's get trading. 1 p.m. here on Tuesday afternoon. I'm Tom Preston. Lots going on in the market today. Another big rally in the S&Ps again. And why? Well, hey, sometimes they melt up. And S&Ps are up right here, 138 points for the SPX. That's a pretty big move. 1.82%, impressive for a $7,700 index. I guess the point is crude oil's down again, down 5%, CL down $4. All is right with the world, I guess, as far as what's going on in the Strait of Hormuz. Yesterday, I pushed out a cherry bomb. Oh, you should have got it this morning, actually. Sorry. Yesterday, I wrote it, sent it out this morning. Selling a put spread in USO. Well, you can get a better price for that thing now. I think it was the 13, 15, something like that. But let's go back into USO. Here's my argument for bullish on oil. Let's do USO. There's no agreement on any negotiations, as far as I can tell. And what do I know? But I just see what's on the news. Right, or hear what's on the news or whatever. So, President Trump saying he's going to obliterate or decapitate Iran or whatever if they, continue this or don't negotiate. And it seems like they're coming to the negotiating table. Iran says, no, we're not, yada, yada, yada. So for whatever's driving oil down, and for me, it's not the why as much as the what. So oil being down 5% again today. USO is the ETF that tracks it. Why trade USO versus CL? It's just a lot of folks don't have futures accounts. You should open up a futures account with Tasty just so you can trade this stuff. But again, margin requirements are a little bit smaller. Crude oil is a big product. USO being an ETF, a little bit more manageable. Volatility is very high in there. If you want to look at a chart of USO. So this thing is just tanked. Volatility's come in a little bit. And just to illustrate the point about the relationship between volatility and crude oil or physical commodities in general, is physical commodities, or the ETFs that track the physical commodities, can have a linear relationship, a down, down, up, up relationship between volatility and price. As everything is right with the world and the price of crude oil comes down, so does the implied volatility. You kind of see that same thing happen in grains, for example. So the volatility's come off a little bit as USOs come down, but the bottom line is it's still at 57% volatility here in the August. Let's check the skew. It's 1584. Let's see what it is. Down $3, up $3. Yeah, the skew is pointing to the upside. So if I look at, let's say, the 15 puts in the 16, or the 15, 16, it's in between here. Down, let's say, $3, down to the 112 puts, 350, even up $3 from the 115s, and that's still, the stock's even in the money or closer to 116 now. Let's use 116. Down $3 to the 113 puts, 395, up to the 119s, 435. The skew is pointed to the upside. If you think the shooting war is going to resume at any point in the next couple of weeks and that crude oil might find a bottom, that's the argument that I'm making for a bullish trade in crude oil. Buying the 109s, selling the 111 puts, 109, 111 put spread. I'm collecting 68 cents for that. The markets are wide-ish in this stuff, but not horrible. I've gotten decent fills in USO before, and I would try for 68, maybe 67, but 70% probability of making half its max profit, so about $32, $34 in the next 17 days. And that could happen fairly quickly versus a max risk of $132. I don't want to take a lot of risk in crude oil. I'm happy with $132 worth of risk. I should say, if I lose $132, it's not going to destroy me. I don't want to, obviously. Nobody does. I want to make, but if I can make $34 of profit in the next couple of weeks versus $132 of capital, that's not a bad trade. I'm going to send this off at 68. Filled at 68 cents. Let's move on. I have a lot of things I'm looking at here. That's USO. CMG. CMG down 7% today. Chipotle. I shouldn't laugh. It's not funny. Okay? It is not funny. Apparently, they found salmonella in a Chipotle's in the jalapenos at a Michigan Chipotle, something like that. And so they're crushing the stock. Salmonella is not funny. I don't even know why I laugh at that sort of thing, and I don't go to Chipotle's. Okay, I live in Central Texas, outside of Austin. It's home of the taco, home of Tex-Mex. Okay. You don't go to Chipotle. Maybe somebody does, I guess, people, whatever. But I go to actual, little taco trucks, things like that. I've never been sick in those things. Chipotle, who knows where they get their food from. But anyway, I think 7.5%, 7.6% probably a little bit of an overreaction, or there's something else, right? Is this going to destroy CMG? I don't know, maybe. But this is what the chart looks like. It just nosedived. Anybody have an opinion of the Chipotle? It's in, and I don't want to insult. If you go and enjoy Chipotle, look, hey, more power to you. That's awesome. Apparently, you know, the jalapenos are an issue. Okay, so let's just look at this. Let's look at the skew. You know, I love the skew. I already have a trade loaded up in here. Stocks at 34.51, a nice even number. I like even numbers, folks. Down $1 to the 33 halves at 40, up $1 to the 35 halves at 48. So yeah, the skew is pointed to the upside. With the 3-day option, let's just look at the metrics on this thing. If I have $589 a margin of buying power effect, 83% probability of profit. P50 is, I've warned you prior to this, but in other shows, the P50 number sort of doesn't work so hot with a couple days expiration. But if I wanted a short-term trade, let's go out and look, what are options? 10 days? Let's kick this out to 10 days, see what I get. 72 cents versus, what, 32 cents? Yeah, so I can get twice the premium if I get filled. These markets are wider. You know what? Let's go back to the 7. Let's go back to the 3 days. Let's see if we get a winner by the end of the week. Because I like to do these trades on air with you folks. Talk about the winners and the losers. Hey, I have losers too, just like you do. Let's offer this out at 36 cents. See if I get filled. Nothing done. The jalapenos are resisting me. Let's see here. NU. Daniel Mentia. NU. Is NU New Holdings? Is that? Let me look that up really quickly. New Holdings, NU Holdings. Is that a? It's a Brazilian bank. It has options coming out. They have earnings in the next couple of days. What's not to love? Well, yeah, I mean, it's a $14 stock, $14.50. Let's see. Can we find anything 17 days? It's not bad. I mean, there's a lot of open interest in NU. I've never traded NU. Daniel, any opinion about under my salmonella? What do you think of NU? Well, let's look at the skew. 1446, right around 1450, down a buck, up a buck. 1350 puts, 13 half puts 28, 15 half calls 32. So skews pointed to the upside, Daniel. That's as much as I know about it. I would go out to 17 days if anyone wants to look at a chart. And I don't really look at a whole lot of charts, as you know. Stock's been rallying. Maybe it'll keep going. Apparently, it's a Brazilian bank. Let's hear it for Brazil. So let's sell these 13 half puts at 20. Let's do 26. Let's take it. And if I can make, and again, it all comes down to the metrics for me. Here, the P50 number starts to come alive again with 17 days, 82% probability, 76% probability of profit. If I can make half this, if I can make $13 on this trade in the next 17 days, I will take it. Just like Palantir. So, you know, yesterday, put on a short put spread in Palantir. Did I know it was going up? Nope, not at all. Just got, it was a fortunate trade. I took that off, you know, immediately. Well, when the market opened, right? Took it off for, I mean, it was basically free at that point. It didn't, I paid what, 3 cents for the spread. But the point is, I will look to take this off. I don't have any strong opinions about NU. Let's offer it out at 26 and see if somebody bites. I bet they will. Filled at 26. Let's keep going here. Let's go into SpaceX, maybe I'll save. Oh, one of the things I do want to look at is the prediction markets. So let's see. And these are run by or pushed through Kalshi. Let's see if we can find something. 1 hour. I don't want 1 day. Do they have a trade here? Let's see what else we have. Crude oil daily close. Maybe the crude oil daily close. That might be fun. The current price is 79.38. And I've been playing around with the prediction. I've traded prediction markets before on on other platforms. Now that we have on Tasty, it's right beside it, right next to us. Let me go back to Bitcoin for a second. I might have clicked on the wrong thing. So 1 hour. Yeah, so here it is. So I can have a resolution in, what time is it? 1:13 in 45 minutes. So we can't see how this works out live. But this is how it's going to work. So if I think that Bitcoin, which is right now is 64,079, or 64,082, is above 6,400 in an hour, in 45 minutes, and I say, yes, I think that's going to happen, and I pay 78 cents for that. So what I would do is dollar amount, let's say $100. So I would lose $100 if I'm wrong. If Bitcoin is actually below 6,400, I would lose $100. If it's above 6,400, I make the difference between what I pay and $100. So it would be, yeah. So in other words, it's the difference between 82 and 100. So I'd make about, $17 in this case. It's rallying up. Anybody have an opinion about Bitcoin? You want to have a long shot with a no? Some did CMG at 35 cents. Jerks. I tell you, they're always trying to whack me. Yeah, bought an ATM call spread in SpaceX. We could check that out. We could look at that and see if it. We could look at SpaceX up. Hang on. All right, checking my microphone. All right, so let's just do this. See, 89 cents. No, I gotta have something better than that. Let's do the crude oil one. Crude oil daily close. 1 hour. If it's above, stuff's addictive. I think it's going to be above that price. I'm going to put in $100. If I'm right, I make 44 bucks in there. Review price prediction. Let's just ship it. See what happens. Working. Filled. All right, so I have a $100 bet that crude oil is going to be above 79 at, I guess, 4 o'clock. Okay, fine. And Brent crude too, not that silly WTI. Whatever. Anyway, let's go back into the trading. So this is prediction markets. You can get decent returns on this thing. I've been fiddling around with Bitcoin earlier, doing hourly trades, and I'm not doing size. I'm not like putting $100,000 in these things. I'm trading like hundreds of dollars, $100 here, $100 there. And the returns, theoretical returns, are pretty good, and it's something to do. Eventually, so this is a nice. So the reason I like the prediction markets is that they are to stay the odds, they are predictive. So it's about the event, not what the event causes. Okay, so how would Brent, the price of Brent being above 79 affect S&Ps? I don't know. I don't have to care about that. Or does the Bank of Japan rate decision, how would that affect bonds or the yen? I don't know. I can just speculate on the decision. So as this comes out, Bank of Japan rate decision, as this comes up, I might look at these. I want to start doing these every day just for kicks. If I can't find anything to trade, let me put it this way, folks. There is always something to trade. Okay, I do this all day long. There's always something to trade. All right, enough about the prediction markets. We'll revisit that tomorrow. Let's go into Oklo. Oklo is all right. We got time to do Oklo. So Oklo, I sold a put spread in SMR. That little in new scale. So I sold a put spread in that. That's rallying up today. Can probably might be able to take that off. Let's add to Oklo. The argument for these nuclear things is that the big data centers, the big, giant companies that are involved in AI are starting to, or I should say, their venture capital arms and just straight venture capital funds are starting, filled in CMG, are starting to invest in these nuclear startups, and that's great. Love nuclear power, and so I think with things like with SMH, the chip stocks rallying again, yeah, that could put some upward pressure on these nuclear stocks, Oklo being one of them. So again, look at the volatility is 154%. Earnings are coming out on August 7th. Let's see if we can get out of this trade before then, or not. Maybe just ride through it. Stocks at 43.70. Right in between here. Expected move. Let's just go down to the expected move. Down to 39. Sell the 39 puts. What are the metrics on here? They're bloody expensive. $1,500 to make $65 max profit. That's a little too much for a lot of accounts. Well, I don't want to do that. So let's pull this up a little bit to the 40. What do we get for the 40.38? 44 cents? Yeah, maybe 38 half. Let's do this one. I would like to get a little bit larger credit than this, but you take what the market offers. 71% probability of profit. Only $149 of buying power reduction. That's the difference. So it's a tenth of the capital requirement. Let's ship it. Generate $7.9 of theta per day. Let's ship it. Gotta love Oklo. Let us go let's look at some earnings things. AMD's coming out tonight. What do we think about AMD? Iron Condor? People? Anyone? Bueller? Nice volatility in this thing. Where's the expected move? Let's see if we can create an Iron Condor around the expected move. Just $2.50. See what we get. If we can get, I don't know, 80 cents for it, $1.10. So again, a third of the width of the strikes. So 2.5 divided by 3 is about 8 and change, so about 80 cents. I could pull this, and what I do, rats, come on. First day with the new hands, I'll pull this down to further out of the money strikes until I get that 80 cents. Oh, there. Oh, this is 5 point. No, that's a little too far. Come on. What the heck did I just do? 8 cent credit? What did I just do? Oh, I just reversed it. Sorry, folks. Like I said, first day with the new hands. I like this. So 80 cents right here. So buy the 477 half, sell the 480s, sell the 575 calls, buy the 575 halves for, let's put it out at 80 cent credit. 80 cents. Let's just do it. Fire away. Bing, sold it at 80. I'll take that. We filled at 83. They gave me a little better. Not bad. Thank you very much. AMD. Let's go into who wants to trade SpaceX? Yes. SpaceX. I know somebody mentioned who did. Who's that? Ranch size 2, SD2, was doing a bullish call spread in SpaceX. Why not? I mean, I've been burned on being long SpaceX, but now the losses have been manageable, so I'm not going to complain. But I have not done well in SpaceX. You want to see what killed me? So it's this. This SpaceX going to zero. Well, not actually, but it's dropping pretty sharp. We had a nice little rally here. Is it going to continue? Let's check the skew, people. That's all I rely on. $124, down $2, up $2. So 24. The 122 puts are 960. The 26 hold 965 with slight skew to the upside. What do we like? Bullish, bearish? LS Home Automation guy says yes, bullish on SpaceX. Hey, anytime there's home automation, you got to go for it. If I buy the 2224, and notice how, by the way, because a little bit of an FYI, so if I pay 80 or 90 cents for that, the stock's trading at 23.66. If I add the debit to the in the money call, it's 122.90, less than the stock price. It means the intrinsic value of that spread is less than the debit of the spread is less than the intrinsic value of the 22 call. So if the stock just sits here, that trade could be profitable. Buy one call, one put. Geez, just live from Vienna. So just buying a strangle in there. I don't know. Let's just try a long debit spread. Let's just try it. Let's just try it for 90 cents. Oh, they're 88 now. Oh, let's be greedy. Let's just try it. Let's just see. Nothing done yet anyway. Fine. You don't want to play. Fine. Let's go into, we did CMG, USO. Gilead is also coming out tonight. AMD, we're doing SpaceX. We got Oklo. Want to do, let's take a look at SPY or SPX. SPX, massive rally. Do we want to put on another bearish trade in SPX? Let's see. Anyone SPX? Bearish? You're probably bearish. Okay. I have a bunch of stuff on in SPX. Want to do a butterfly? Let's see what we get for the butterflies. 74 buy, sell 2, buy one of these, then drag it down. 35-cent credit for the 77.25, 77.35, 74, 77.40 put butterfly, 40-cent credit. Bullish on the SPX. Yeah, I'm short some call spreads and put spreads in there. More put spreads. So I'm actually scratching. Let's go down. Let's just see if we can do a 10.1. No. I'm going to route this at 40 cents and see if I get filled. I don't think I will. But let's just try it. Ying, ying. It's all over the place. All right, another stuff. I've got a lot of things I want to look at. Microsoft, I was thinking about trading. MSFT. Let's see. So I sold a put spread in there already. I already did this trade. I would do this again, just with 1 day to go. Microsoft is very strong. Let's take a look at one more as we're coming up to the end of my trading show here. Let's look at Gilead. Let's do Gilead. GILD. It's a pharmacy. I always want Gild to be gold, but it's not. It's Gilead Pharmaceuticals. So what's Gilead doing? Chart, whatever. Chart, things flat, things neutral. Let's look at the skew. Stocks at 131.76, right in between here, down $2, up $2. Skews to the upside. So let's sell. If I want to trade Gilead, Gilead's earnings are coming out tonight. if I can get markets are wide in here. Let's try this one. Let's buy the 125, 127, 51 cents. Figure it filled. Nothing done. All right. So we have, what do we do today? SPX working, SpaceX working, AMD filled, Oklo working, CMG filled, Brent crude filled, NU filled, USO filled. Got a lot of trades going on. So this is stuff, when this is active trading, okay, and I will do this all day long, looking for little opportunities. There is always something to trade, folks. Just like I've looked at that in the prediction market, put a bullish bet on crude oil, see if it works. And if you do decide to do any of this on yourself, that is your call. Use a smart strategy if you decide to trade any of this stuff. Thanks for joining. And if you do trade, please do not take any more risk than you are comfortable with.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
It's time to trade smart, post PDT rule elimination. And Tasty Trade has the tools traders need. The Active Trader tab's comprehensive market data is designed for rapid order placement in a single click, while bracket orders let traders set entry, profit target, and stop loss all in one ticket. From the Positions tab, you can monitor positions, roll trades, close positions, and create conditional orders. Now, traders of all account sizes have more flexibility than ever before to engage in the markets. Smart tools for smart traders. Tasty.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Wednesday edition of what it is that we are trying to do. Welcome to the We Are Back edition of what it is that we are trying to do. Welcome to the We Won the U.S.-Iran War for the 45th time edition of what it is that we are trying to do. Thank you guys for being here and being a part of the show. If you are watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren who are also watching the show. Oh, Matt, thank you so much. Did I say it was Wednesday? Man, it feels like a Wednesday. It does kind of feel like a Wednesday. So apparently today is the Tuesday edition of what it is that we are trying to do. I front ran myself a little bit there. We will get to the Wednesday edition of what it is that we are trying to do tomorrow on Wednesday. So thank you there, Matt. Now I know why we pay you the big bucks. And so hop into the YouTube chat If you have questions, if you have comments, if you have stories, if you have jokes, put them in the chat. I want to hear them. The algo is dying to hear them. And so it will be a good time had by some. So Ben, go ahead and bring us in to the market, man. Look at this market, guys. I see you guys already in the chat putting in some work. Man, that is a B- effort if I've ever seen one. Nice job, guys. Nice job. EMI S&Ps up 148 on the day. You've got the risk-free instrument doing some really, really risk-free things in a very, very high return type of way. NASDAQ, NASDAQ up 993. You got the boomers up a clean 1,000. You got the Russell 3000 up well over 3,000, up 59 on the day. You got bonds up. You got notes up. You got oil down a few bucks. You got UB40 up. You got the shifties out there up 51. You got the Hunt Brothers. I heard they were coming up with a new bread at Hunt Brothers Pizza. And there it is, up $2. It must have been a smashing success, up to almost 60. The British pound is up. The euro is up. Volatility futures unchanged on the day. Unchanged. That doesn't make any sense. And so if we could all channel our inner like 6-year-old, and it's like, all right, maybe 4-year-old, maybe 2-year-old. I'm not sure. I have a 6-year-old and I'm like, we don't play this game anymore, really. But which one does not belong? Well, maybe once in a while we play this game. Which one does not belong, right? Market up 147. Okay. NASDAQ up 995. Okay. Boomers up 1,000. Makes sense. Volatility unchanged. That doesn't make any sense, right? You would expect volatility to be getting smashed to pieces on a day like today, but it is not. Volatility futures are unchanged. You got spot volatility. The OVIX actually up today. All right, interesting. Was today like Vixpiration or something like that? No, that might be tomorrow, because I know Vixpiration is always on a Wednesday. So very, very interesting day. Market up, huge volatility, neutral to up as well. And so this market is so strong, even volatility is along for the ride. And so very, very interesting. It's very interesting. If you're brand new to trading or brand new to the show, welcome aboard. I'm so glad that you are here. The reason why it's so interesting is because almost every time, like it's so reliable. I mean, we're talking 90%, 95% correlation coefficient, negative 95%, I guess you would say. Market up, volatility down makes a lot more sense. Market down, volatility up makes a lot more sense. They're moving inversely of one another is going to be kind of your default setting. That is going to be the Betty Crocker recipe that is the financial market. So when you see a situation where you've actually got market up, volatility up, that's a little bit unusual. Especially with the VIX up, I mean, 60 cents on a day like that. That's like a 3 or 4% move on a pretty strong day in the market. And by pretty strong, I mean, this thing is sucking some souls out if you happen to be short. So, all right, let's go ahead and let's take a look at a couple of things. So, number one, let's talk about our Palantir. Let's shoot from strength, and let's take our victory lap to begin and probably also end the show. This will be the first and last thing we will do today. Take our victory lap on Palantir. So we did a short, hopefully we can do a couple other things. Oh, we got AMD earnings. We got SpaceX earnings. Yeah, we got all kinds of stuff to do, man. And so we sold the put spread for Palantir earnings. Stock's at 162, and we did this yesterday. We'll bring up a chart here really quick, and we take a look at a little chart, action. That's what you want, man. Like, you know, if you're going to get bullish right around here, right? Just give or take. I mean, it doesn't have to be exact. I mean, this does not require, you know, surgical levels of precision. But if you're going to get bullish right around there, that's kind of what you want. A little gap and go action. And so that is very, very nice to see. And so now you've got Palantir up 37. I mean, we're going to ring the register. There's no reason to hold the trade anymore. There's no reason to keep this guy on. It has done what we have politely asked it to do. And so now we move on. We move on and we try to find greener pastures on the other side. And so we are, or were, I should say, bullish in Palantir. You can see there's nothing left to make in the position. There's literally 1 penny left to go. And I've made some pretty bad trades in my day, and I'll make some more probably in the next 18 to 19 minutes. But even I know you don't keep this guy on. There's no reason to. Like, again, if you are brand new to the show, let's take 30 seconds. And by 30 seconds, I mean 4.5 minutes. And let's talk about what I see here. Because again, if you're brand new, a lot of times when you're going through this stuff, it can feel like we are just whizzing past and we are just moving at like an alarming pace when it comes to, your understanding and trying to grab onto what's happening with the different shows. I mean, my show and TP and all the other things happening on the network. Let's take 2 seconds. When you sell an option, right, it's important, or even a spread, whatever, a single option, a spread, it doesn't matter. Whenever you have some short option strategy like we have here, you sell it for some dollar amount, right? Which in our case here was $2. You want that dollar amount to go down. You want that dollar amount to decrease so that you can buy it back at a lower price. And so when you think about investing in just the most basic sense, you buy a stock at X, you want it to go up to Y, and you're able to make that difference. You buy at X, you sell at the higher price Y, and you make whatever that differential is. Well, if you're selling options, it's the same thing. It's just in reverse, which is confusing and it can be overwhelming. How does it even work? Don't worry about that right now. Let's just assume that it's true. So let's just assume that you can do it. If you sell an option first, you still need the closing transaction, the unwind, to be the opposite action. Like if you sell first, then you have to buy second. Just like if you buy first, you have to sell second. And so if I sell first, I want to sell at some price up here, whatever it might be. I want that price to then go down. Now, there's a myriad of factors that are going to contribute to that price going up or down or sideways or whatever. We'll talk about those another time. Right now, I just want to make sure we're all on the same page. You want the price to go lower. So when I sell this guy for $2, which you see up there, any price below $2 is going to be good for me. Okay, now look at the price that's right next to it. This MRK price, this mark price, that is telling me what is the current value of the spread in the marketplace right now. Based on what happened from earnings or whatever else it maybe was, what is the current price of that strategy now, in present tense, in real time? Well, you can hopefully clearly see the current price of the strategy is 1 penny. Technically, right now it's showing negative 1 penny, which doesn't make any sense. Let's just call it 1 penny. So I sold it for $2. I can step into the marketplace right now and I can buy it back for 1 penny. Okay. Is that a good thing to do? Should I go ahead and do this? I mean, you have to make up your own mind. I can't tell you what to do. But I would say 105% of the population would look at this situation and say, that's a good idea. You should close that trade because the lowest possible price that the spread could take is 0. The lowest possible price that the spread could take is 0, which would mean it's completely worthless. So if it's completely worthless, it's worth 0. Right now, it's worth 1 penny. That's about as close to worthless as you can get. I mean, we have asymptotically approached nothingness, and we can go no further. We can go no further unless we carry this guy all the way to expiration, which is 3 days away. And so I'm going to close out Palantir. If you're brand new to trading, hopefully that little kind of excursion off of the main island there was worthwhile in terms of understanding selling options, buying them back, what you want to have happen, kind of analyzing situations like, should I stay in the trade? Should I close it? Like those are difficult decisions that you're going to have to make every single day. Thankfully, this one is a pretty straightforward decision. And so, all right, so Palantir, we'll close it down and we'll be done with it. So yeah, we'll pay a penny debit. It looks like it may end up being a little more than that. Oh, we got filled for a penny debit. So there you go. So we ended up making $1.99 on that trade. And I know that because if I go to my activity page, you can see that I sold Palantir for $2 and then I just bought it back for a penny. And so the difference between those two, I'm no Julius Spina, but I think it's about $1.99, give or take. And so we made a decent little amount of money on that trade, and so I'll take it. So that's Palantir. Palantir is over and done with. Now, the next things I want to do, there isn't really anything. Look at Novartis. This is a Sam L special, is it not? I think it is. And so Sam L, I see you in the house. I appreciate you, my friend. This is a Sam L special. Wow, I think we're going to take it. I mean, I don't really want to be a long-term investor in Novartis. I mean, do you want to be a long-term investor in Novartis? I mean, I don't even know what they do. I wouldn't even know where to begin. Like, are they a goods company? Are they a service company? Are they like a middleman type of company? I have no idea. But I am looking at 4 to almost 5 freshly minted BEUs on this trade, which, of course, a BEU is a bonefish equivalent unit. And so I am thinking, let's go ahead. Yeah, let's take off Novartis. I mean, there's no reason to keep it on any longer. It has done its job. And so there you go. Done with Novartis. And so there you go. It's fun sometimes to play the lower price stocks and, the $10 guys, $4 guys, whatever, and $5 guys, and just do it with straight shares, right? Just go in with straight shares. And it's like, yeah, if it works, you get paid dollar for dollar. You get that clean delta, which can obviously be really, really nice. And yeah, that's really, really solid. So that is Novartis, and that is Palantir. Next up, Apple. We sold our put spread yesterday. Apple is obviously rallying significantly today with the market being so strong. And that looks really, really good. But there's nothing else that's catching my eye. Micron up a lot today. Might be a little bit too late. Might be too little too late, I should say, on that guy. But we'll have to wait and see on that one. Oh, look at QQQ, actually. Hold on. This one did catch my eye. Nothing like a little 22-point zipper to the upside to wake up the old sinuses. QQQ up to 723. Man, that is a rip. That is a rip. Now, I do want to take a couple of seconds. And by that, I mean 7 to 8 minutes. One thing that's interesting about outlier moves like this one, like here, I'll even bring up a chart of NQ, QQQ, whatever. It's the same thing. And so if I bring up the Qs, let me bring up a chart of the Qs. And so, okay. So this isn't exactly what I was hoping it would, it would look like, but it's close enough. And it's already out there, like we can't go back. One thing that, at least in my opinion, I don't know that I could state this as objective truth, although I do think there's a ton of empirically verifiable evidence to back up what I'm about to say. When you have a huge ripper like today, when you have, and this is just like an eyeball melter, right? The eyelashes melted, the pupil melted, right? The retina melted, like it's gone. It's all gone. And we still have an hour and a half left, right? It's gone. When you have a day like today, it's very rare that a day like today would happen in the midst of like this, for example. Like it's already trending higher, it's making new highs, or like here, for example, or up here, for example, right? A lot of times when you have these these are just soul stompers, right? When you have a soul stomper to the upside, there's obviously plenty of soul stompers to the downside. I'm not talking about that. Soul stompers to the upside, these guys rarely come out of nowhere, and they rarely come just at the, tippity top of a recent move, or making new highs or something like that. A lot of times it's after having a couple of kind of get your affairs in order type of moves to the downside, having just previously preceded the soul stomper to the upside. So hopefully this is kind of making some sense. I know that I'm jumbling my words, and this is a kind of a bit of a train wreck, but generally speaking, huge moves like today. I mean, this is what, 3%, 3.5% to the upside for the NASDAQ. That's a major move to the upside. It's very rare that you would see that thing just out of nowhere. It's very rare that you would see that thing just kind of to finish off an uptrend or whatever. Now, maybe with like a short squeeze or something, I guess maybe that absolutely could happen. But I think most of the time when you see these types of moves, I'm not saying they're telegraphed, but it's kind of like when you have a lot of weakness in a very short amount of time in the market, conditions are ripe to just grab souls and just squash them. Right? Conditions are ripe to just reach into people's bodies and just harvest the soul and then flush it down the drain. Right? Because the market, this show turned pretty dark pretty quickly. And so the market is just, it's craving some good news. It's craving something positive to latch onto. And then you get all these feedback loops, and you get all the shorts that sold in the hole that get in, they get in trouble in a hurry. And so I really feel like the conditions can be really, really ripe for a soul stomper to the upside. And that's exactly what we have today. We actually have back-to-back soul stompers, which that's pretty interesting in its own right. But anyway, I digress. And so, all right, so there is a little bit of market commentary that might even help you, actually. I mean, I'm not quite sure that it will, but maybe it will. And so, all right, let's go to, I want to go to AMD, and then I want to do SpaceX. And I see you guys in the chat, and I appreciate you guys so very much. Let's go ahead and let's go to AMD. And I'm kind of thinking, so AMD has earnings tonight, right? And you know what's really cool about AMD? They have the Monday, Wednesday, Friday expirations. And so I think, let's go ahead. I mean, I know it's Tuesday. Thank you, Matt, for reminding me when the show began. we can kind of turn this into a Thursday, Friday deal. We can kind of manufacture up a little Thursday, Friday deal for ourselves by doing something that's going to expire tomorrow. And so we could choose the front week if we wanted to, and that would be totally fine. Tuesday going into Friday is totally fine. But generally speaking, I much prefer a Thursday going into Friday. So we're going to create a synthetic Thursday into Friday by doing a Tuesday into Wednesday. And so for our purposes here, I'm thinking we go into the Wednesday cycle with 1 day to go, and we go ahead and we set up, obviously, an expected move butterfly. Now, the question becomes, which side are we going to play? Now, again, you have to make up your own mind. I can't tell you what to do. I would never even begin to try to tell you what to do. But when I think about AMD, and I think about AMD just as more of a philosophy, rather than being like a going concern or like an actual company, just think of AMD as a state of mind. I don't know how you can be anything other than mega bearish on AMD. I mean, it's not advanced money destroyer for no reason. And so I'm thinking we play AMD to the downside. And I know, like, you look outside, all you see are strawberries and sunshine. Like, you look outside and all you see are marshmallows and macaroons, right? But if we took a bit of a mean reverting stance on all this, and it's like, I don't know, man. I think some tuna fish and applesauce is right around the corner. So if we go in here, set up an expected move butterfly. Now, the one I was looking at in preparation for the show was a 525, 485, 445. So obviously, if you're listening to the show, this is a 1x2x1. And I like this trade, but the problem is it's too expensive. The problem is it's $9, $10. And so that's like 3% of the account, which is okay. It's not crazy, but still for binary events and earnings and things like that, I like to be a bit more mindful of my position sizing. And so thinking about, like something that's maybe, closer to 1 to 1.5% of the account, I think would be a little bit more in line with what I'm trying to accomplish. And so this would be okay, but I kind of like, if I'm between 1 and 3%, let's say, being between 2 and 3% is, I actually kind of like probably being more like 1 to 2% as of late. But even still, being on the higher end of the range, that makes more sense for like a normal trade, like a 45 to 21, those type of deals. When you're doing something that's binary in nature, like earnings, like FOMC or something like that, I think being on the lower end of the range is worthwhile to consider. So for us here, it's okay the way it sets up, but I think we can maybe make it even a little bit better. So I'm going to bring my butterfly in. Instead of being 30 points wide, instead of being 40 points wide, let's do a 30-point wide butterfly. So let's go to 515 on the top strike and 455 on the bottom strike. Okay. Now we're getting somewhere because now it's 585. And so 585, which is, we basically just cut the cost almost in half. We're almost there. This is right around 1.5% of the account. And it's 30 points wide. So I feel like we have lots of room to work with in terms of an AMD drop tomorrow on earnings. And I understand we're never going back down like it's over, like I got it. But just in case we happen to lose the war tonight, this trade might work out okay. So what I want to do, though, let's make it a little bit more narrow just to reduce the debit. Try to get this guy under $5 would be really, really nice. So I'm going to go from a 515 to a 512.5 and a 455 to a 457.5. Ah, look at that. It's almost like you boys done this before. Man, it's almost like we've been doing this for a very, very long time. The debit paid is now $495. That is a thing of beauty. It's 27.5 points wide, and we ship it. Now, apparently, it's $494. So we send it, we ship it, and we just hope for the best. And so let's go ahead. $498. That should work. Yeah, so we got filled at $498. Okay, perfect. We're in AMD. I want to do SpaceX, but let me point one more thing out. I forgot that I should have kicked off the show with this. So if you guys saw Inside the Trade this morning, you saw this XSP butterfly that I did, and this guy is not going to work. This guy is, unless there's a big sell-off going into the close, which is not impossible. Remember, XSP is cash settled, just like its big brother SPX, and so that's good. But apparently, you know, we went with the can't beat 'em, join 'em strategy, and I guess we should have joined them more fully. I guess we should have been more all in with the momentum bros, I guess, because we actually overshot our mark on this guy, and that means it's going to be a losing trade. And so again, remember with a butterfly, right, you have to get the direction movement, you have to get the magnitude of the direction correct as well. Now, I wasn't monitoring this right after I put it on. I have to imagine, because of the short-term nature of this, as the market was rallying, we probably had plenty of opportunities to manage this guy for a profit. So, like, if you're out there and you're doing your butterflies or you're doing your 0DT trades, and, you know, right after you put the trade in, you put your profit target like in right after it, that would not be a terrible idea. I should probably consider doing the same thing myself. But if you had done that, and, you know, we paid 60 cents for this guy, right? 67 cents. So 230 was our maximum profit. I mean, you probably could have bagged 60, 70, 80 cents off of this guy before it spilled over the top side and became, you know, an overshoot at that point. But I am glad we didn't do SPX, because that would have been, you know, a lot more pain coming our way. And we would have certainly been in the hurt locker without Jeremy Renner to save us. And so XSP, we do nothing, and we just pour out a little banana natty for that guy. So that's that. Let's go to SPX now. I'm sorry, SPCX. So I already have 2 trades on in SpaceX. I mean, I don't really have 2 trades on. I mean, I do technically, right? But this guy is done. Like, this short vertical spread, it's not coming back. And if it does, it does. I mean, that'd be great, but it's not going to work. I have on a short strangle. This guy is now working out quite well with SpaceX up so much. SpaceX has earnings tonight. This is their first earnings, I think, right? Guys, help me out. Is this SpaceX first earnings? It has to be, right? I mean, I don't know how they could have had earnings before this, because they just IPO'd like, you know, 8 days ago. And so when I think about SpaceX, I go to the trade page, I go to the 3-day cycle. And again, I really think we just take a shot with a butterfly. And I mean, it's super obvious, guys. Like, again, you've got to make up your own mind. I cannot tell you what to do. But when I look at this, I don't know how you could possibly be anything other than mega, ultra, super, to the supreme, bullish on SpaceX. So I'm thinking, let's take our shot to the upside with a super duper wide butterfly. So let's do a 125, 145, 165. It's even feng shui when you look at it there on the old trade bar. I mean, look at that guy. No janky strikes. It's all clean. It's all neat. 125, 145, 165. We double up on our 45s. That's only be a few bucks. Yeah, 363, 364. I mean, they are giving these things away on the street corner. Like, boom, there you go. I mean, that's pretty solid, especially when you think about the risk return ratio is pretty good. I mean, we're risking 1 to potentially make, I mean, maximum profit. It's like, what, 5 or 5.5? Maybe 5. Maybe less than 5, actually. Yeah, like maybe 4 3/4, whatever. That's maximum profit, though. We're not going to get a maximum profit on a butterfly. I've talked about that many times before. That's just a thought experiment. That's just an ivory tower construct that has no bearing on us as practical traders here in the actual markets. But it still is helpful to understand, like, what's my runway look like? Like, how much padding, how much distance do I have between, you know, what I'm paying and what I could potentially make? And so I really like this. Wow, I'm way over time. I'm way over halfway through. Man, wow. We got to get this guy on, because I got to see where you guys are at. Man, I see you guys in the chat. Man, I appreciate you guys so much. Let's go ahead. Let's get SpaceX on the books for earnings tonight. 368. Let's do it. Let's see if we can get filled. Man, sometimes these markets have just not been very good. I don't know what's up with all that. I feel like the mid-price jumps on us so much that it's like, okay, so 371. There you go. And so we are in SpaceX, and boom, there you go. And so, all right, let's go ahead and, man, let me see where you guys are at. I appreciate you guys so very much. Let me see if I can I surprise and delight somebody in the middle? I think I can. I mean, I know I can if I can find somebody. Here we go. Adam Armfield. What's going on there, my friend? I see Adam Armfield. And I see CA Paris is here. Viggy Zags is here. Man, Point B is here. Man, look at you guys. Adam Armfield says, hey, Dr. Jim, I did a put spread in First Solar today. I decided to take profits today as well, thanks to no PDT. It's a beautiful thing. It's a beautiful thing, right? You did the trade. So you did the trade this morning and you already took the profits off the trade. I mean, that's solid. Any thoughts about the merits of taking fast profits in the hope that the stock will drop further? Okay. So you said that I did a put spread. So I think you mean you sold a put spread or bought it, because you're talking about the stock dropping. So if you sell a put spread, the stock dropping is going to work against you. If you buy a put spread, the stock dropping is going to work for you. So I'm not quite sure which side of the fence you might be on there, but I can answer your question from a generic standpoint, of course. When it comes to taking fast profits, okay. So PDT is gone. So we now have been freed up. Like, we are free. Like, it's a Braveheart scenario if I've ever seen one. Because of that, it does give us a lot more flexibility when it comes to like stuff in the morning and then stuff in the afternoon and doing stuff throughout the day. That's really, really great. That's the gimme. It's been said before. It's a catchy little jingle. For every gimme, there's a gotcha. So what are the gotchas, or at least one gotcha? Well, if you take really fast profits, like 10% or 15% of max profit, like if you're selling spreads or whatever, it can work. Like, it's okay. But you have to understand what you are signing up for. Man, there it is again. What am I signing up for when I do that? Well, one of the things you are signing up for, whether you realize it or not, whether explicitly or implicitly, you are signing up for a situation where you are going to need, not maybe, not sometimes, you are going to need higher probabilities. You are going to need even higher win rates to make those numbers work in the end. You got to be careful with that, in my opinion. Right? You have to be careful with that, because we're already trading from a vantage point, from a scenario where we're risking 2 to make 1. We're risking $1.50 to make 1. Whatever, right? We're okay with that, because in exchange for that, it's a higher probability play. And so we like that trade. But if you run into a situation where, if you're booking 10% or 15% profits, yes, by the very nature of the strategy, your win rates are going to naturally be higher. But you're also kind of risking 8 to make 1, risking 9 to make 1, risking 7 3/4 to make 1, and things of that nature. And so we need to be careful that if I go down that road a little bit too far and I try to maintain similar win rates, in the end, I'm not going to make any money. In the end, I'm going to look at them and say, man, I won 90% of my trades. I got nothing to show for it. Like, I won 87% of my trades. I got nothing to show for it. And so because of that, we just want to be mindful of that. We just want to be mindful of that. That's why it's not generally my preferred method of managing winners. And so I don't mind taking winners off early, but when it comes to, especially like short premium, futures is kind of a different thing that I'll have a lot to say about in just the coming weeks here. But when it comes to selling premium specifically, you got to be careful. You got to be careful taking profits too early. I do think you can take profits too early. I mean, I like the idea. I like the impetus of what we're doing. But we just have to be mindful of what we're signing up for. So hopefully that helps a little bit there, Adam Armfield. I know I wasn't able to answer your question specifically. Yeah, so let's see here. Let's go back. We'll go back to all the way back to the beginning. Man, let's go. I see you guys that snuck in before me. Look at you guys. Look at my overachievers, man. BBB Fine is here. Ash Finn is here. Sam L is here. DMZ is here. Man, what is up? Point B, I see you. Doc, market's up big today. S&P knocking on record highs. I mean, it's way beyond record highs now, I think, right? Semis are surging. Even the VIX chilled out. Feels like the whole tape got the natty memo. Let's talk to Dr. J here for the From Theory to Practice fam show. Man, I appreciate you guys. The FTTP fam. Man, you guys mean more to me. You guys mean more to me than you may ever know. I can say that with certainty. So thank you there, Point B. Ordenu is in the house. Hello, Dr. Jim. The other day you did an Apple short vertical spread. You said you looked at the numbers, pop and P50. Besides collecting 40% of the spread, what else do you look for? So when it comes to spreads, like vertical spreads, it's almost always going to be credit collected relative to width of the spread, because I want to know, like, what is my risk return? And I like to be in that risk $1.50 to make $1 type of situation. Now, sometimes I might be a little bit higher than that, risking a little bit more to make a little bit less. But I don't like collecting like 25% the width or 20% the width. I mean, I feel like that is definitely a situation where you are going to end up just kind of spinning your wheels in the end and not really make any money. I mean, I feel like defined risk is kind of like that, just writ large in general. And I've been very, very clear about that. I think undefined risk is the pathway that any serious trader that wants to have consistent results and smoother results and all the things we're all trying to do, I think they should give that pathway some serious consideration. But still, when I'm doing defined risk around the edges, just to kind of fill in some mortar between the bricks and things like that, the width of the spread relative to the credit collector is probably the first thing I look at. The second thing I look at is usually how much width, or not width, because I don't want to mix up my terms, but how much buffer do I have between where the stock price is now and my strike price? Like, I just want to know how much room do I have to be wrong here? And what you'll typically notice is on short put spreads, you're much tighter, you're much closer to the stock price. On short call spreads, you have a lot more room just because of the volatility skew and the pricing that is usually, the case in the equity markets. Now, you get some super high flyers like a SanDisk or a Micron or whatever, that relationship is usually flipped around. But yeah, that's typically what I look at. And that's really pretty much it from a spread standpoint. Sergio's in the house. What's going on there, Sergio? Ash Finn is here. What is up, my friend? BBB fine. Your morning XSP call butterfly overshot. Close to avoid assignment fees. Am I going to be assigned? Is it all in the money? It is. Oh, wow. You're right. Thank you there, Billy. I appreciate you. I was going to just let it go. I still got to get used to this morning afternoon thing, man. Yeah, we have to close it. That's brutal. Are we going to be able to get 7 cents back for it? I don't really want to. It is cash settled, which is nice. Let me think. Oh, wait a minute. Hold on. I actually, wow. I'm not too ashamed to say I don't know the answer to this. Huh. So it's cash settled. So there are no assignment fees. Okay. Hold on. And if somebody knows the answer to this, put it in the chat. I actually don't know. I should know, but I don't know. So I know. So here's what I do know. Let's go back to what we do know. Let's shoot from a position of strength before we quickly find our weaknesses. So SPX and XSP are both cash settled. And so the benefit of that is if it goes to expiration, there is no assignment. There's no assignment. There's no underlying shares. We're not going to have a share position tomorrow. It's just going to get settled up at whatever the tally was at the end of the day. Okay, that much I knew. Here's what I don't know. Are they going to get us anyway? Is the man going to reach into our pockets and take a little bit off the top for himself anyway? And here's what I mean by that. When we are assigned and an option finishes in the money, we are charged an assignment fee, which on Tasty is $5, which I think is pretty good. I mean, industry-wide, it may not be the lowest, but it's not the highest. It's probably right there, kind of in the middle. I mean, the zero commissions, you can't typically get lower than zero, so that's obviously good. But the assignment fees, I think, are kind of middle of the road, right? That's fine. It doesn't matter. And so if we are assigned and we actually have a share position, there's $5 per leg. Okay, that makes sense. But what if an in-the-money option goes through expiration, there's no assignment, but now, I mean, it was in the money. So do they charge us $5 per leg for like a cash settlement fee? I don't think so. My gut is telling me that they don't, but I think that I think they might. And you know what I just realized? I just realized that Laura is now surprising and delighting me with the end of the show, with the show having 8 minutes to go. Look at Laura sneaking in at the end with a surprise and delight before we're done. And so thank you there, Laura. You actually sent me the Adam Armfield question. And you know what's crazy? Wow, this is crazy. So Laura sent me the Adam Armfield question that I grabbed out of the chat myself without even seeing Laura. So Laura and I are on the same wavelength with these surprises and delights. Like we are right there, man. And so, but anyway, I don't know. Does anybody know about the cash settlement? They do get us? No, there's no way. There's no way. I hear a couple of people, Busy Trader says, yes, they do. Absolute beginner, I have fees on mine. They do. They get us. On the cash settlement fee? Come on, man. The man wins again? Wow. That's some, man, I don't know about all that. But anyway, man, I didn't know that. I thought they didn't because there was no share. There was no share transaction. But hey, you got to pay the man. You got to pay the man for the right to play. And so, I mean, I guess we're all at his mercy. And so, but anyway, I do need to close out of my XSP. Well, now I definitely want to because I don't want to pay, $5 per leg here. So let's go ahead and they're going to give us 4 cents. Are they going to give us? Yeah, I mean, I'll take whatever they'll give us at this point. All right, so we got a nickel back. So I can't believe we got a nickel back. That's kind of nice. And so, all right, so there you go. Thank you there, Billy. I appreciate that very, very much. But let's see, where did I leave off? Orgenu, by the way, we have AMD and SpaceX tonight. Yes, thank you there, Orgenu. We got them both on. And so you guys have some fadeable opportunities at your fingertips. I'm going to try to figure out what more I can do for you guys, but I'm pretty sure I'm maxed out. I am pretty sure we are at our limits. And then that is that. Samuel Doc, we know you're secretly talking to VIX HQ over on X. VIX HQ, we follow each other. We're friends on X. And I do oftentimes get the inside scoop before you guys do. I don't know what to tell you guys, man. Like, it's one of the perks of my position. Like, that's all I can say. In fact, I don't even think I was supposed to say that. And so there you go. Ash Finn, if the gimme is that we get Dr. Jim twice per day now, what is the gotcha? Ooh, man, if you don't know yet, it's coming. It's coming. Just sit tight. You'll have some gotchas coming your way. I can assure you of that. So point B, but I appreciate you there, Ash. Doc, has the market forgotten how to go down? Back-to-back rally days, SPX flirting with record highs. It's record though, right? Feels like a gravity took a vacation too. When the last time you saw a run like this, 2%? Again, it doesn't happen often, and it rarely happens. That's not following some type of, soul stomper to the downside. But if I go to SPX, we're way beyond all-time highs. Now, it all just happened today, of course. And so, it might take the algos a chance to get caught up a little bit, but no, we're way beyond all-time highs. Oh, excuse me, at this point. And so that's crazy stuff. Ranch, howdy, Doc. That XSP butterfly was green for a hot minute. It's a small loss now. What to do? Just let it ride? Well, I know you put that comment in like 40 minutes ago, but I did finally just close it, and I got my nickel back. And so it didn't work, but Nickelback is still a great jam. Like, we know it's a great jam. Like, How You Remind Me, you tell me that you can listen to How You Remind Me, and you're not nodding your head. You can't do it. You can't do it. You tell me with a straight face that you can put on How You Remind Me, and you're not wiggling the shoulder a little bit. You can't do it. It's not possible. Like, they've studied this. It's all over the science literature. It's all over the medical literature. You can't do it. It's impossible. And so, but anyway. I digress. Brian Rakuten is in the house. What's up there, my friend? Oregon Denu is in the house. What is up, Sam L? Doc, even Snap is ripping after earnings. Was there ever really any doubt? Never. Wow, Snap is 565? Wow, 565. Look at that. They're doing it, man. I mean, I don't know what it is, but they're out there making it happen, whatever it might be. And so I'm happy. I'm a happy man. And so, Weiss, good to see you, Dr. Jim. A B- day for an A+ market. It is indeed that. And so, Mr. Pillows, I've been away from the computer all day. Why are we up? Man, who knows? It's all made up. It's all made up. You fill in the blank with whatever you want. I would just use something that you can erase easily because it'll change in the next couple of hours. Shane is in the house. What is up? Excited to learn about this XSP trade from the AM. Yeah, sorry, Shane. I know you watched the show this morning. Thank you so much. I meant to lead off with it today, but I obviously I thought it was Wednesday. Like, everything got off to a, kind of an off-kilter start here. So I'm glad we looped back around to talk about it. But yeah, just remember, Shane, whenever you're doing a butterfly, like, it looks amazing. You pull up the curve view, you see the huge net. You're like, there's no way this could possibly not work. And then boom, it doesn't work. And so just remember that it's a directional play, but it's also a magnitudinal play. So you do have to get both when it comes to cashing in on the butterflies. CA Paris, I'm here for the algo. That's it, my man. I appreciate you. There's the Adam Armfield that made it back to the surprise and delight. That is always good. Doc, don't sleep on Taco Tuesday. I know. I'm not sleeping on it. I'm not sleeping on it at all. Ash Finn, B- returns gets us to Bonefish, though, multiple times. See, that's a beautiful thing. Like, when you marry all these things together, like, it begins to make sense. Like, when you marry all these things together, like, okay, I got the B- humor, I got the C+ trading, but I'm really just going for a couple BEUs. You put these guys together, next thing you know, like, you've got some bang bang at your fingertips. Like, you've got some bang bang on the way with maybe a little Miller Lite draft. I mean, I don't think they have Banana Natty at Bonefish. They should, but a little Miller Lite off tap. I mean, it's been a minute since I've had straight beer, but Miller Lite draft is quite good. And now, if you're going to be a hater and throw some shade, then by all means do it because, we got to pump that algo. But a Miller Lite draft is some solid stuff. Point B, Doc, why do you say the risk-free instrument for the NASDAQ? Just being silly, just being fun. It's obviously sarcastic, but if you look at a day like today with the NASDAQ up 1,000, is it really not risk-free? Yeah, sure. I mean, it's going to rip your soul out of your body tomorrow when it drops 4% on the Taco Tuesday, but still, right? I mean, you look at a day like today, it's just, you're just printing cash. You're just printing money. And so let's see. CA Paris, what is the exchange rate of BEUs to CEUs? Oh, Chili's? Ooh. Man, I don't know. That's like a cross. That's like a cross pair, right? Like you got USD Euro, you got USD Australian dollar, but then you've got Euro Australian dollar. Right? Like I understand USD to BEU. I could probably even kind of makeshift up some USD to CEU, but a BEU to CEU, man, I'm gonna have to think about that one. I'm gonna have to think about that one while I, watch SpaceX earnings tonight and AMD earnings tonight. And I think I am actually out of time. And so I appreciate you guys, man. I appreciate you guys so very much. If I can ever help you guys in any way, please just shoot me an email. I am jschultz@tastylive.com. Or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next for trading the charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools. And place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Hello, everybody. Well, it is SpaceX Day. As you well know, in about 46 minutes, the first data points from SpaceX as a public company are going to come out. I just saw that just about every share that can be shorted has been shorted. I assure you I'm not among them. On the contrary, SpaceX is probably the only stock in the universe whose ascent I celebrate. And we're having a bounce on that today, but it won't be long before we see how the market reacts initially to those earnings. And that'll be our last chart today that we look at. Let's jump right in because the news is getting grimmer by the moment for the bears. The pent-up energy that I was talking about yesterday has been released. This range we've been trapped in on the spider for months is not a range anymore. It is support. And we have blasted above it. This is the biggest, greenest bar in a very long time, maybe even back to April. And we're up over 2% on the Spider. We're up quadruple digits on the YM, quadruple digits on the NQ. So it is a very, very green day. And it's not because there's any news you can point to and say, well, the deal's been signed and ratified by Earth for peace. Nothing like that. It's just positivity. And as some people are calling it, the Leopold low from last week after that massive washout of Mr. Aschenbrenner's formerly $45 billion hedge fund. So at this point, it is the bulls' market to lose. At some point, we'll get some selling, of course, and the only test is going to be, will prices stay above that range? The only bearish thing that could possibly happen would be if we slumped right back into it, and that would take some pretty serious selling. So bulls are fully in control again after we bottomed Wednesday at the close, and they haven't looked back since. Thursday, Friday, yesterday, today, all blasting higher, today in particular. Here's the diamond lifetime high. That's a pair of words that you're going to hear a lot with the market today. The Dow had the only little bitty bearish thing about this, or at least not bullish thing, is that we are mashed up against that broken trend line. That trend line dates back to the late March, the March 30 bottom. And we broke it here and didn't really fall that much. But over the past 4 days, we've gone roaring higher and have recaptured that trend line. But we're right at the trend line now at lifetime highs. So we want to see, well, we don't want necessarily, but we would need to see some follow through tomorrow to cement this as a new Dow rally. The small caps by way of IWM is very, very close to its own lifetime high. We have, in the span of 2 days, undone weeks of selling, and it had been just ever so slowly easing its way down. And it actually on Friday, and this is surprising, but on Friday, it was the lowest it's been in all those weeks, and then yesterday and today undid all of that. As I've said, the reason I'm not weeping onto my keyboard right now is because I've been lightening up persistently. I actually got as light as 14% early today, just almost nothing. It's hard to stay interested, frankly, with so little in the way of position. One account had 2 positions in it. I like to keep like half a toe in the water at least, but I have been slowly building my way back into positions, but absolutely nothing in the neighborhood of aggressive. I've gone from 14% to 50%. And that was built up about 10 minutes ago because prices are very high and there are certain securities that seem appealing on the short side again. But here again, 50% as opposed to 5 times that much a couple of weeks back. I had real misgivings last week about covering so much, but that funny feeling I was getting, I guess that's what it was all about, because it was done. I don't think, and I've written about this before, between now and the midterms, I don't think there's any chance, unless something outrageous happens geopolitically, of a meaningful sell-off. After the midterms, and definitely after new Congress is sworn in, I think, sure, the politics will allow for that. As it is now, they're going to move heaven and earth and suspend this war as many times as they can to keep things propped up. And it has worked beautifully so far. So we got to take a little opportunities as they come along, and they don't last that long either. China, FXI is amazingly actually down about 0.5% right now. As I've said, this is my largest options position. These are March 2027 $37 puts. And I've shown the whole chart before, so I won't bother you with that again. But in my estimation, this tremendous ascent we had should start unwinding. And I've got lots of time for it to unwind, almost 9 months. So far, so good. It's the fact that it's down today at all is sort of a miracle, considering the just unabashed blast higher we're seeing across the board with the U.S. stocks. I made mention this morning that it's often more reliable and truthful to look at a financial chart than it is to try to read the news, because it's impossible to know what really is going on with the Iran situation. And you can easily find sources to convince you of any point of view. But the crude oil markets don't play that game. They're going to tease out the truth faster than anybody else. And given the fact that we're falling again on this, indicates to me that the prospect of a lasting peace deal is pretty strong. We have a right triangle pattern here, which was briefly pierced, measured literally in hours, but that was repelled. And after that repulsion, of course, the suspension of hostilities began, and we've got a hard sink going on right now. So maybe this is actually going to happen. As I said again and again, and I really want it to, because it is dropped a thick layer of fog onto the market when you never know what you're going to wake up to, on again, off again, with this war. So crude oil seems to be thinking that a lasting deal is on the way. The other item in that regard is volatility, which has been crunched down to pretty much the lowest levels it gets to in this environment. The range of the VIX is roughly 15-ish to 30-ish. And on occasion, it'll get above that, like when the war first broke out. But as you can see with the VIX futures, we've ground our way down to complete complacency again at this point. So if something crazy does happen, this is the kind of situation in which we'll see the VIX just reaccelerate higher and cycle higher. And historically, August and September are time periods where the VIX goes up. That is a clear seasonal trend. August, September, and somewhat into October, very strong tendency for volatility to increase, and a very strong likelihood that VIX is really low early in August, as it is right now. So hopefully we'll see some life breathed back into this poor thing soon. Generally speaking, though, the clarity, the cleanness of the patterns has been laid waste. As of even Friday, things were still pretty clean. Yesterday kind of mucked that up, and today just completely upends the cleanness of a lot of these charts. I've left here as a historical relic the rectangle that represented the top. We are way into that now. And this is neither bullish nor bearish. I mean, it's bullish for the past couple of days, obviously, but from a predictive standpoint, it's just a mess again. It's much more bullish with the likes of, say, the spider, which is clearly, as I said at the top of the show, released all that pent-up energy and is flying higher. But with something like this, it's murky. Part of that murk has been created by the power of the Mag 7 stocks. You can see here Amazon, its lift over the past few days has been astonishing, especially what followed after Thursday's earnings. Microsoft, 4 giant green bars, and that was kicked off by the Wednesday afternoon. And keeping in mind that Wednesday at the close, just before Microsoft and Microsoft and Meta introduced their earnings, things were bottoming out. But the Microsoft positive earnings report was a big element of reversing all of that. In South Korea, another lift here, almost 8%. We've still got kind of a top going. This is a pretty meaningful amount of overhead supply. I'm not trading that myself. I do still have my, and as I've mentioned, my options are all January and in one case March. The only exception is SMH. These are October puts, and SMH has been strong the past couple of days, and we'll see. If this just keeps muscling higher, forget about it. As I said this morning, I've been more active not losing money lately than making money. And for example, I'll repeat the examples I gave this morning. Palantir. I was short Palantir coming into yesterday. I got out. I covered at a profit big enough probably for a nice latte, but I got out And good thing too, because we're up almost 30% on Palantir. I also, and I think I mentioned this in my show yesterday, got out of my Caterpillar puts. Now, interestingly, we opened pretty much at that trend line, and it's a long-term trend line. This goes way back to about a year and a half. So we opened strong, and we are still up, but we lost a chunk of that pop. So that's kind of interesting from a charting perspective, if that trend line repelled that thing and if it just tumbles down from there, because Caterpillar knocked people's socks off with a triple-digit rise when they opened. Over in the hyperscaling land, though, there's a lot of big gains today, some even high as 20-30%. In some cases, the patterns are still clear, and others it's just ruined. CoreWeave, for example, this is still not a bad pattern. It has exploded over the past 5 days, but it's right at the bottom of that topping pattern. So CoreWeave got just trampled, as you can see, in this series of lower highs. And so this isn't ruined. There are still patterns out there that are decent, in spite of these monstrous blasts. Its competitor, Nebius, not so much. This is, and it had pushed into this pattern earlier anyway. We are, let's just lay down a line real quick here. We have come up to an area of resistance by way of this exhaustion point here and here and here. But the pattern as a whole isn't as clear because we're deep into this rectangle that I've drawn. And Dr. Jim this morning was mentioning Oracle, and he was noting the rise we'd seen there. And this is even when it was, even before this big lift, I had said Oracle would be something I would not touch because it had just basically done nothing but sell off for almost measured in months, actually. I mean, just like, look at this, just this absolute wipeout. So it kind of had nowhere to go but up. If and when the selling does resume, I think Oracle will be especially weak because there's a reason that it just got blasted like this. There's a very, very serious trouble going on. But with everyone buying everything with a ticker symbol right now, something as cheap looking as Oracle naturally got a big pop. In this very green day, I have a smattering of red on the screen. One area that I'm short that's still doing okay on a day like this is related to healthcare. Humana is one, HUM. This is down about 3.5%. And the other one relatedly is United Healthcare. It's down about 1.5%. So as you can see, those two patterns, pretty clean little tops. I don't know if they're down just because they're not tech and all the money's sloshing somewhere else, but I'll take it. You know, any red today is welcome. I would also make mention, going back to the theme of not losing money, Meta got just blasted last week after their earnings. And as I stated on my show, both in the morning and the afternoon, I got out quick, because this was a nice quick profit, and it went up on Wednesday, and I'm sorry, this must be, Thursday, Friday. Yeah, so after Wednesday, Thursday it went up, Friday it went up, yesterday it went up huge, and today it's barely changed. I think resistance on this is up here, but it may not even get that far because we're already into the zone of overhead supply. But getting out here, you know, we always have doubts about getting out of positions, and this is the right time. Turned out to be that was the right time. Dodging a bullet on that one. All right, two monster reports coming out in about half an hour. Let's keep our eyes on them. AMD, very important. This is still range bound. Like the spider, it may go just blasting out of this range, but as of now, it's simply range bound all the way back to around May 20. So that's a key report, and it'll certainly inform SMH's direction. And of course, the one everybody's going to be watching and listening for, SpaceX, 2 green bars in a row, a welcome change. We're up nicely now. We were up about 10% earlier, up about 9% now. I have no opinion on the direction of this. I can only say this is going to have an enormous outsized psychological effect on the rest of the market, particularly the big IPOs that people want to see in the next year, Anthropic and OpenAI. So fingers crossed, we'll see how that goes. Should be interesting no matter what. All right, see you guys tomorrow. Hope you're doing all right. Good night.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
You bring it, we match it. Get a 3% cash match on all qualifying deposits, up to $3,000. You can trade stocks, options, futures, and prediction markets all on one platform. Plus, get advanced tools built for active traders. Visualize potential profit and loss with risk analysis tools, and place trades in a single click. All on the best platform for options trading, according to Investopedia. Tasty Trade. Trade with us. We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
We are back. What a day. Last call here on Tasty Live. Final 27 minutes of the trading day. TP Tom Preston, CV Chris Vecchio. No one calls me that. TP, how are you?
I'm getting pressured in this rally again, Chris. It is the never-ending rally in the market. They just love the S&Ps. What can I say? Well, they're down a little bit right now. And just a couple of things I put together before I came on air. In the S&P 500, of the 500 stocks, 258 are up on the day. Remember yesterday we talked about there being about 330 or so being up on the day. Now it's a little bit thinner, a little bit. NASDAQ is equally strong today. NASDAQ 168 of the stocks, of the names in the NASDAQ 100 are up on the day. I thought that was interesting. And so the S&Ps maybe start to calm down a little bit. And just while I had the data up, the average volatility of the S&P 500 stock is 41.38%. The average volatility of the NASDAQ 100 stock is 56%, significantly higher than the pitiful VIX. Oh my God, what am I talking about, pitiful VIX, Chris? It's up today above, it is 1641 right now. Unbelievable.
Okay, so let's just go right there. That's actually a really important thing to disseminate or discuss about this market. NASDAQ's up 3.5%, S&P's up nearly 2%. And you have your VIX up over 50 cents on the day. Mm-hmm. Is this simply a tail wagging the dog situation? There's so much dang call buying going on out there. I think Frank said that we had 1 million S&P SPX calls go through within the first 2 hours of trading today.
Sure.
Sure. Is this just call buying driving up the price of volatility?
I would say it's buying on both the call side and the put side. Remember, it's all about the mechanics. So what is the VIX? The VIX is just it takes the out-of-the-money SPX options and distills them down into a single volatility number. Okay, formula is not overwhelming, but it's there needn't. I don't need to go into exactly how it's calculated. Just say it distills the out-of-the-money SPX options into a single volatility number, which means that when the prices of the out-of-the-money options in the SPX goes up, so does the VIX, regardless of what the actual S&P SPX does. Okay, so like we're seeing now, we're seeing another rally in the SPX, and a rally in the VIX. Why? We have SpaceX coming out tonight. We have AMD coming out tonight. This is an earnings-rich week. People are buying protection. Like you said, Chris, are they buying calls? Yeah, they're buying calls. Probably buying puts too. I didn't look that closely at the volume data. But
TP, there was
that are driving the stuff.
There was a lot of heavy volume. So when Liz and I were on this morning, 7,700 was the winner, and this market's obviously run a heck of a lot more since we got off at air at 11:30 Eastern, 10:30 Central. So that's 140,000 volume there. We go up 50 points at the 7750s here. 156,000 contracts traded on the call side. You're not seeing any, triple-digit volume figures in the puts anywhere on the board, but it's super saturated right now in the calls. It's huge. And so to that point here, Frank has some interesting volume numbers for us. He says much bigger option volumes across the board today. 16.2 million SPYs. Could be a record high with 8.6 million triple Qs. 6.2 million SPX is also very big. Over a million INTC with calls over puts almost 3-to-1. Almost 2 million Palantir, which is 5 times the norm. 1.3 million SpaceX, with 80,000 of those being the Friday 3:30 calls. We can hop on over to SpaceX just to peel that out. Friday 3:30. Friday 3:30. Did I say 3:30 or 1:30? No, 3:30 calls. Holy hell. 150,000 ZN options is also 5 times the norm. TP, what changed in recent days? A few days ago, we were looking at S&P 7,300, and most of the market was talking about how we've topped, and we missed the July seasonality, and now it's all-time highs.
No, nothing's changed. It's just companies are making money. The earnings are coming out not bad, or they're making, it's decent numbers all around in the major stocks. Crude oil's down. I'm bullish on crude oil. I think this whole thing about negotiating under this, I don't think it's going to happen.
What would make you think that?
Because there's no. I think you're teasing the question, which is the idea is, look, they've been going back and forth, whether it's President Trump and Iran, and yanking the rug out from each other's feet. It's like, okay, fine. This is temporary. I think any resumption of the shooting war over there, which who knows, could happen by the weekend, is going to send crude oil higher. That's why I sold the put spread in USO today. That's it. Simple as that. And I'm not taking crazy risk in here. And Chris, they did it in USO where the margin requirements are smaller. Mm-hmm. And we can target, Chris, I think I'm joining you on filled my outlook. So I'm getting fills as I'm talking to this.
Bing.
We're gonna do a futures. I think we're gonna do a futures segment tomorrow morning where we can actually talk about some of the contract sizes and how to manage them, because crude oil futures are a big contract.
They are a big contract. I don't trade them naked. If I'm going to go anything just directional, I'd use MCL as that vehicle. But if I'm trading CL, it has to be defined risk. TP, I'm leaning directionally neutral. I guess a little bit short delta net in crude, because I still have this long put spread here, 97.98, that's been on for weeks. Mm-hmm. And it's still not giving me anything if I wanted to flip it off. It's finally actually at a place where I could flip it for a break even. We'll see if that goes down a little bit more. Other than that, I still have this 66.67, but it's part of an iron condor as well as a short call spread at the 94.95. So there's some things that I could do here, and I may want to take this off rate. 94.95, would I sell this for 8 cents? No, I wouldn't sell this for 8 cents. So I want to actually get rid of both legs of this, because I wouldn't sell either of those for. Okay, all right. All right, tough guy. All right, so we get rid of you first, and then we'll put in a separate one for another one here for you. Okay. All right. Yeah. Okay. Too much stuff going on. TP.
So okay. Go finish your point, Chris. Go ahead.
Yeah. But I'm with you. Like, I'm leaning a little bit net short delta in crude, But if we get another $2 or $3, $4 out here, I mean, if we stiff a 70, if I see a 6 on my screen tomorrow for whatever reason, I'm immediately closing out everything short, and I'm looking for long delta opportunities, just because of what you said of this slinky action where we keep rug pulling each other, the U.S. and Iran.
So here's what else I did, and this is available. I don't think it's on the desktop platform, but in the prediction market. So I went into our prediction market page.
Okay.
And I did a few 1-hour trades in Bitcoin. And for the close, I did it in my 1 p.m. segment, hour and a half ago. I bought Brent crude being above 79 at 4 p.m. Eastern. That's your time, Chris. 3 p.m. Central. I'm betting a yes, and I paid, what did I pay for that? 72 cents, I think I did. So I'm starting to, and I've traded prediction markets before, not consistently, and things just sort of, pique my interest now and again. But I figured, yeah, okay, let's try a bullish bet on crude oil just for this afternoon. That's it.
That's it. Now, curious, why go over to prediction markets as opposed to, say, the oil futures themselves? I know BZ, if you're looking at Brent, there are no listed options here on the platform, so prediction markets may actually be the better vehicle if that's the kind of view you want to espouse.
Yeah, I mean, if you just want something short term, there are 1-day options in USO. Okay, I could trade those. There's 0-day options in CL, but Chris, how much money do I have to put up to sell a put spread? Forget selling a naked put. Sell a 25-cent put. Buy the 75 25s. Sell the 75 50s in CL right now, 0 DTEs. I have to put up, that's a $532 trade. Okay, fine. Okay, whatever, right? Not overwhelming. In the prediction markets, I can bet $100. I can bet $50. I can bet $10. Okay, it's like it's not a fixed dollar amount. I can risk as much as I want to, and in a product as volatile as crude oil, hey, I like to play in crude, but sure, I'll put $100 on a prediction market bet for Brent by 15 minutes. Okay, so that's basically what it is. It's the prediction markets allow you to speculate on the what, not on the immediate resolution of an event. Crude oil being up, Bank of Japan doing this or that or whatever, as opposed to, Chris, what we always have to do as traders is, well, if crude oil does this, what does that mean to the S&Ps? If the Bank of Japan does that, what does that mean for the yen? What does it mean for American bonds? Whatever, right? So we have to look past these events. Prediction markets let you actually speculate on the event itself.
TP, you've heard me complaining a bit over the past week about my month about the MES position that I was fortunate enough to top tick on July 6th. Yesterday, when we got back to break even, I was talking with you about, do I get in? Do I stay out? We'll see where the market closes. I decided to stick with it today.
Nice.
And that patience being a little bit rewarded here. The other question that I received several times today was, am I still holding on to the year-end DEES 31 8,000 calls? And the answer is yes, still, in part because there's still 149 days to expiration. And this ESH7 contract is trading at what, 79.19 right now. TP, these were put back on in April, right? And I explained this rationale once before today, but just to rehash in case people weren't listening. Sometimes when you get these big market moves, you get some of these really esoteric odd stats. But one of the stats that we had shared back in April was you got this 7 days up 7 in a row, which if you look back to basically over the course of my lifetime, back to 1989, that had happened 20 different times. And in the 20 years in which that occurred, 19 of those 20 years finished positive the rest of the year for an average gain of 18.8%. So I'm a knuckle dragger, TP. I took the S&P 500's little price level that day. I went to my calculator. I went multiply by 1.188, and I got to 8,000. And so this has been like my not thinking trade. If I'm going to operate and be silly, sometimes having something that's like 6 months out, 9 months out, a leap even in the indexes can be an interesting anchoring point so that you kind of ride the waves and not get too concerned about stuff. And so like I've held this in my pocket now for several months, almost 4 months now. Almost 4 months now.
I have no problem with that analysis. That's fine. I would have traded it differently. That's fine. That's okay. I would have sold the put spread, but whatever. You have, Chris, just to put some numbers on, just to quantify what the belief is, you have a 93% probability that the ES futures are going to touch 8,000 between now and 149 days, between now and the end of the year. So that touching number means at any time. So there's a very good chance you're going to get up to, what's your short strike, the 8,200s?
8,200.
There's a 74% probability that it's going to touch 8,200 between now and the end of the year. So you could reach potentially max. You're not going to get the maximum value of that vertical. Let's put it this way: if the S&Ps went up to 8,200 tomorrow, that spread is going to reach its max value. If it's 2 weeks to go in December, yeah, it's going to be much closer to its max value. But those are the metrics that you're looking at. You have a decent chance at hitting 8,200.
Yeah, so it's one of those things that's worked out, and that's why, just generally speaking, I think for traders it's good to have different buckets of time horizons that you're operating on, and this is all about diversifying your risk. It's not just strategy and product, but also if you have things at 45, 90, 100, 200, right? Obviously, I prefer to keep more of my capital available for the shorter term stuff. That's not like 200 days out, but this allows for diversification. If you get lucky on days like today, then all of a sudden, you get a big tailwind.
It's also it's what I would call diversifying the duration. So duration is just how much time a trade has to work for you or against you. You're diversifying with duration, just like you can diversify with volatility, things like that. But it's also, Chris, that's not an expensive trade to hold. Okay. A long call vertical in the S&Ps is a defined risk trade. A certain amount of capital, you've already paid for it. It's not costing you a lot to sit on that speculation.
And it seems like there's other people jumping in here too. Frankie points out that the SPOO's January 79.50, 80.50 call vertical trade today, almost 4,500 new contracts. So we're going to keep an eye on open interest, obviously, over the next few days to just make sure that this isn't all just, kind of like scalping or position rolling, if you will. But, TP, the market all of a sudden, earnings are in our back pocket again over the past 2 weeks. And they've been really, really good. And it kind of feels like a deja vu to me that we saw in April and May, where the market just was able to say, oil up $20, $30, the Fed's going to hike 25, 50 basis points, maybe extra this year. Who cares? Earnings are 1,200 basis points above expectations. How could you not be bullish when that's happening in the foreground? Even forget the background.
Yeah, it's, the market's up. Okay, fine. And I have bearish trades on that are getting crushed today. Okay, fine. Take it. It's being a trader. So just to let you know, for SpaceX, I just got filled. I bought, Chris. I bought. Mark this day. The 22-24 call spread, the 122-124 call spread.
SpaceX coming in here quite a bit the last few minutes, by the way, TP, down to 122 from, I think,
that's why I got
126. Yeah,
I've been working that stupid trade for an hour or 2 hours, and finally got filled at 88 cents. It's just a bullish trade in SpaceX. The crowd on YouTube came up with bullish on SpaceX, so why not join them? And I've mentioned this to you before, Chris. Trading out of spite. Hey, I've lost enough money, not a lot of money, on long SpaceX. I've a little losers. I'm going to go to the well again and just defy the market to make a small profit in SpaceX on the upside.
TP, SpaceX isn't one of the only names out there. There's AMD. Could I bring you back to where we were 24 hours ago? I'm just going to go over to my activity tab here. Do you see one of the saddest things over here? AMD expired from yesterday. The Super Bowl, 4:30, 4:35, 5:35, 5:40. If I would have just similar order in here right now. Oh, we would have been right near the long strike already if this was filled on last call yesterday.
Yeah, so just hang on, Chris. Right, look at those numbers. The order Chris would have put in yesterday, tried to get filled as 35 cents, a 35-cent debit. It would be worth right now, I can't see the number,
$1.83.
$1.83. So it would have made about $150 in that trade. So AMD, I am short the 47.5, 480, 575, 577.5 Iron Condor with 1 day to go. Expires tomorrow. It's just a neutral trade for an earnings stock. That's it. I sold a put in CMG.
Before we hop off AMD here, I'm just taking a peek at this real quick. This thing has had a big up move. It's already up 9% today. Even if you go a little bit beyond the expected move to say like 585, 590, we're looking at $5 wide here, 475.40 on the put spread side. So that Iron Condor, it's still 202 in credit. I mean, I'm going to put that on here. Hopefully, maybe we get filled.
Yeah, I mean, these are just neutral trades in an earnings stock, and those have actually worked out fairly well. The neutral trades have worked out better for me this last earnings cycle than the directional trades. So we'll see what happens in CMG. Gilead, GILD, do they come out this afternoon too?
Gilead and Amgen both are reporting here after hours today.
Yeah, Gilead, I've tried to sell an Iron Condor. Nothing done in Gilead. Amgen.
These are not tight markets at all. 3 days.
I was looking at Amgen earlier. The markets stink. There's no open interest. The bid and ask are wide. I wouldn't waste my time with Amgen.
Yeah, 2-star liquidity on the platform I see here.
Yeah, it stinks. What else did I do? Oklo, just like that SMR trade we did yesterday. SMR, I gotta check. SMR, I sold the 8.5 put with 3 days to go. I'm up about 40%, 39.4%. I sold it at 33. It's now worth about 20 cents. So I could take it off for a small profit. I'm going to hang on for 50%. Okay. That's SMR. Oklo, I sold another bullish trade in nuclear. I sold a 38 half, 40 half put spread with 3 days to go. I took in 51 cents for that. A little lower than I wanted it to be. I'd like to get 60 cents, but you take what the market gives you.
Hey TP, you and I had been back to the bonds quite a bit here in recent weeks. Yeah. I did not get that big move lower last week. I repositioned myself, couldn't get filled, then ultimately collapsed, kind of like AMD here. But that's such the life of a trader. Sometimes you just miss the ships in the night. But now that it's bouncing back, I'm curious. When you look at bonds up here, given what's going on with crude oil, you can almost see the direct read-through. The charts kind of look like mirror images to one another in some regard. Would you use this rally, just like you're looking for a sell-off in crude eventually to peter out and look higher, would you use this rally here in bonds and notes and bonds to maybe look to get some short deltas going?
Why not? I like the way you think, Chris. So here's the point. The bond volatility is actually higher now.
It has.
If you look at the number on the right-hand side, that the 17 days, the IVX is 10%. Usually it's around like 8 or something like that. It's up a little bit. If you're bearish on bonds, could sell the 111, 112. You don't get that much credit for it. Let's go in. Let me just see what the ZNs are. Yeah, the ZN volatility is a little bit higher relative to bonds.
Yes.
A little bit. The question is, do you stay in the September contract or do you go out to D's?
At this point, with the 17 days to go, unless you have a strong view, I would think between now and maybe the end of this week. Thank you, AMD. I should have tried to fill that quicker yesterday. I would think that unless you have a strong view on bonds between now and the next 17 days, I would probably just go over into D's. We also have non-farm payrolls coming up this Friday. I know it's really not been a focus of attention yet because all the earnings Tuesday, Wednesday. We had Palantir last night, which obviously still Palantir has been on a rager today, 29.6%.
Palantir, that was a winner. So I sold the put spread in Palantir yesterday in the show. Took it off I sold it for 60 cents, bought it back for like 3 cents. That was one of the directional winners for my earnings. So if I go into ZN, and I look at I don't want to go that far out. So the ZNs are 24 days. They deliver the D's future. The nice thing about ZN as opposed to ZB is you get quarter points between strikes.
Yes.
And these are $1,000 a point products like crude oil. These are big, expensive things to trade. So if I can sell the 109.25, 109 half, now let's just say the 109.25, sell the 109.25 calls, buy the 109.50 calls, sell it for 5 cent credit. That's a max profit of $78 versus $168 or $178 of max risk. So 250 points between these strikes, 25 to 50 is 250 points. I'm collecting about $78, which is roughly a third of the width of the strikes. I would look to do that. Coming up in 3 minutes, I'm going to wait for tomorrow, but yeah, I think I would join you in a bearish trade in ZB or ZN.
I like the way that you're thinking about this. Just 24 days seems reasonable.
Yeah.
Just with the event risk that's coming up around the corner. If you're looking at something that's shorter dated than that, let's say we get to Friday, which is in 3 days, you're not going to get a bailout there. Gamma risk is going to be super high. Same thing at 10, because then you're losing 2 of those days to the weekend, TP. Right after non-farm payroll.
Yeah.
So
Right.
17 would be the minimum, but really 24.52. Hey, we have 2.5 minutes left to go in this trading day where the markets are coming in a touch off the highs. Earlier this week, aside from some of the long delta stuff that we've had on, I put on a short iron condor position here in ES because I have enough long deltas on. As you can imagine, wasn't exactly in the bingo cards that we'd cover that ground in it's on Friday, so 2 days time. TP, let's see, where are we here? Okay, so this also had a 72.75, 72.50 component to it. Just taking a look at this here right now, it's trading for $1.30. This is 25 points wide. When this was put on just last week, it was worth more than, I think it was like an $8.30 credit.
Yeah,
okay?
take it off.
So I took off that leg of the trade. Now, because of that, because I am now still sitting in the short call spread here, now the trade has changed a little bit, and now we're obviously looking at a place where this thing is basically sitting at max loss for the position now that we're north of the short strike. Okay, so what do I want to do here? I'm not taking this off. Because I still have the MES position on, which has 45 days to go in its expiration cycle, and I intend on holding that for a while. I have the ESH7 contract on. I got long deltas in. Pick a name out of the hat here. I mean, honestly, I could just pick one out of the hat, mostly on the long delta side, wherever you look in the stock market. So for me, keeping on something that if tomorrow is a pullback day, if we have a correction, if we're in by 1% or 2 or 3 over the next few sessions, that position will move back from being a max loser. I may be able to lift it back at break even. It will also help insulate the other things I have going for me. I also don't my patience has been a virtue recently, and so there's no reason for me to take that off just quite yet, even if it might be running counter to other positions I'm holding.
So this is what I'm staring at. I did the unbalanced butterfly and SPX, bought the 77.25 puts. Sold 2 of the 77.35s, bought 1 of the 77.40s, and we are right there. They were down around 77.38. Now they're 39, 85, 20. If we can drop down a little bit, I might actually have a winning butterfly.
Wouldn't that be fun?
I don't want to jinx it, Chris. I don't want to jinx it.
Don't say anything. Well, then I suppose, TP, you don't need to talk for the rest of the show, which is convenient because the show's now over. This has been Last Call. He's been tough. You like how I did that? Or is it just
beautiful?
140 points higher.
You're gonna be like on like CNN or one of those. You're gonna move to Hollywood. Pack the kids and the wife up. Move to Hollywood. You could be in the movies.
We'd rather go to Dollywood at this point. It sounds like a nice family vacation. But, ES finishes up 141 points. Crude's down another 4.5% here. New all-time highs. S&P 500, equal-weighted S&P, equal-weighted NASDAQ. Gus is going to be here next.
They love them.
What's not to like, TP? I guess nothing. So, okay, we're done here. Last call's finished. TP is out. We're taking a quick 90-second break. Gus is in. Overtime next.
Mike, what does it mean to be assigned?
When you are assigned, you are ultimately short an option that's in the money, and the counterparty has the ability to exercise that option. So if you are assigned, it means your option, against your will, ultimately, has turned into 100 shares of long or short stock.
What does a green scratch mean?
Ooh, a green scratch refers to stubbornness getting the best of you. And when I say you, I mean me. Green scratch refers to rolling a position, defending a position, and instead of just closing it for less than loss that you're seeing, or maybe a $100 loss, $50 loss, a green scratch is when you close it for maybe a 5-cent winner, 10-cent winner, 15-cent winner. Just the ability to see that green number on your screen and get out in a profitable way as opposed to a loss.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options, profit, and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Can we get much higher? Apparently, yes. This is Overtime. I'm your host, Chris Vecchio. He's Gus Downing. We're here to take you through the next 30 minutes as we wind down the trading day. Gus, what a day it was for stocks. What spurred this on? Rumor has it was Leopold Aschenbrenner's situational awareness collapsing last week, because since that occurred, everything's went up in a straight line since then. NASDAQ, 3% higher today. No, that's wrong. I want to make sure I get that right there, Gus. 3.4% higher here, my friend. It's been an absolutely wacky day here right now in this market. 77.65 right now in ES. Another 145-point ripper after yesterday. There's 110 added to the board. It's a new all-time high in SPX, in ES, in RSP, the equal-weighted S&P 500, in QQEW, the equal-weighted NASDAQ. Surely things can't be this good out there, my friend.
Yeah, we got our very matching shades of green going right now. So perhaps it was us that spurred on this green day today. We got to go.
We're American idiots.
Everybody go ahead.
It's green day
everybody
here.
Go ahead and send us your AUM. All right, for sending this market going to the moon. But I'm doing well. We were just talking off air about how it was a great day for you. It's been a phenomenal day for me as well. Everything moving in the right direction. Finally got out of my long Microsoft, which I kind of diamond hands to the top here, but it scared me enough to go ahead and jump out. This was plenty. Only needed it over 450, so everything after that was just a nice bonus. I've shorted some Palantir off of that move, and excited to see what happens with SpaceX here in the historic first earnings report of SpaceX. Where were you when SpaceX reported earnings for the first time?
SpaceX, AMD's coming out here. We have Gilead, which is a personal favorite, long history with Gilead and helping put my family together, and literally because of trading Gilead options when they cured hepatitis C over a decade ago, which was a lot of fun to trade. We have Amgen coming out. There's bookings. All right, so we have some things to watch out for here, Gus. As those come out, we're going to read them off to the audience. AMD here after hours, 5:20 or so. We closed at 5:26. We'll just keep an eye on some of these charts as we get ready for these earnings releases. Gus, I'm trying to figure out why today, the day that we finally see everything uncork. Maybe the market's catching up to some of the earnings after all. We enter this week with, remarkable to say, close to 50% year-over-year earnings growth. Yes, a lot of it's Anthropic, held in private valuations for companies like Amazon and Alphabet. But even so, when you back that out, the rest of the market still has like a 28% earnings growth rate, which you've conceded and others have as well. That'd be awesome. We'd love that in any given quarter. So why today? What was it that the market, in your view, looked at the tape and said, YOLO. Who cares about the Iran war? Who cares about the AI supercycle and hyperscalers and the circular nature of these businesses?
Yeah, I mean,
let's go.
I think you said it best right there. I mean, this is something that I'm definitely still trying to pick apart myself. What I'm really trying to figure out a little more is why the continuation into today? Yesterday, we had bullish headlines about the war ending. It seemed a lot more.
SpaceX earnings are out.
Oh,
sorry to interrupt you, but SpaceX earnings are out. They came in at a 9-cent loss per share versus an expected 23-cent loss on the EPS side. Their revenues came in at $7.814 billion versus $6.82 billion expected. So that's a beat of 61% on EPS, 15% on the revenues there. It says here from the earnings correspondent, EPS up 74% year over year and revs up 92%, something to consider. Stock is fairly calm, 127, although it had a very big day already in its pocket behind it, up almost 10% going into the report, Gus. But yeah, SpaceX here out, a beat, so to speak, on both EPS and revs. Smaller loss on the EPS side, bigger revenue number, 126.70 here after hours after closing 125.82.
Yeah, just kind of hanging in there. I was curious what would happen in this sort of beat situation, given that they are up, close to 10% into the close today. And it looks like the market's going to decide that that's enough, at least at this juncture. But obviously, they're still talking. I think with SpaceX, forward guidance is going to matter more than anything else. Obviously, I mean, I've been saying all day, we know that SpaceX's revenue is not going to back their valuation. That's not the question that's being asked here. It's will the revenue begin to back the valuation at some point in the foreseeable future? So I'm sure that guidance is going to be very interesting. And if they say something Mars or something Tesla merger, I think we could see it move much higher.
We have a few more earnings that have all come out here at the top of the hour here. We're just going to run through them. Kratos Defense, KTOS, 21 cents versus 15 expected. They're up here a little bit, closed at 51.90, now 55.26. We likewise have Booking Holdings, BK and G. Those are here out after hours, closed at 194.23, up to about 206 cents now. They beat 254 EPS versus 243 expected. The revs there were stronger as well, 7.352 billion versus 7.19 billion. Hey Gus, commercial air traffic worldwide was the highest it's ever been last month. Same thing here domestically in the United States. That's probably good for some of these travel companies. Amgen's out, 6.29 in EPS versus $5.62 expected. Revs also beat, so their share prices closed at $390.28 up to $394 right now. A little inside and up kind of day. Gilead is a mixed bag of sorts, but the share prices aren't necessarily reflecting it. Their EPS does beat 6.75 loss per share versus 7.25 expected. Revenues beat 7.80 versus 7.4 billion expected, but the EPS is down 436% year over year and 433% quarter over quarter for some one-off charges. But share prices again closed at 135.27, currently trading 135. Where else can we go? Did I say there were a lot of earnings here after hours? Win, resorts, travel.
How about that?
From a 97.60 close to 102.30, 98 cents versus was the expectation. 124 is what happened. So up 14% year over year. Do you think we have more? We do. Are you trading Arista Networks? Anet. That's up here after hours. 102 versus 89 cents expected. That's a 15% beat. So 215 now from 190 at the close. We could go to Astera Labs coming up next, which... Are you getting the theme here, Gus?
There does
Here's
seem
a beat.
to be a trend.
83 cents versus 69 expected. That's a 20% beat. Surely we're going to come across something that's down here after hours. Zeta, we found you. Zeta, that can't be right. No. Why is there a no number there? There we go. 21 cents versus 19 cents expected on the EPS. The revs beat as well, but share prices guidance doesn't seem to be that fantastic. I think we just ran through all of the numbers that have just come out here, Gus. But the market seems to be in a good mood right now. Lucid, Divine Energy, I suppose last two we'll get to. Divine Energy is basically flat. Lucid here, they miss. 278 share loss versus 241 expected. So, okay, I'm going to be quiet now. We just threw a lot of numbers at this audience. Where are stocks after hours in light of all that? 77, 75 here on ES. So a little bit of a bounce back from the close.
Yeah, market gonna pump up a little bit here. I'm interested to see what happens into tomorrow. Did we even talk AMD just now? At any point, they're not out yet.
I haven't seen them. I haven't seen them come out yet.
Okay. Yeah, so we're waiting on kind of the other big one here. But yeah, really interested to see what this does to the market into tomorrow. And it's just so funny. The market is such a funny and fickle thing. 5 days ago, the sky was falling. The AI trade was dead. The tech bubble was going to burst. It's 2001 again. And then today, just wham. We're straight through to all-time highs. NASDAQ continues to rally, although not back at all-time highs yet. And everybody and their mom beats earnings, it seems. Gilead kind of the only notable exception there. So, I mean, that was a beat as well, actually. They just didn't have the guidance to back it, I suppose, starting to sink. But, yeah, just crazy bullish environment that we're in. I mean, and what feels like all of a sudden. I said all day yesterday, I don't think that this is going to be sustainable. I think we'll hit the 7,600 ceiling and just come straight back down. And, oh, man, am I eating my words today all the way through 7,750 we saw today on SPX. And there's no reason we don't continue to climb tomorrow, I don't think. So, yeah, definitely going to be doing all that I can to reallocate into a heavy bullish bias for the coming weeks.
The funny thing is, let's just entertain the idea that this is a bubble in the broader markets. So the NASDAQ itself peaks in March 2020. From the lows in April, the middle of April of 2020 to the highs, just 2 weeks later at the start of May, the NASDAQ rallied 24.6%. It then drops for 4 straight weeks. From the low that you have the week of May 22nd, 2000, up to, we'll just go a few weeks later, to July 17th, 2000. The NASDAQ rallies 41%. It then plummets the next 2 weeks. The following 5 weeks, it rallies 24%. You can find this throughout the calendar year 2000, 2001, where you have these big lurches higher, even though the market's still in a space of topping, still in a space of decline. I'm positioned for this thing to go higher. I need this thing to go higher based on how I'm positioned. Maybe it works both ways, Gus. But for those folks out there that are bearish still and looking, how did this tape happen? This type of violence is perhaps part of a topping process. And this two-way action isn't something that we should necessarily, think is atypical or ahistoric here, which is what brings me to the VIX here. While we wait for AMD to come out in a few minutes' time, you notice that with this 3% up move, 3.5% up move now, I think it is, in the NASDAQ, Gus, we have a VIX that was up by 60 cents today. Does that pique your interest at all?
It always does interest me when we see VIX start to expand on an up day, just because of how much up it takes to make that happen. I joke a lot that it's like we talk about VIX obviously measures volatility, but on down days it's kind of just a S&P 500 inverse. It can feel like. But whenever we get enough upside that VIX starts to expand simultaneously, that always is interesting to me. And I am looking to take advantage of the elevated volatility, the expanding premiums in some capacity. I mean, like I said, I got short Palantir earlier today, looking to take advantage of some of the call skew that we're seeing present there. And I don't know. It becomes a taller ask as VIX begins to expand a little bit, but especially as pretty much everything feels like it's pumping upward. All of the premium gets sapped out of the put side on endless up days like today. So it makes it hard to find some spots as I do gravitate towards premium selling, generally speaking.
I'm gonna read off. I found this great account on Twitter a few months back. This guy has been off of Twitter for years, it felt like, and he returned odd stats. It's a retired financial professional. I don't know who runs the account. Vulgar. My cup of tea. But they tweet out esoteric, cherry-picked information, and then they mock you if you're going to believe it. So I welcome their mocking.
NBA Centel situation?
Exactly. But, this person clearly knows what they're doing. They posted this today, and it triggers. Triple Q finishes 2% higher today after being up 5.5% over the previous 3 days, while closer than 10% to all-time highs. Quite the criteria. it will join a list of 8 other events in history. Gus, do you want to know what events those are?
Sure.
Okay. Thursday, November 5th, 2020. Next few days. And let's just what this time for. I just want to double check this. 3-day forward returns we're reading off here. Okay. So when else has the market done what it did today else in history? Only 8 other times. They all occur in 1999 or 2000, which is fantastic. 3-day forward returns, November 5th, 2020. That 3-day forward return is minus 3.7%. February 8th, 2020, minus 2.68%. February 3rd, 2020, higher by 6.3%. But then the rest of it is just blood red. January 19th, 2020, August 25th, 99, June 21st, 99, April 26th, 99, and March 29th, 99, minus 4.5, minus 4.0, minus 3.44, minus 5.7, minus 0.11. So like the price action today, again, small sample size. It's not statistically significant by any stretch of the imagination. Odd Lots pulls out these esoteric stats. I find them interesting to talk about because this type of price action, when it has occurred in history before, it's not exactly something that you find continuation over the course of the next few sessions.
Well,
yeah. AMD is out.
Oh, goodness.
I think AMD's out given how this candle's moving. Let's see here. We have $1.66 in EPS versus $1.61 expected here.
Waterfall. It just keeps going. Oh, there's some butter.
That is just going. Good thing I wasn't on that double bull. Let's just see where is this? R&D expenses were up. CapEx.
Oh, yeah.
CapEx.
You don't get to spend money anymore. No spending money on AI, guys. You guys get the memo? It's not cool anymore.
Okay, guys. $298.6 million estimated on their CapEx. What do you think the number was that's pissing off this market?
Oh, man. I don't know. I feel like it could feasibly be double. I'll go a little less than double. Let's say 550.
$808 million.
Oh my God.
Almost triple.
That is triple for all intents and purposes. Goodness
Almost
gracious.
a triple. Almost a triple, and in part because they're expanding their operations. So R&D expenses up, operating margins are just basically in line. Revenues beat, adjusted EPS beats. Q3 revenue guided higher above the expected range, which was $12.5 billion. It comes in at 12.7 to 13.3. But CapEx, it is the death knell of these companies in this market unless they can promise to find a way to monetize it. So one thing I'm going to be looking for here, whether or not this market reaction sticks after hours, and it's clearly done enough to take the NASDAQ down a few here, 29,800 now, so 3.4% turns into a 3.15% gain. I want to see what they say about their future expansion plans, right? Because if we see like we had with Micron and some of these other companies like a SK Hynix, they've started to convert a lot of their business into these LTAs, these long-term agreements, where they're effectively locking in their pricing over the next several years. And it's kind of like a take it or leave it scenario where you're committed to buying X number of chips at whatever price it's trading at that time. So if like prices go up another 50%, you're a price taker, you're not a price maker. We're the price makers now. And so if there's, like we saw with Micron and some of these other companies, if we get any indication that some of their revenue is moving from the short-term cyclical towards more of the LTA, I wouldn't be surprised if we look at a completely different open tomorrow morning. So we're back to 478. We're already, $13 off the lows here, but it's a brutal chart, no doubt.
Yeah, that's something that I've been thinking about recently. A shower thought that's been crossing my mind, right, is that, these companies, I understand the fears surrounding this high CapEx. A lot of the time we're talking about, tripling expected CapEx for something that brings returns on a highly indeterminate timeline. But is there a debate that the returns come eventually, and I mean in the next 20 years eventually? At least to me, I don't know that I think that they do. I think that, to make a dot-com bubble comparison here, take a fairly extreme example of a company that survived in Cisco, right? Cisco got so inflated, they fall 90% when the dot-com bubble pops. But they survive, and now, actually just recently, last year, have eclipsed those dot-com bubble highs. The growth was there. It was just everybody was too quick to spend all of that money on the internet too early, and then a lot of companies got penalized for that. And I do wonder, if we look back 10 years from now and say, man, if you just bought every dip, if you just bought that dip in AMD, if you just bought that dip in Meta, it would have panned out so well for you, because these things do, generate returns eventually. And I start to argue to myself, I say, well, is the point of free cash flow not so that you have cash to deploy at investments that you feel will be profitable for you in the future? So I understand the concerns. I understand why this makes investors want to run away. The next 5 years prospects are certainly a little cloudy at the moment, but if there are going to be returns eventually, I think as an investor, not as a trader, that these dips probably are worth taking some shots at.
You mentioned Cisco here. This is something that we had been operating in recently. Just last Friday, we got out of position, the 115, 110 put spread, and I was trying to poke around and find an opportunity to get here. This thing broke out today, and it's still going higher here after hours, one thing to note, but this is a very classic bottom left, top right, a gap, pennant into a bullish falling wedge, and now you're getting this move to the up. So I'm looking for a move up towards 130 or so. I just hope I didn't miss the boat right now. It does feel like maybe some things were on the boat miss side, but Gus, after this big move today, this was a very lucky day, and I feel like I've been saying that more often than not recently, because I had some stuff that was running down on the other side of the decay curve in a bunch of the semiconductor stuff, because I was out here buying the dip, particularly last week, like with this whole Leo stuff and that gigantic record volume bar that we had in semiconductors. We had that conversation with Helene Meisler on the network last Tuesday about the record volume and how that typically means capitulation. So it gave me a little bit of a pause to breathe in the way I was trading here. But just going down the line right now, for example, you put me onto semiconductors at the start of this week. We did a Super Bowl, or I call it the double bowl. Super Bowl seems to be more popular. I took off the short put spread side today because it was looking at a $2 wide strike. It was trading for I think 15 or 20 cents. And so there really wasn't much more to take out. I'm leaving on the long call spread side in the event that this thing runs up, but probably not the next few days, so we'll see what's going on there. What else do we have going on here today? Triple Qs. I was able to get out of a bunch of the short put spreads that were sitting at 17 days to expiration as well with this move up for minor gains, but it's better than being in something that was like 45 in and 21 out, and at 21 we were at max loss. When you're at max loss, Gus, one of the things that you learn is, listen, unless you need the liquidity to deploy elsewhere, you need it for your margin to maintain positions, or you want to just get into a new position, sometimes it's just better to let the market try to rebound. Because if it doesn't, you still have a max loser when you get down to 0 DTE. You might want to roll it so you don't get assigned, or get out of it so you don't get assigned. But if you give it a little bit more breathing room, sometimes it comes back to you. So today, for me, was a lot of things came back. I used it to clear some risk off and adjust my durations, because I don't want any sort of that gamma risk now, where if we have a 1999, 2000 type of market where the NASDAQ gets this big day up and then the next 3-day returns tend to be a slog off, I would like to be able to have more time in my pocket than worry about needing an immediate rebound in an ever-shrinking window with just 2 weeks to go before expiry.
Oh, yeah. Well, yeah, and that sell-off, I mean, it's just basic human psychology, right? There's just a lot of Chris's out there who get saved by this type of move and decide to take profits and take the risk off and, say thank you. It's so, yeah, I do expect to get at least some weakness into the rest of the week. And yeah, I think that's a wise call. Also, just to float this, SpaceX has moved down 5% in this market now. It was slightly up when we were looking at it earlier, but is continuing.
Thanks for flagging that. Yeah, SpaceX is coming down here. It did hit a high of 131 and change. It's now back down to 118.50 or so. Just looking at the 3 DTE, I believe when we were looking at this earlier, it was about a 105 up to about a 146, 147 range through the end of the week. We're in very similar territory right now, so trading at 118. Believe it or not, if you played for the inside move in SpaceX, you're walking away pretty okay so far. I'm just peeping out some of these names here after hours, because we do have a touch of weakness in some of the semi-adjacent names here after the AMD earnings. SanDisk likewise coming up soon. We are down here after hours. Micron took a little bit of a bump to the downside here after hours, somewhat of a rebound. Hey, we've mentioned a lot about Elon and these plans for a merger. I can't help but notice that Tesla is off just a touch, closed at 327 and change, now down to 325 and change, basically $2 lower here after hours. Mr. Downing, what's the play right now between these two? Are you looking to the SpaceX earnings call for merger talk?
Well, no, I wouldn't say I'm looking to it for merger talk. If the merger talk came, that would interest me, but I think that it would just be too early. And I talked earlier today about how Elon, he's got a little bit of an ego. He's got a little bit of pride, as you do if you're a trillionaire, I suppose. Perhaps you have to have a little bit to get to the point of being a trillionaire. But I think that he doesn't.
That sounds made up.
I think that he doesn't want to have to use a crutch like that. I think that from like a pride perspective, he would rather see SpaceX save itself before he starts talking merger to pump it even higher. But I think that perhaps he doesn't want that cop-out. And I will say, before anybody can comment, this directly contradicts what I said earlier today. I was like, I think maybe because of the pride, he'll mention a Tesla merger to save the stock. But as I've thought about this a little bit more, it's like, is Elon really one to throw a Hail Mary to save his stock? If anything, he would just tweet and say the SpaceX price is too low and pay the fine. Lord knows he can afford it. So, it's... I think maybe there's some elements of that there, but I do think a Tesla merger in the future is likely. I wouldn't say inevitable or foregone conclusion or any heavy language like that, but I do think it's more likely than not that sometime in the next 10 years this happens, particularly as it pertains to what SpaceX is trying to do on Mars. One of the tranches that Musk's pay package with SpaceX is tied to is A, establishing a permanent human colony on Mars with at least 1 million permanent residents. Or a little far from that, and B, establishing a data center on Mars capable of 100 terawatts of compute capacity when we don't have a data center on Earth that can do 1 terawatt of compute capacity at this time. And for both of those things, I believe that the Tesla robots are the plan to go up there first and build the infrastructure. And so if the companies are going to be working that intimately together anyway, I'm not surprised if they merge or if they at least say offload the Tesla robots to SpaceX or something like that. Perhaps there's some changing hands of products there.
SpaceX here back to 120. Believe it or not, it's just where we were trading right around lunchtime today. So some of the move already baked in from the start. AMD likewise bouncing back to 493 and change here. On last call, we put out a short iron condor for 3 days to go to expiration. 475, 480, 585, 590. Okay, a little bit of stability here, Gus. That might be a nice little flip, and certainly tomorrow morning, depending upon where we are. I mean, if we're sitting... Market closes at 526. If we open up somewhere 515 to 530, 510 to 540, I mean, I'm going to take this thing off right away. There's no reason to hold on to it, just given the fact that it is a bit of an earnings trade here. Today was an interesting day. I don't recall many days like this recently, although we haven't had many strung together up days in a row recently. So when I take a step back and look at SPX 4 days in a row, it does kind of stand out from where we were just last Wednesday at the close when it looked like the sky was falling. Long and yields are blowing out. But, Gus, when we were talking last week, I brought up the idea of reflation. Yes. Right? Yes. Reflation. Yield curve steepens. What did the Fed do in September 24? They cut more than expected. Relatively more easing than anticipated by the market. Stocks go up. Yields go up. Yield curve steepens. Reflation in the economy. More growth, more inflation because policy's looser for longer, credit's cheaper, more accessible for longer. We get the Fed meeting last Wednesday. We get Leopold getting knocked out of the market and all the leverage gone. By the way, best story of the day is Citadel's morning note today where they say that the bull run can continue now, that all the leverage has been knocked out, which they, of course, helped facilitate last week by buying Leo's public book and getting him out of the game.
Yeah, that was on his wedding day too, I think, right? That's part of that story. It was Leopold's
just remarkable.
Yeah,
just remarkable.
Fever dream, literal nightmare for him. Sorry, man. Anyway, go on.
He's going to stick around, and obviously he's going to find more opportunity when you're still finish up 80% year to date. A lot of that is Anthropic, of course, but you're still going to find backers.
It's the carousel. Doc Rivers still has a job because he won a championship 15 years ago. I don't know why. It's how these things go. Close to 20 now.
Oh my God. If I went from being Leopold's stature last month to people comparing me to Doc Rivers this month, I don't have anything else to say. I think overtime's out of time. We're done here today. 4 Eastern, 3 Central, every Monday through Thursday, right after last call. So for Gus Downing, I've been Chris Vecchio. We have more great Tasty Live content available for you on our YouTube page. Head over to youtube.com/TastyLiveShow. We do have App 11 coming up tomorrow after hours. We have a new signal versus noise that's out for App today. Someone's in the market because App tends to have very big moves and they've been shrinking their float. Be sure to check that out if you're trading that at all. Otherwise, check out all the other content that we have there. Tasty Live Show on YouTube. Gus, I will see you tomorrow. For everyone else, live programming resumes 8:30 Eastern, 7:30 Central Time. We will see you there.
What's up, Tasty Nation? Welcome to the show. It is Tuesday, August 4th. My name is Mike Butler. I'm here with Jermal Chandler. Jermal, we are approaching football season so quickly.
Heck yeah.
I was watching the new quarterback